Hey, hi guys, this is Arpita Tulsyan here. So I am here for you all with the super quick revision for the May 22 examinations. In this particular video, we are going to cover up all the topics of economic laws, paper 4, economic laws paper 4, all the 6 topics which are there for your exams. We have covered everything there. Other things which you have to do on your own, I have put all the details there in the description. So each and every topic we are going to revise as always. And yes, I have taken this particular revision from the 8th edition book, which is applicable for the May 22 examinations. If you have that book, then you can just open up the book. You have already studied it once. You just have to do a quick revision of the topic, so you can directly refer the video. If at all you are not having my book, then anyway the content is going to remain the same, and you can just refer the video along with your reference books. Yes, so without wasting any time, let's start with this. And do let me know in the comment section if you like the video. Yes, let's start. Okay, so let's start with the super quick revision of this chapter, that is Prevention of Money Laundering Act 2002. So first of all, as the name suggests, it is prevention of money laundering. In our language, what do you mean by the term called as money laundering? Money laundering is nothing but conversion of black money into white money. This is what we call in our language, right? So the purpose of the act is going to prevent, is to stop or to reduce such type of activities which leads to money laundering. If we have obtained any property, any assets out of this wrongful activities of money laundering, then it can even lead to confiscation of such properties, and then to stop channelizing of money into illegal activities. Means the government is trying to prevent that such type of activities do not happen, such type of illegal activities do not happen. For that particular purpose, they have framed this particular law called as Prevention of Money Laundering Act 2002. Okay. Now, money laundering, as you already know, as you've already studied, money laundering is the single process which is divided into 3 stages. First one is placement, second one is layering, and third one is integration. Placement means where the illegally obtained money comes into the system. Right, the criminal money or the crime money comes into the system, means you have already done the crime and now the money has been put. Okay. Now we are going to show, okay, in the process of money laundering, we try to portray as if this money has been earned from legal activities. Okay, maybe say for example, I have done someone's kidnapping and I have got some illegal money. Okay, so now I have earned the money. Now I am trying to show that money as if I have earned it from the legal activities. So I will divide this particular amount that I have received into small transaction, so that it does not come under the eyes of the government, right? So that is called as layering, right? First the money, I earned the money, that was called as placement. Then I divided the money into different transactions, that was your layering. And the last one is the integration. Once I have done with dividing this entire amount into small transactions, after that this black money gets merged with my normal legal sources, and now it becomes very difficult to find out that which money was earned from legal sources and which money was earned from illegal sources. So this was a single process with 3 stages. First one was placement, second one was layering, and third one was integration. Right? Examples of money laundering can be what? Examples of money laundering can be, cash smuggling, it can be dealing into drugs, it can be kidnapping, it can be murders, it can be any financial scams, stock market scams, etc. Right? Then we have got a few definitions coming up here where I have taken the important definitions. So the first thing that we have to understand is the definition of the term called as money laundering. Acha, one more thing, definitions are covered in section number 2. Okay. The first definition given here, as you can see here, is of money laundering, which is given in this particular section. But then when we read that particular section, we come to know that the meaning has been assigned in section number 3. Okay, definition is there in money laundering only. Then we have to go and check section number 3 for the full definition. Section number 3 talks about the offense of money laundering. That is, when can we say that we have done, or a particular person has done the offense of money laundering. So basically, if there is any particular person, who is directly or indirectly involved, or who is directly or indirectly assisting any person, or any person who is one of the part or one of the party to that particular offense, and or any person is trying to do, he's trying to get involved, he's trying to get indulged in any such activity, kidnapping, murder, etc., which is connected with proceeds of crime. Means if I'm going to do that activity, I'm going to earn some proceeds out of it, and that is called as proceeds of crime. And then once I've earned it, after that I'm trying to conceal it. Conceal it means I'm trying to hide it, or I've held that particular amount with me, or I'm trying to acquire that property by doing the wrongful activity, or I'm using that wrongful proceeds and I'm trying to show, okay, I'm trying to project as if I have earned this amount from legal sources. Okay, I'm trying to show as if I have earned this amount from legal sources. So see the wordings that they have used for it, and projecting it as untainted property. Untainted means a very clean property. Okay, so if I have done any such activity, I am directly involved, I am indirectly involved, I am trying to help, I am a party to that particular offense which is connected with proceeds of crime, and I am trying to project as if it is an untainted property, so that particular person will be guilty for the offense of money laundering. Okay, if that particular person is guilty of the offense of money laundering, he will be guilty. Okay, he will be guilty till the time such person is directly or indirectly enjoying that proceeds of crime. Okay, example, I have, say for example, Mr. X is there, he has done some kidnapping, he has got some proceeds of crime. Okay, now he has got cash. Out of that cash, he purchased some jewelry, or he purchased some property or something like that. So till the time he is holding that property, or till the time he is holding that jewelry, till that particular time he will be guilty of the offense of money laundering. So it's not that till the time he was possessing that cash he will be liable. Till the time he is enjoying that proceeds of crime, till that particular time that person will be liable. Okay, so it is a continuous process till the time you enjoy the proceeds of crime. I hope I am very, very clear with this. Yes. Acha ma'am, but what do you mean by the term proceeds of crime? So see, as the name suggests, proceeds of crime is some amount which I have earned from criminal activity. Right. Ma'am, now what do you mean by the term called as criminal activity? So any activity which is mentioned in the scheduled offense. We will study what is scheduled offense. So any activity or any offense which is mentioned in the scheduled offense will be called as proceeds of crime, and that proceeds of crime can be either in India or that proceeds of crime can be outside India, doesn't matter. If you have earned it, means you have earned proceeds of crime, and if you have earned proceeds of crime, we can indirectly say that you have done the offense of money laundering. Very clear with this? So when you saw the definition of the term called as offense of money laundering, there we earned proceeds of crime. Now we came and saw the definition of the term called as proceeds of crime, where we came to know that any offense which is written in the scheduled offense will be considered as proceeds of crime. Right? Okay, then after that, let's try to understand the term called as scheduled offense. Scheduled offense, just like to Companies Act, etc., we have got schedules, right? Similarly, even PMLA has got schedule. So there are some offences which are specified in Part A of the schedule, some offences specified under Part B of the schedule, and some offences specified under Part C of the schedule. Whichever offences are written here in the scheduled offence, if we have done those offences, like the examples which I have been giving you, dealing in drugs or kidnapping, murders, etc., okay, counterfeit currency notes, that is duplicate currency notes, etc. If we have involved ourselves into such type of offences, then means we have done scheduled offence. If we have earned any amount out of doing scheduled offence, then that is called as proceeds of crime. And if I have earned proceeds of crime, then means I am guilty of the offence of money laundering. Right? So the name of the offences have been written in Part A, Part B, Part C. Okay, but one important point here is, for Part B offences, I will be liable under the Money Laundering Act only if the amount involved in such offence is more than or equal to rupees 1 crore. Okay, only if it is more than or equal to rupees 1 crore, then only, for Part B only, then only it will be considered as if I have done a scheduled offence. For Part A, Part C, there is no limit given. If I have done some offence of Part B, okay, and if the amount involved in that particular offence is more than or equal to rupees 1 crore, then I will be considered as if I have done a scheduled offence. Okay, so just remember this particular limit. Now, another thing is, if I have done some particular offence, then I would have earned some amount by doing that offence. That was called as your proceeds of crime, the amount that I have earned. So proceeds of crime can be in form of cash, it can be in form of jewelry, it can be in form of property, it can be any type of a property, right? So now let's understand the meaning of the term called as property. So property can be anything which is material, big amount or small amount, which can be tangible, which can be intangible, which can be movable, which can be immovable, or any such kind of thing, and wherever located, whether in India or outside India. Okay, so say for example, if I have done a scheduled offense and if I have earned a property out of it, okay, then I will be guilty of the offense of money laundering. And the property which I have earned out of doing this wrongful activities, this is ultimately called as my proceeds of crime. And if I have earned some proceeds of crime, then means I am guilty of the offense of money laundering. I hope I am very, very clear till here. Yes. Okay, now listen, a few more definitions are there. Since this is a super quick revision, I am not taking up each and every definition, but yes, everything is there in your book. You can just have a quick reading of the other definitions which we are not covering. Now listen, if any particular person is found guilty of the offense of money laundering, then can I say that particular person will be liable for some punishment? Right? If some person has done some offense of money laundering, then definitely that person will be liable. So this section is very, very important. As you can see here, can you see how many times the questions have been asked on this particular section? So for the punishment for the offense of money laundering, now they say that if any person has done some offense of money laundering, this is that person is going to get some rigorous punishment, or that person is going to get some strict punishment. Okay. He is going to be liable for imprisonment of minimum 3 years, maximum 7 years. And it is not or, it is and that person will be liable for fine of any amount. Okay, any amount means that will be decided by the authority. Law has not given a restriction that, okay, only this amount he will be liable. No. So it is imprisonment 3 years to 7 years and fine of any amount. Right? But specifically, if some person does the offense, this is again very, very important. If some person does the offense of money laundering under part A of the schedule, remember we had 3 parts, part A, part B, part C. So if he has done some offense relating to drugs, that is under the Narcotics, Drugs and Psychotropic Substances Act 1985, if he has done some offense relating to drugs, which is specified under para 2 of part A of the schedule offense, then in that case, he will get some more imprisonment, because this is again a grave offense. Okay, so imprisonment 3 years, which can go up to 10 years. Normally it was 3 years to 7 years. For drugs thing, it is going to be 3 years to 10 years, right? And fine of any amount. I hope I am very, very clear with this. Yes. So this is going to be the punishment. Okay. This is going to be the punishment for the offense of money laundering, which is given under section number 4. This is one such section where you have to remember the section number also. Yes. Please mark the section as very, very important. Yes. Okay. Then after that, going to the next section, that is section number 11A. Now, I'll just give you an overview of, the background, why we are studying this section number 11A. See, section number 4 was very, very simple. If we have done the offense of money laundering, then in that case, we will be liable for punishment under section number 4. Plus, we will even be liable for confiscation, etc., which is going to come up in the other section. Now, they say that whenever we are trying to convert our, illegal money into legal money, can I say somewhere or the other, even the banks and financial institutions are involved. Knowingly or unknowingly, the transaction, the black money gets converted into white only through banks. Suppose if I have got a big amount, I deposit small amount in my banks. So ultimately it is happening through banks only. Right? So now they have even put an obligation on the banks, financial institutions who are cumulatively called as reporting entity. Okay, to banks, financial institutions, intermediaries, etc. In this particular chapter, we are going to call them as reporting entity. Okay, so the PMLA has put the obligations even on the reporting entity, that even you have to be very careful. Okay, you have to exercise due diligence when you are doing transactions with your clients, or whenever you are doing transaction on behalf of your clients. Very clear with this? Yes. So now, what things are they supposed to do? 4 things are very, very important. You must have heard something called as KYC. which banks and every other financial institution does today whenever we enter into any type of transaction. So they have to verify the identity. Okay, reporting entities, banks, financial institutions have to verify the identity of their clients whenever they are doing any transaction on their behalf, and the verification can be done by any of the four modes. Okay, it can be done by any of the four modes. It can be authentication under Aadhaar Act. Example can be OTP based, or it can be biometric scan and all those things. That is one thing. Or offline verification under Aadhaar can be done, where we give the Xerox copy of the photocopy of the Aadhaar self-attested copies, etc. Or by use of passports or by any other officially valid document as told by the central government. So by any of these four modes, okay, it can be online authentication under Aadhaar, that is OTP based, or retina scan, or biometric thumb impression, etc. Or it can happen by offline verification under Aadhaar Act, or by use of passports if you do not have Aadhaar. Okay, just like super senior citizens, it is not mandatory for them to have Aadhaar. So by use of passports it can happen. For NRIs, suppose if NRIs do not have Aadhaar, then by use of passports their verification can be done. Or by any other officially valid document, just like, you know, some banks even accept PAN as your KYC document. So those can be given, and by using of any of those modes, the banks will have to do the verification of identity of its clients. Okay, and see, for banks, they say that banks should try. I'm not talking about every reporting entity, but especially for banks, they say that please try to do the online authentication under Aadhaar Act. If that is not possible, other methods can be definitely used. But banks, specifically on banks, they are saying that please try to use online authentication under Aadhaar Act for the verification. Okay, and for other financial institutions, other intermediaries, you can use any of the methods for online or for your identity verification. Yes, but you cannot force your client that you have to give passport only, or you have to do under offline verification only. No, all the four options, okay, all the four options should be given to the clients, that is to the customers of the bank, for identity verification purpose. And whenever these financial institutions, etc., are doing any online authentication, they have to make sure that all the privacy standards, etc., are followed. Very clear with this? Yes. Now, these entities, these financial institutions, or these reporting entities have been authorized by the central government to do the Aadhaar authentication service under PMLA. Okay, that is your NPCI is there, CAMS is there, SBI cards is there, PhonePe is there. These people are authorized by the central government to undertake Aadhaar authentication service. Means these people, whenever they are checking your KYC, etc., they can even ask for your thumb impression. They can even check your Aadhaar, or they can even verify your identity by, biometric or all those means. So the last section, section number 11A, was basically talking about what? It was whenever we go to reporting entities, they have to mandatorily check our identity by using any of those four means, right? Acha, so identification, verification of ID is one thing. Okay, then it even puts some more obligations on the reporting entity. Okay, it puts some more obligations on the reporting entity that you have to follow these things, which is given in section number 12, which is again very, very important. There are mainly 3 duties of the reporting entity. Okay, what are the 3 duties of the reporting entity? First of all, whatever transaction is happening between a client and a reporting entity, they have to maintain a record of all the transactions for a period of 5 years from the date of transaction. Say for example, I go and deposit cash, I go and withdraw cash. I'm just giving a very simple example. So those transactions have to be maintained. Details of those transactions have to be maintained with the report by the reporting entity for a period of 5 years from the date of transaction. They have to maintain it. Okay, that is the first thing. Then the next thing is they have to furnish this information to the government official of PMLA whenever he asks for it. Hey, you must have heard about enforcement directorate, right? So if ED goes to the reporting entity and asks for information, then the reporting entity will have to furnish that information to the to the enforcement directorate. That person is called as the director. This is not the company's director. This is director means the government official. So whenever the director asks this information from the reporting entity will have to furnish it. And the last one, maintain record of documents. Above it was record of all the transactions. Here it is record of all the documents. Whatever, KYC documents we submitted to the banks, or whatever extra supporting documents, whenever we enter into any transaction, whatever we submitted to the reporting entities, that is banks, financial institution, they have to maintain it for a period of 5 years after the business relationship has got over. Means when the transaction is going on, they have to maintain it. Even once when we have, when the business relationship has ended, or when the account has been closed, whichever is later, after that date also, they have to maintain the record of documents for a period of 5 years. Okay, in the first point, it was 5 years from the date of transaction. And here, whenever we talk about record of documents, it is 5 years after the business relationship has ended. Very clear with this? So these are the 3 extra obligations and 3 very, very important obligations of a reporting entity: maintaining record of all the transactions for a period of 5 years from the date of transaction, furnishing it to the director whenever he asks for it, and maintaining the record of all the documents for a period of 5 years after the business relationship has ended or the account has been closed, whichever is later. Right? Or whenever the reporting entity is maintaining it, it has to be kept confidential. Right? It cannot be made public. Only when the director asks for it, then only the reporting entity has to furnish it. Very clear with this? And then a very simple section, director can call for this information from the reporting entity. Whenever he calls for that information, we have to furnish, the reporting entity will have to furnish that information to the director, and both of them have to keep the information confidential. I hope I am very, very clear till here, everyone. Yes. Okay. Then after that, in some cases, reporting entities are liable for due diligence. Okay. Reporting entities are liable for due diligence. Means what? Whenever the reporting entity enters into some specific transaction on behalf of its clients. This section is not applicable for each and every transaction. This section is not applicable for each and every transaction. It is applicable only for some specified high value transaction, high risky transactions, and all those things. So whenever, say for example, a bank is doing some, import relating transaction on our behalf, or some foreign currency transactions on our behalf, or any transaction where there is the chance of money laundering, there the reporting entity will have to exercise extra care. It will have to exercise enhanced due diligence. So ma'am, how will the reporting entity exercise enhanced due diligence? So first of all, KYC check, verify the identity of the clients. Okay. Next thing is, take additional steps to check the financial position of the client. Whether my client's financial position is there to do such a big transaction, check that. Okay, then check the type or the purpose why the client has to do this particular transaction. Record the purpose behind doing this particular specified transaction. Okay. Acha, these 3 things will be checked by whom? These 3 things will be checked by the reporting entity, that is the bank's financial institution, before the transaction is entered into. Okay, now there are 2 possibilities. If the reporting entity finds that everything is proper, then it will allow the client to do the transaction. Okay, if suppose the reporting entity has some doubt, okay, or it has some suspicion that no, something is wrong, something is fishy, etc., then it will not allow the client to enter into such type of transaction. Okay, so any transaction, where, there is a huge cash withdrawal or deposit exceeding such some limit, or forex transaction, or high value import transactions, or where there is a high risk of money laundering or terrorist financing. Whenever the reporting entity has some doubt that my client is doing some suspicious transaction, then in that case, it will have to check these 3 things. First, check the KYC, then check the financial position of the client, and then check the purpose of doing this transaction. If everything seems okay, then allow the transaction to be done. If something is fishy, then please do not allow the transactions to be done. I hope I am very, very clear till here. Yes. So these were your basic things. These were your basic things about the reporting entity. right? Now let's go to the next part. Okay, so now going on to the next section, that is section number 13, which talks about your powers of director. Just like we had just discussed about your director. Director was that official under the PMLA for the information from the reporting entity. So this particular director, we can say that this person is a government official. He has the powers to conduct inquiries. He can tell any particular reporting entity to get the books of accounts audited, special audit kind of a thing, and the expenses of this particular even after doing inquiries, even after getting the audit done, if suppose the reporting entity or its employees or its directors, if they fail to comply with the directions, then in that case, director, this government official director also has got the powers to, it can issue warnings, it can direct them to comply with certain instructions, it can tell them to do periodic reporting. If nothing works, then it can even impose penalty, which can range between rupees 10,000 to rupees 1 lakh for each failure. Okay, these are whose powers? These are the powers of that director. Director means we are talking about that government official who is there under PML. Very clear with this? Yes. Okay, now listen, when we started with this PMLA thing, we had seen that whenever an offense of money laundering is done, then punishment was applicable, right? Punishment was applicable under section number 4. We had seen imprisonment and fine. And also I told you that if suppose we have any property with us, then that property can be liable for confiscation, right? Now there are 3 things which are going to come under PMLA in regards to property. First one is there is something called as provisional attachment. Next one is something called as attachment, and last one is something called as confiscation. Okay, as you have already studied this before, right? Now listen. When we talk about provisional attachment is such a thing where the director is not really very sure whether the property is involved in money laundering or not, but just because we should not tamper with the property, they will do something called as provisional attachment, means a temporary attachment. Okay, this power is there with the director, not below the rank of deputy director. In that there is ranges, na? So they say that not below the rank of deputy director. So anyone starting from the range of deputy director, these people have the rights that suppose if they have any reasons in writing with them that yes, the property which the person is possessing, that is proceeds of crime, and that person can conceal that property, that person can transfer, he can tamper with that property, then such property can be provisionally attached. Okay, that director not below the rank of deputy director, he has the powers and he has got the rights to do something called as provisional attachment. Once the provisional attachment is done, that is going to be valid for a period of 180 days, plus it can be extended, by some number of days if suppose there is a stay put by the High Court. Okay, normally they say that provisional attachment is going to be valid for a period of 180 days. Okay, suppose if during these 180 days there was some stay order put by the High Court, then whatever was your number of days stay, that means number of days extra you are going to get, plus ad hoc 30 days you are going to get. Ad hoc means flat 30 days. Suppose if stay was imposed, then in that case you will get extra 30 days. I hope I am very, very clear with this. Yes. So provisional attachment 180 days, plus if suppose stay was imposed, then the stay days plus ad hoc 30 days will be given to you. Achha, during this provisional attachment, the only restriction on you is going to be you cannot sell off this property. Okay, you can continue to own it, you can hold it, you can use it, but the only restriction that is going to come on us is you cannot sell the property, because now the property is under provisional attachment with the PMLA authority. So because they have a doubt on you that you did some offense of money laundering, so you cannot sell it off basically. Okay. Once this provisional attachment is done by a director not below the rank of deputy director, after that this is going to inform about this provisional attachment to an authority called as adjudicating authority. Okay, it will inform to an authority called as adjudicating authority that, sir, we have done provisional attachment in so and so person's case. Now you take the case ahead. Okay, so provisional attachment was basically done by the deputy director. Attachment, further things will be done by an authority called as adjudicating authority. Here on this page, here in this particular section number 6, they have given you the composition, like who is going to sit in this adjudicating authority. That you can just read it once. Once the director goes and files the complaint with the adjudicating authority about provisional attachment, then after that adjudicating authority will issue a show cause notice on that convicted person or to be convicted person, that show us the cause why we should not attach your property. This is how show cause notice is issued, right? And why we should not attach your property and why we should not confiscate your property. Give us the reasons for that. And the show cause notice is served for a period of 30 days, right? So now, did you observe how the case went from the director to the adjudicating authority and from provisional attachment to attachment, right? So the notice is served on the person whose property was provisionally attached. If suppose we have co-owners in that case, then on multiple people, on all the co-owners, basically the notice is going to be served, right? Now, once the notice is served, the other person is supposed to reply. Depending upon what he replies, the further action will be taken. There can be two possibilities. Either the property will be liable for attachment, means provisional attachment gets converted into attachment. Okay, or the property can be released if that person is not found to be guilty, right? So depending upon the reply that is received from that person, depending upon that particular reply, the adjudicating authority is going to take the further form, right? Suppose if the property is released, then the game is over, the chapter is over, right? But if the property is attached, then in that case, the attachment order is going to be passed by whom? Attachment order is going to be passed by the adjudicating authority, and after that, the final confiscation order will be passed by the special court within a time period of 365 days. Okay, so once the attachment order is passed, after that, within a time period of 365 days, the special court has to pass the confiscation order, and this within a time period of 365 days plus, suppose if any stay order is passed by the High Court, then that much extra time we are going to get. There also we had got, in 180 days also we had got extra time period of stay. Here also we are going to get extra time period of stay, but there we had additionally got 30 days. Here we are not going to get any additional ad hoc 30 days. So here it is going to be 365 days plus any stay order which was passed by the court. Very clear with this? And once the confiscation order is passed by the special court, after that the property gets confiscated to the central government. Means it is going to vest with the central government, free from all the encumbrances. Our liabilities won't go to the central government. Suppose if my property was mortgaged with any bank against any loan, so the bank loan I only have to pay. Okay, the government is not going to take up my loan, the government is just going to take up my asset. And then the property will be monitored and it will be administered by a person called as administrator. Okay, it will be administered by a person called as administrator. He is going to see what is to be done with that particular property, right? And this adjudicating authority who came into picture for doing this attachment, this person has got all the powers as vested in a civil court. Since you have already studied law once, you must be knowing this is a common point which is going to come in many chapters. So whatever powers are there with the civil court, similar powers or same powers are going to be there with the adjudicating authority also. So that's why whatever proceedings are going on, say for example, whatever attachment proceedings are also going on, those will be deemed to be your judicial proceedings, as if it is a court proceeding which is going, right? So if there is any person who is involved in the offense of money laundering, then in such case, that particular person will be liable for punishment under section 4. If some property was involved, then first it will be liable for provisional attachment, then it can lead to attachment, and then it can lead to confiscation depending upon the facts of the case. Okay, and at the same time, the person who is guilty, remember we had studied in section number 4, fine and imprisonment was getting applicable. So for imprisonment, can I say first we will have to arrest that particular person. So now we have got the, under section number 19, we have got the provisions for arrest also. So this director or the deputy director or any CG officer, these people have the right that even without an arrest warrant is not required for PMLA arrest. Okay, even without an arrest warrant, they can go to that particular person, they can just inform that we are arresting you because of so and so reasons, and you can simply go and arrest that particular person, arrest that particular person, take him to the special court or the judicial magistrate or metropolitan magistrate within 24 hours of arrest. This 24 hours is going to exclude the travel time. Apart from the travel time, within clear 24 hours, this person should be presented before the special court or judicial magistrate or metropolitan magistrate. Okay, so arrest powers is with whom? Arrest powers is basically with the director or the deputy director. This person has got the right to arrest, and after arresting, he will just inform it to the adjudicating authority who did the attachment that, sir, we have arrested so and so person, and now that person is thrown into the custody of the special court or this magistrate, and final imprisonment order, etc., will be passed by the special court. Right? So basically director's powers. Okay, director is going to do the provisional attachment if required. Director is going to monitor the reporting entity, if you remember, right? Then after that, adjudicating authority. What is the work of the adjudicating authority? Adjudicating authority is going to do the final attachment. Okay, and then the special court. Special court is going to pass the confiscation order. Special court is going to do the arrest procedures. Very clear with this? Yes, so till here, basically your conceptual things totally get over. Right? Now going on to the other provisions, starting with the appeal provisions. Now listen, every law has got its appeal provisions. That is, if any person is aggrieved under the law, to whom should we go and say? Okay, suppose if the reporting entity, the banks and financial institutions, if they are aggrieved by the order of director, then they can go and file an appeal before the appellate tribunal. Okay, or if suppose, say for example, that accused person or the director is aggrieved by the order of adjudicating authority. Suppose adjudicating authority says that attachment is to be done, then can I say that accused person will be aggrieved? Suppose if adjudicating authority says no, there is no requirement of provisional attachment or attachment, then the director will be aggrieved because director had passed the order for provisional attachment. So if we are aggrieved by the order of adjudicating authority, or if reporting entity is aggrieved by the order of director, then they have got the rights that they can go and file an appeal before the appellate tribunal. Ma'am, what is this appellate tribunal? So PMLA does not have its own appellate tribunal. We go and take the appellate tribunal from the Smugglers and Foreign Exchange Manipulators Act. That particular authority is going to act as appellate tribunal under PMLA. Within 45 days from the date of receipt of the order, we can go and file an appeal. Suppose if there is any sufficient cause, then the delay can be condoned even beyond a period of 45 days. Matter goes to the appellate tribunal. Appellate tribunal will give the ROBH to all the parties who are there in the appeal, and then it can pass the order. Either it can confirm, or it can modify, or it can set aside the order, and AT should try to dispose of this appeal as soon as possible within a time period of 6 months from the date of filing the appeal. It should try to dispose of the appeal. So now basically we have got the AT's order, right? So now listen, AT also has got all the powers as vested in Code of Civil Procedure, but it is not bound by it. Means it has got all the civil code powers. Plus, along with that, it can regulate by its own procedures also. Okay, it can regulate by its own procedures also. Very clear with this? Okay. Then after that, suppose if we are aggrieved by the order of appellate tribunal also. Okay, then in that case, we can go and file an appeal to the High Court. Okay, this is the second and the final level of appeal, that if we are aggrieved by the order of appellate tribunal, we can go and file an appeal before the High Court within a time period of 60 days, which can be extended by another maximum 60 days if there is any sufficient cause. So 60 plus 60 days, we have to go and file the appeal, and there is no time limit that we will tell to the High Court that dispose of the appeal within so and so time period. Okay, so 60 plus 60 is the time period for going and filing the appeal. Very clear with this? Yes. Acha. Now listen, whenever you go to the first level of appeal, that is appellate tribunal functions in forms of benches. That is generally a group of judges is there who listens to your appeal and gives the decision. So there generally we have two members sitting in a bench. Okay, one judicial member and one technical member is sitting in the bench, and these two people constitute an appellate tribunal and they take a particular decision. So in appellate tribunal also, they say that decision should be taken by majority. If there is a difference between the appellate tribunal members only, then in that case, they will refer the matter to the chairperson of the appellate tribunal, and then either the chairperson will interfere or they will involve a new member, and then they will take a revised majority. So even in appellate tribunal, the decision has to be taken by majority, right? And suppose if you do not know how to go and represent before the adjudicating authority, how to go and represent before the appellate tribunal, etc., then you can appoint your authorized representatives who can go and file and who can go and represent your case before these particular authorities. Very clear with this? Yes? Okay. Then after that, so you had appellate tribunal in this case, you had got high court in this case, and this court we had already studied before, that is your special courts, right? What was the work of the special court? Two works were there. First one was what? First one was, it was passing the confiscation order, right? After AA passed the attachment order, special court passed the confiscation order, and even giving of imprisonment and fine, that is the work of the special court only. Okay, now ma'am, what do you mean by the special court? Special court is nothing but a session courts. Session courts you would have heard. So session courts are only designated as special court for the purpose of different laws. Like PMLA has got special courts. Even Companies Act is going to have its special court. So that law is going to, this particular court is going to come into picture, and it is going to do the trial of the offences under PM. Very clear with this? And special court has got the powers of from the code of criminal procedure, not code of civil procedure, but it has got the powers from the code of criminal procedure. Very clear with this? Okay. Then after that, going on to section number 45, which is very, very important section. Section number 45 talks about offences to be cognizable and non-bailable. Okay, cognizable means what? You can go and arrest that particular person without an arrest warrant. This we have already done. I had already told you we can go and arrest without an arrest warrant. And non-bailable means that person cannot be released on bail unless some exceptions come into picture. But once that particular person is arrested, he cannot be released on bail. Okay, if that person has to be released on bail, then there are certain conditions which needs to be fulfilled. First, we will have to go and give an opportunity to a public prosecutor who talks in public interest, that whether he wants to oppose the release. What is his opinion? Okay, we are just taking his opinion. We are not taking a decision from him. I'm repeating, we are just taking his opinion, right? So now just listen. We will go give an opportunity to the public prosecutor to oppose the release. And suppose if he opposes, but still the special court is of the opinion, no, this person can be released on bail and he won't commit any new offense while on bail, then in such a case, that person can be released on bail. Okay, this is one case. Or alternatively, if suppose the special court says that, okay, this person is under the age of 16 years, any person under the age of 16 years, any person who is sick or infirm, or any person who is accused of any offense for less than rupees 1 crore, then that person can be released on bail if the special court says so. Right, so in some exceptional circumstances that person can be released on bail. Otherwise, by default, the person cannot be released on bail under any circumstances, because the heading itself was saying that all the offences under PMLA would be cognizable and non-bailable. Very clear with this? Yes, then we have got some important points coming from these sections together. In this red one is important. Different types of directors under PMLA. Like the director is there, additional director is there, joint director is there, deputy director is there, assistant director is there, and all those things. So just for your knowledge, you can just read it once. Okay. Then going on to the other miscellaneous part of the chapter. Now, suppose it can so happen that whenever an offense of money laundering is happening, okay, whenever such an offense is happening, then there can be two countries which are involved. Maybe the offense is happening in India, but the proceeds of crime are found outside India, or vice versa. So in that case, how do we get the hold of those property which is kept outside India? How do we get the hold of those proceeds of crime which is kept outside India? So for that, just like in taxation, how do we have this double taxation avoidance agreement? Similarly, for the purpose of PMLA also. Okay, similarly for the purpose of PMLA also, we are going to have agreements with the other countries who can help us in finding the offense of money laundering if it is happening there outside India also. Right? So for that, there is a term called as contracting state first of all. Okay, definition of contracting state. So contracting state in our language is nothing but the other country. other country outside India with whom India has a treaty or an arrangement. Okay, with whom we have got an agreement that suppose if we want to discuss something about money laundering or if we want to discuss about a particular case, okay, since we have entered into a treaty, we can now discuss. We will also be bound to provide them the information. Even they will be bound to provide us the information. Very clear with this? Okay. Then after that, there is something called as offences of cross-border implication. Cross-border implication means some offense of money laundering has happened and it has got effect in India also and it has got effect outside India also. So say for example, this one is important. Suppose if some person has done the offense outside India and if the proceeds of crime has been transferred to India. Offense outside India, example, kidnapping outside India, but proceeds of crime here in India. Yes, it is a cross-border implication. Or vice versa. Suppose if the offense has been committed in India, then they say it is very grave. Okay, if the offense has been committed in India and the proceeds of crime are transferred outside India or attempt has been made to transfer outside India. Okay, here it should be actually transferred to India. Here it is either transferred outside India or attempt. We have tried to transfer outside India, be it a successful attempt or an unsuccessful attempt. But if the offense has been done in India, then yes, it will be considered as an offense of cross-border implication. And whenever cross-border implication has happened, then in that case, we can obtain information from outside India. Even the other country, the contracting state can also obtain the information from us by use of letter of request. That is, whenever we want any information, we will issue them a letter of request. Sir, please submit so and so information to us. And whenever they want some information, they will submit us a letter of request and then we will be bound to provide them the necessary information. Right? But this can be done only if you have entered into an agreement with that particular contracting state. Okay, why do we enter into agreements? We enter into agreements because we want to enforce the provisions of the act. Maybe say for example, if the proceeds of crime are kept outside India, then if we want to bring back those proceeds of crime to India, or suppose if I want to bring some person into India, for that we need agreement with the other country. Or suppose if we want some information from the other country, then in that case also we require a treaty, and that can happen only if we have got an agreement with the other country. Okay, so for exchange of information, exchange of documents, letter of request will be used. Okay, but if you want some person to be brought into India or some person to be sent from India, or if you want to get some person arrested from that country, if you want to issue arrest warrant on that particular person, for that also we will require reciprocal arrangements with that country. Okay, suppose if some person is sitting in Dubai, I'm just giving an example. Suppose if some person is sitting in Dubai and I want to get that person arrested, I cannot send the police officer from India to arrest him. He cannot come that way. So for that we will require the help of that country's official, and for that we will have to enter into an arrangement with them. Very clear with this? Yes. Now we have got certain punishments coming up here. Say for example, if there is any officer under PMLA who is doing some search and seizure, okay, without recording the reasons in writing. He's simply doing some search and seizure because he simply says that I think that you are involved in PMLA. Then in such case, that officer of PMLA can be liable for imprisonment up to 2 years or fine up to 50,000 or both. Okay, imprisonment up to 2 years or fine up to rupees 50,000 or both. This can be made applicable on that particular person. Very clear with this? On that particular officer who is doing the search and seizure without recording the reasons in writing. Okay, and now say for example, if there is some third person who is giving some false information about me and getting the search and seizure done from the officer. If that person is giving false information, knowing it to be false, he knows that this information is false, then too, just for taking some revenge, etc., he is willfully giving some false information, then he will be liable for the same punishment, that is imprisonment up to 2 years or fine up to 50,000 or both. So the punishment is same, but section 62 punishment was coming on the officer of PMLA authority, and 63 is coming on the person who is giving false information about me. Okay, and then this is the other pointer. This is a penalty, not a punishment. That if suppose someone was issued on me, but I did not go and attend. I was told to produce some books of accounts. I did not do that. I did not sign any papers, etc., which the authority told me to do. Then in that case, penalty can be imposed on me, ranging between rupees 500 to rupees 10,000. Very clear with this. For each default, penalty can be imposed on. Very clear with this? Yes? Okay. Now listen, whatever information the authorities collect, okay, whatever information the PMLA authorities collect throughout, then in such cases, yes, we had studied that they have to keep that information confidential. But can they share this information with other government authorities? Definitely yes. If they get any information about, say, drugs, then they can share it with the drugs authorities. If they get some information about income tax, we have violated some provisions, the information can be shared with income tax authorities also. So keeping confidential means not to make it available for the general public, but yes, definitely it can be shared with the government authorities, so that the government authorities can take the necessary action as per other laws also, right? And whenever any fine or penalty is imposed on us, okay, fine we had studied, fine of any amount we had studied in section number 4. Penalty we just studied now above also. Suppose if that is levied, then obviously we have to pay. If we do not pay it within a time period of 6 months from the date of imposition, then it will be recovered as if you recover income tax arrears. Okay, it will be recovered as per your income tax provisions. And the recovery procedures will start. That is, attaching your movable property, immovable property, freezing your bank accounts, etc. As per those things, as per those ways, your fine, penalty, etc. will be recovered if you fail to pay it within a time period of 6 months. Very clear with this? Yes? Okay. Then after that, suppose if PMLA offense is done by a individual person, then punishment comes on that individual person, confiscation comes on that individual person. That is normal. What if the offense of money laundering is done by a company? If the offense of money laundering, if the offense of money laundering is done by a company, then in that case, who will be liable for imprisonment, etc.? Then yes, the person in charge will be liable for it. Okay, fine, imprisonment is going to come on that particular person in charge. But if he proves that no, it was done without his knowledge, or he had exercised due diligence to prevent such type of offense, then he will be released. That he will be excused in such cases. Okay, but if suppose if it is proved that this offense happened because of this particular person, it was because of neglect of that particular person, then he will be liable to be proceeded. Very clear with this? Yes. And say for example, if during this process of PMLA is going on, say for example during appeal provisions, suppose if I went and not me, but say for example some person went and filed an appeal before the appellate tribunal. Okay, and the case is already going on before the appellate tribunal. The appeal provisions are already going on. Okay, then in that case, suppose if that person becomes insolvent or that person passes away during the proceedings, then they say that proceedings won't stop. Okay, proceedings won't stop. Proceedings will continue as it is. In case of death, it is going to be continued by the legal representative, and in case of insolvency, it will be continued against your official assignee or the receiver. Okay, be it when the case was there before the appellate tribunal or the case was there before the high court. In both of the cases, the PMLA proceedings won't stop. It will continue against the legal representative in case of death, and in case of insolvency, it will be continued against the official assignee or the official receiver. Very clear with this? And then you have got some general provisions coming up here, which you can just read once. And this is the summary which is given. You already know since you have been using the book. The summary of all the important time periods, appeal time periods, attachment, provisional attachment, those time periods are given up here. Important penalties, summary of all the important penalties and punishments are also given up here. And then the summary of the entire chapter is also given up here. Very, very clear with this, everyone? Yes, so this was all about your an overview. This is a super quick revision, so obviously it is not possible to cover 100%. So this was just an overview of the entire chapter. Yes? Okay. Okay, so then let's go to the next chapter, that is the Arbitration and Consolation Act 1996. Very simple law, a very small act, and very general provisions. Too many general provisions are there in the chapter. Now, first of all, what are things are we going to study here is in arbitration and conciliation. Suppose if there is any dispute between two or more persons, then the traditional way of resolving the disputes was to go to the court, right? Was to go to the court, file a case, and all those things. But then now we have got these alternative methods of dispute resolution. That is, you can go for arbitration, you can go for conciliation, you can go for mediation, and all these things, right? These are the options available. So this entire law is applicable to whole of India. It came into effect from 22nd of August 1990. And we are going to study different things. We are going to study about some provisions for arbitration. We are going to study the overview of conciliation and such other things. Mainly for the purpose of our examinations, we have got the provisions relating to arbitration. Majorly the provisions relating to arbitration, which is going to come up here. Right? Now they say that the traditional method of resolving the dispute was to go to the court and solve it. Now we have got something called as alternative methods of dispute resolutions, which is commonly known as ADRs. Right? In that you have got your arbitration, you have got your mediation, you have got your conciliation, you have got your negotiation, and such other methods are there. Out of these also, the most commonly used methods are arbitration and mediations. Conciliation, negotiations are also used, but the most commonly methods are arbitration and mediation. Right? Now, when we talk about arbitration, let's suppose if there is a dispute between two or more parties and they have decided to go for arbitration, then which laws, this particular provision will be regulated by which law? So this will be regulated by Arbitration and Consolation Act 1996, the one which we are studying. Then it is regulated by the Legal Services Act 1987, and then some provisions from the Code of Civil Procedure 1908 is also going to be applicable. Right? So we are going to take the provisions from all these three laws, and then we are going to do the arbitration here in India. So ma'am, what do you actually mean by arbitration? Arbitration is such a method where we resolve the disputes. Okay, this dispute resolution is done by a third party, a neutral person called as arbitrator or arbitral tribunal. He is going to listen to both the parties and then he is going to render a final decision, and this decision is going to be binding on all the parties. That decision is called as the arbitral award. Okay, that's the final decision. Just like in court, the final decision is called as a judgment, right? Similarly, in case of arbitration, this is called as an arbitral award, right? Now we have got certain basic features. Okay, we have got certain basic features of arbitration. Some 8 pointers are covered up here. For the purpose of arbitration, first of all, they say that having an arbitration agreement is mandatory. Means if I and some other party, if we think that there might be any dispute between us in the near future, then first of all, we have to enter into an arbitration agreement. If I want to resolve my disputes by way of arbitration, I should be having an arbitration agreement. Okay, this dispute is going to be resolved by whom? This dispute is going to be resolved by a person called as an arbitrator, just like a court, not a court. Okay, arbitrator, or you can call that person as an arbitral tribunal, right? Then, in case of arbitration, there is this important point called as seat of arbitration. Let's say, for example, if we are going for arbitration, suppose if there are two parties between whom there is a dispute, if these two people are going for arbitration, then which laws are going to apply, right? So, in that case, in case of arbitration, suppose if both the parties are Indian parties only, then the Indian laws are going to apply. Suppose if one party is an Indian party, another party is a foreign party, outside India's party, then in that case, your foreign laws are going to apply there, right? So you can decide, in case of arbitration, you can decide whether Indian laws will be applicable or foreign laws will be applicable. Just like we will study it ahead, that suppose sometimes it so happens that even courts provide some supportive measures for arbitration. So whether Indian courts are going to provide that or foreign courts are going to provide that, that is called as your seat of arbitration. And arbitration is such a thing where we have got very good freedom. Like we can decide when the parties and arbitrator are going to meet, where are they going to meet, how are they going to, discuss, whether they are going to have oral arguments or written arguments. That is called as party autonomy, means freedom. Okay, party autonomy. So this is one of the major feature of arbitration, where the parties are free to choose their arbitrator. Parties can decide where the arbitration is going to happen, when is it going to happen, when are they going to meet, how are they going to discuss upon the matters, and all those, right? Then after that they say that once a particular decision is taken in arbitration, okay, once a particular decision is taken in arbitration, generally there will be no appeal possible against that decision, because in case of arbitration it is a mutual decision, right? So generally in some grounds still appeal is possible, but by default rule is appeal is not possible once an arbitral award is passed, or once an arbitral award is given, then the appeal is not possible. Okay, some cases where appeal can be possible is, suppose if the arbitrator is not acting in an independent manner, or he is totally behaving in an unfair manner, or there is an unfair procedure which is going to which is hampering the process of arbitration. Only in such cases where my rights are getting affected, only in such cases I can go for arbitration. Very clear with this? Yes. Then we have something called as confidentiality. Yes, this is one of the major differences. When the matter goes to the court, then in that case, your process is not confidential. If whatever decisions come in court's judgment, we study it as a case law, right? So there is no confidentiality in that. But in case of arbitration, okay, in case of arbitration, confidentiality is maintained, right? Confidentiality is maintained. Then whatever is the final decision which is given in case of arbitration, that is called as your arbitral award. Just like we saw, the full and final and the binding decision which is given is called as arbitral award, and that is enforceable as if it is a court's decision. You cannot take it lightly that okay, this is given by the arbitrator, so let's not enforce it, etc. No, the final decision given by the arbitrator is going to be enforceable. Okay, means we have to make it applicable, we have to make it binding on all the parties. Very clear with this? Yes. Okay. Then after that, the next thing that we have here is arbitration in India. Okay, we have already studied the 3 different laws. You remember? Whenever arbitration is going to happen in India, you're going to have Arbitration and Consolation Act 1996, Legal Services Act, Legal Services Authorities Act, and then the Code of Civil Procedure 1908. That is going to be there, right? Whenever arbitration happens, we take the provisions from those 3 laws. Similarly, there are 3 different authorities who have been given powers under Arbitration and Consolation Act that we can seek their help. Okay, we can seek their help in case of arbitration. So first of all, there is a broad term called as judicial authority. Okay, there is a broad term called as judicial authority. So judicial authority includes your courts, it includes your special tribunals, quasi-judicial authorities. Quasi-judicial means just like court. They act just like court. Okay, they can provide us the necessary help under arbitration whenever we ask for it. Okay, ma'am, court means which court, or when will the court interfere in between? So court generally comes into picture only for supervisory function. Okay, that in case of international arbitration, that is whenever one outside India's party is involved, then High Court can provide those supportive measures. In case of domestic arbitration, district court and high court can provide the supportive measures. Okay, whenever, see, the major things will be done by the arbitrator only. Okay, major things will be done by the arbitrator only. But whenever we require any supportive measures, wherever we require any supervisory functions to be exercised, then the courts can come into picture. Then, suppose if we are not able to appoint the arbitrator, we will study now how do we appoint the arbitrator. But worst case, if suppose we are not able to appoint the arbitrators, then in that case, Supreme Court and High Court, Supreme Court in case of international arbitration and High Court in case of domestic arbitration, they can interfere in between and they can appoint the arbitrator. Okay, so the broader term is judicial authority. Judicial authority includes everyone. It includes the courts, special tribunals, quasi-judicial authorities, everyone. It is going to include everyone, right? Then, in case of courts, for giving you the some supervision, etc. For international arbitration, you have got the High Court. For domestic arbitration, you have got the district court and the High Court. Then for appointment of arbitrator in case of international arbitration, you're going to have the Supreme Court. In case of domestic arbitration, you're going to have the Okay, so this way your district court, high court, supreme court, special tribunals, quasi-judicial authorities, they are going to come into picture and they are going to provide the necessary assistance. Very clear with this? Yes. Achha. Then we had studied in the basic features that we should compulsorily have an arbitration agreement. So here they have just elaborated it that yes, since arbitration is a private method of dispute resolution, an agreement should be entered between the parties where they give their consent that yes, we wish to go for arbitration, because consent is the most important thing. Okay, without consent you cannot enter into arbitration. All the parties should be agreeable to this particular point that yes, consent, we provide our consent so that we wish to get into this arbitration agreement. Very clear with this? Okay, now there can be two types of arbitration agreement. One can be in form of arbitration clause and another one can be in form of separate agreement. Okay, one can be in form of arbitration clause, that is the main clause, main agreement. Okay, example, partnership deed. Partnership deed will contain a clause called as arbitration clause. Just like partnership deed contains a clause called as remuneration clause, profit sharing clause, etc. Similarly, it can contain a clause called as arbitration clause, where it will be written that yes, both the partners or all the partners give their consent that yes, they wish to enter into this arbitration agreement. Okay, suppose if it is not there in the main agreement, then you can prepare a separate agreement where you can agree to enter into this arbitration agreement. Okay, there is no specific format for this arbitration agreement. It can be in any particular form, no problems in that. Okay, it can be in any particular form. It can be, it can be but yes, it has to be in writing mandatorily. It cannot be oral. But in writing also, it can be shared over email. It can be there in form of a letter, in form of telex, fax, etc. It can be in any form, but mandatorily it has to be in writing. Okay, so these were the two types of arbitration agreement. One is your arbitration clause. Okay, one is your arbitration clause which is there in the principal contract. Okay, example, it is there in the partnership deed. Achha, and another one is your separate agreement, that is your submission agreement, where your main agreement is kept differently and arbitration agreement is entered separately. I hope I am very, very clear with this, everyone. Yes. Okay, then after that, the next one, that is general principles of arbitration agreement. Okay, there are some very simple pointers coming up here, some 5 pointers coming up here. First of all, for arbitration agreement, what do you mean by arbitration agreement? Arbitration agreement is a contract. Okay, it is a contract where all the parties agree that in case of dispute, we will enter into arbitration. So since it is a contract, it should fulfill all the requirements of a valid contract from the Indian Contract Act. Right? It should mandatorily have consent, because without consent you cannot enter into this contract. Okay, then there is something called as ouster of jurisdiction, means you cannot unilaterally move out of the contract and proceed to the court for dispute resolution. If you have decided that you will resolve your dispute by way of arbitration, then you have to resolve it by way of arbitration. Say, for example, one of the parties say that no, I don't want to go into arbitration, I want to go for a contract. Then in that case, you have already entered into an agreement. So you cannot unilaterally proceed to the court for litigation. Okay, if you want to go, then end the arbitration agreement, then you can definitely. Very clear with this? And then there is something called as Doctrine of Separability. Means what? Whenever, say for example, even if the arbitration clause is there in the main agreement, then too arbitration agreement is going to be considered, it will be deemed to be a separate agreement, and partnership deed will be considered to be a separate agreement. That means arbitration agreement is independent of the main contract. Okay, it is independent of the main contract. Even though it is contained in the main contract, then too it will be deemed to be separate of the main contract. And suppose if the main contract becomes questionable, suppose if we question that is the partnership deed valid or is it invalid, because of that the arbitration agreement does not become invalid. So it is going to have its own separate legal identity. Okay, even though the arbitration agreement is in form of a clause in the partnership deed itself, then too it is going to have its own separate legal entity. Very clear with this, everyone? Yes. Okay. Then after that, we are going to have some more things about a valid arbitration agreement. Okay, as already told to you, it has to be in writing. It cannot be orally. It is not necessary that it has to be in a specific format only. No, it is not required. But yes, it should be in writing. It should have clarity of consent that yes, we agree to enter. We agree to enter into this arbitration agreement. Okay, such proper consensus should be there. Only legal matters can go for arbitration. Example, if there is any case relating to bribe, okay, say for example, someone has taken bribe from me and not done my work, and then now there is a dispute between both of us, and now I say let's go into arbitration. No, accepting bribe or giving bribe itself is totally illegal. So in that case, arbitration is not valid in such cases. Okay, whenever you enter into arbitration, all the parties are there, then you appoint an arbitrator, and the arbitrator's work will be to give a final and a binding award, and that particular award should be a speaking award, means it should be a detailed award. Okay, means there should be a supportive reason that why such award has been given, right? Okay, then suppose if you enter into an arbitration agreement, it should be clear. Okay, just using the word called as arbitration or using the word called as arbitrator does not make it an arbitration agreement. You have to be very clear that yes, for this particular dispute we are entering into an arbitration agreement, and both the parties consent to this particular fact that we wish to enter into arbitration. Right? So just mere use of some words, say for example, Arpita is an arbitrator. Does it mean that, okay, if I write this statement, Arpita is an arbitrator, that does not become an arbitration clause. Okay, or that does not become an arbitration agreement. Right? Then dispute should be there for the purpose of arbitration, and those disputes must be arbitrable. Means there are certain matters which cannot be submitted for arbitration. Example, criminal offenses. Criminal offenses has to be handled by the court only. You cannot take the matter to the arbitrator. So whatever matters you take to the arbitrator, those matters should be arbitrable. Okay, those should be arbitrable. And whenever you enter into arbitration agreement, whenever both the parties enter into arbitration agreement, the agreement should be signed by all the parties. Okay, it should be signed by all the parties, which also gives a consent that yes, they have agreed to enter into this particular agreement. Very clear with this? Okay. Then after that, the next one, this is a different one called as the arbitration agreement through reference. Okay, arbitration agreement through reference means what? Say for example, I and some other person wishes to get into this arbitration agreement, and there we have written there arbitration agreement the arbitration will be done as per the clause of or as per the rules and regulations of XYZ association. Okay, means, or I will say the dispute resolution will be done as per rules and regulations of so and so association. Okay, example, I write somewhere that arbitration or dispute resolution will be done as per the rules and regulation of Class Owners Association. So I am not writing whether we are going to go for litigation or whether we are going to go for arbitration. I am referring this thing to some third parties association. So now say for example, if there is any dispute between the coaching classes and the students, then the dispute will be resolved after checking the rules and regulations of that particular association. If the rules and regulations says that dispute should be resolved by way of arbitration, then we are going to resolve the dispute by way of arbitration. So we are not determining it upfront, we are giving some reference to some association. Right? I have given this example, you can just read it once, you will understand it. Then, when does an arbitration agreement comes to an end? Suppose if both the parties say that let's go to the court, then in that case they can end it up. Okay, or if the main contract gets over, if the partnership is over, business is over, then in that case what's the point of keeping the arbitration agreement? Okay, acha. Suppose if the law says so, that this is such a matter which cannot be dealt by way of arbitration, then in that case you can complete it. Okay, then in that case, you can finish it off. Then the arbitration agreement comes to an end if the law says so. If the law is saying, then you cannot continue with the agreement. And this third point is an exceptional point. What is this third point? Third point talks about death of the parties. Suppose if either of the party passes away, then the arbitration won't come to an end. Okay, mind my words. Arbitration won't come to an end. It will be continued against the legal representative. So in point 1, point 2 and point 4, it is coming to an end. But they are telling in the third point, it won't come to an end merely because of death. Very, very clear with this? Yes. Okay. Then the next one. Everything till here we studied about the arbitration agreement. Now we are going to a person called as the arbitrator, that is the arbitral tribunal. He is basically a third party, an independent party, a neutral party who is going to decide the disputes between all the parties. Okay, he is the person who is going to decide the disputes between both the parties. That person can be called as an arbitrator, or that person can be called as arbitral tribunal. That person has to mandatorily remain independent, neutral and fair to all the parties who are there in the arbitration. Okay, then they should be having particular qualification, experience, etc. for the purpose of doing this arbitration. That person should be capable of contracting. He should not be a minor. He should be eligible to enter into a contract. He should not be of unsound mind and all those things. And he is going to listen to both the parties, and then he is going to decide upon the conclusion. Right? Now, who is going to appoint this arbitrator? So, as per that freedom point, or as per that party autonomy point, all the parties have got the freedom to choose who is going to be our arbitrator, where are we going to meet, how are we going to discuss upon those matters and all those. Right? Achha. Now, how many arbitrators should be there? So they say that you can appoint whatever number of arbitrators you want for your particular case, but that number should not be an even number. 2, 4, 6, 8, 10, etc. not allowed. That number can be an odd number, because suppose if it is an even number, there can be dispute among the arbitrators themselves. Right? So the number should not be an even number. Achha, suppose if you are not able to determine how much should we appoint, 1, 3, 5, 7, what? Then in that case, go for a sole arbitrator. Okay, then in that case, go for a single arbitrator, go for a sole arbitrator. I hope I am very, very clear with this. Yes? Achha, now, how are we going to appoint the arbitrator? So, either both the parties can mutually appoint a particular arbitrator. That is one thing. Mr. A is there, Mr. B is there. Both of them mutually appoint an arbitrator. That is the simplest method. Okay. Another method is, A will appoint one arbitrator, B will appoint another arbitrator, and then these two arbitrators will appoint the final arbitrator. I will appoint one, another party will appoint one, and then these two will appoint the final arbitrator. Hey, we are doing a revision, so you should be knowing these provisions already. Then the third method of appointing is, I will appoint I will give a list of arbitrators to the second party. Second party will choose one arbitrator out of it, if he likes. If he does not like, he will share his list of arbitrators with me, and I will choose anyone out of this. Okay, and this exchange of list is going to go on till both the parties agree upon one single arbitrator. Right? And last, if we are not able to appoint the arbitrators, we've already discussed this, we are going to approach the respective authorities for appointment of arbitrators. That is, in case of international arbitration, we'll go to the Supreme Court. In case of domestic arbitration, we'll go to the High Court, and they will help us in appointing the final arbitrator. Very, very clear with this, everyone? Yes. Achha, now, this particular arbitrator who is appointed here, this particular person, we have already studied, this person should be capable of contracting. That is, he should be eligible to enter into a contract. He should be totally independent, unbiased, neutral, impartial, and all those things. Right? Then only he will be able to give, a decision. Then the next one, that is, can you challenge the decision which is given by the arbitrator? So we have already studied that appeal is not possible, but say for example, if there is something wrong happening, okay, if there is something wrong happening, or there was some unfair procedure which was followed, in that case the appeal was possible. Acha, similarly, for whenever you've appointed an arbitrator, can that be challenged? That can be challenged only if you have doubts relating to independence, if you have doubts relating to impartiality, right? Or suppose if the arbitrator is such a person who is not at all dedicated, he won't be able to complete the arbitration process within 12 months, then in that case you can decide to change the arbitrator, right? Suppose if you have a doubt about biasness, that this arbitrator is not independent, this person is biased, etc., then in such case you can challenge the appointment of arbitrator. Ma'am, how will we come to know that that particular arbitrator is biased? So suppose if he is related to either of the parties, maybe business relationship or personal relationship, or he has some financial interest in either of the parties, or he is related, that is he is an employee, consultant, advisor, etc. of either of the parties, or he is legal representative of either of the party, or he was he is the lawyer of either of the parties, then we can say that no, this particular person is related to either of the parties, and that can lead to biasness. Right, that can lead to biasness, so we may change that particular arbitrator. Very clear with this? Okay. Then after that, there is something called as duties and liabilities of the arbitrator. What is that? Now he has come into picture, an unbiased person has come into picture. What is his duty? So he has to conduct the proceedings without any delay. He has to complete the proceedings as soon as possible. He has to remain impartial at all points of times. Right? He has to maintain confidentiality, because we have already studied that in case of arbitration, the process is entirely going to be confidential, right? The process is going to be confidential. Then whatever award he gives, that has to be a detailed award. Means whatever decision he gives, that should be a reasoned award, that should be a detailed award, and he should avoid unilateral communication with one party. He is just talking to one of the party, ignoring the other party. It shows that okay, he is interested in the he's working in the favor of one party only. Achha, whatever papers, documents he is receiving from one party should be shared or should be communicated to the other party, so that everyone is there in the loop. Okay, so that everyone is there with the loop, and whatever final decision he gives, that decision should also be legal. Okay, that should be legal and that should be practical. Example, suppose if he says that go and kill the other party, game will be over. That is totally illegal. Suppose he says that bring stars from the sky, that is impractical. That should not happen. Right? So this way, these are the duties of the arbitrator while he is giving the final. Okay, can he be removed? Can he be suspended? Can he be substituted? Can he be changed, etc.? Yes, either it can happen voluntarily or we can do so. Arbitrator can also resign voluntarily without giving any reasons. He need not give any reason that why am I resigning. Okay, or alternatively, all the parties say that no, this particular person should be removed, or law says that this arbitrator should be removed. Okay, or if the arbitrator is not able to continue, maybe because he is no more interested in this particular matter, or he has lost interest in this particular matter, or he does not have the proper expertise to handle this particular matter, then in such cases this particular arbitrator can be either he can be removed, or he can resign, or he can be terminated. Okay, then for you have to just refer this point once, just read this point once mandatorily. In the same section it is there, arbitration process ends. Just read this point on your own once. So these are some of the ways in which the arbitrator can either resign, or he can be removed, or he can be terminated. Okay, then the final decision which is given by the arbitrator, that is called as arbitral award. Right? It was called as arbitral award. That is the final decision that should be kept confidential, and that can be generally not appealed against. Means we cannot go for an appeal unless my rights are affected. So suppose if I want to go for an appeal, first go to that particular arbitrator only. Tell to that particular arbitrator that no, the decision given by you is not correct, or I challenge it, so please reconsider it. Okay, if he reconsiders, then well and good. If he does not reconsider, then for international, you can go to the High Court. For domestic, you can go to the district. Right? And before these people, you can go and file an appeal, and this appeal can be filed within a time period of 3 months, and this can be extended by another period of 30 days. Okay, if you want to go before the district court or the High Court, then you can go within 3 months plus 30 days. I hope I'm very, very clear with this, everyone. Yes? Okay. Now listen, the award which is given by the arbitrator, that was called as what? The award which was given by the arbitrator was called as the arbitral award. That is the full and final award that was given. Right? So first of all, the final award which is given will be called as a final award. Suppose if all the matters has been solved and then the award is given, that is called as a final award. Any award given before the final award means a temporary award that is given, or suppose we had submitted 10 matters for arbitration and one matter is getting solved. So the any award which is given before the final one, that will be called as an interim award. Okay. Suppose if both the parties themselves have come to a conclusion and that has just been monitored by the arbitrator. Okay, means the parties themselves have come to a conclusion, and so arbitrator did not do any extra work, but arbitrator just monitored the matter. So that award will be called as a settlement award. Okay, that award will be called as what? That award will be called as the settlement award. Very clear with this? Okay. Then after that, the last one, that is additional award. Suppose if we had submitted certain matters for arbitration and one of the matter or some of the matters are yet to be resolved. Okay, some of the matters are yet to be resolved. Then such an award will be called as, now again you will have to go to the arbitrator, right, and tell him that, sir, this matter is left out. So if he gives a decision on that, then that award will be called as an additional award. And we can go and request to the arbitrator within 30 days of the final award that, sir, you missed out this point. And then he will give an award called as additional award. I hope I am very, very clear with this. Yes. So the final normal award is called as the final award. Any award given before the final award will be called as an interim award. Okay, if parties themselves come to a conclusion, that will be called as a settlement award. An award given on the left out matters will be called as additional award. I hope I am very, very clear with this. Yes? Acha. Then whatever award you give, as already discussed, first of all, that has to be, even award, it has to be a decision by majority. Like you can have multiple arbitrators, right? So it has to be a decision by majority. It should be in writing, signed and dated. Okay, it should be signed by majority of the arbitrators, and the ones who did not sign, they have to give the reason that why they did not sign. Okay, then I already told you it should be a speaking award. That is, it should be a reasoned award, that why this award has been given. Okay, why this award has been given, or what were the reasoning behind this. Award should be a clear award. It should not be vague. Okay, you may do this. No, that should not be there. Okay, it should be clear that what the parties are expected to do now. It should be realistic in nature. Bring stars from the sky, not possible. It should be realistic in nature. It should be legal in nature. It should not be against public policy. Example, imagine it is a case of international arbitration. So it should not be against India's policy, right? Then it must be delivered and enforced as soon as it is signed. We have already studied that it should be enforceable by law. It should be binding on all the parties. So it should be enforced as soon as possible. Very, very clear with this. Then this we have already discussed, grounds for challenging. Whatever decision is given by the arbitrator, can we challenge it? So yes, it can be challenged. First, it will be challenged before the arbitrator only. Then you can go before the district court or the high court as the case may be. right? Suppose if the appointment of arbitrator itself was questionable, then you can challenge it. Or if the arbitration agreement was invalid, then you can challenge it. It was such a matter which should not have been given for arbitration, then you can challenge it. Legal requirements were not followed, then you can challenge it. It is against India's policy, then you can challenge it. And in so and so cases, on so and so grounds, very restricted grounds, in so and so grounds, the matter can be challenged. Okay, and once you challenge it, after that it goes before the authorities. What decision can be given in case of appeal? We have studied similar thing in PMLA also. What decision can be given in case of challenge? So it either the order can be set aside, means totally cancelled, or the authority can confirm it. The court can confirm, court can say that no, the decision given by arbitrator is absolutely correct, or they can modify it. Okay, the court will modify it, that is one thing, or it will give it back to the arbitrator to rectify some defects. There is a minute difference between the C point and the D point. In C point, the court is modifying it. In D point, we are giving it back to the arbitrator to change it. So, just like we studied, confirm, modify, set aside and remit back to the trial. Very, very clear with this? Yes. And whatever decision is given by the arbitrator that is enforceable by law, means you have to make it applicable, and that enforciation thing happens as per the code of civil procedure. Means you cannot take it lightly that it is not a court's order, so why to enforce it, etc. No, do not take it lightly. Arbitration award or arbitrator's award is also going to have equal weightage just like a court's decision. I hope I am very, very clear with this. Yes. And now going on to the last part, that is your conciliation. Just like I had told you, major things that we have in this particular chapter is going to be about arbitration only. But here we have the overview of conciliation. Conciliation is also an alternative method of dispute resolution where the parties come to an agreement. They are very matured. Okay, the parties are very matured that they come forward for a confidential discussion and then they come to a conclusion, and which is monitored, just monitored by a person called as conciliator. In arbitration, what happens is parties fight to prove themselves correct. But in case of conciliation, it is totally non-adversarial. They are not going to compete against each other. Rather, they agree to a common point which is best for all the parties. Okay, so this is a more matured way and hence less used practically, right? So this is a voluntary process where the parties agree to a particular point. Conciliator's work is just to provide the assistance whenever asked for. Otherwise, the major things here is done by the parties themselves. Okay, major things are done by the parties only, right? And then whatever is the final decision, that is called as a settlement award, or that will be called as a settlement agreement. Why settlement? Because here major efforts has been taken by whom? Major efforts have been taken by parties only and not by the conciliator. Okay, so you can call that final decision as settlement agreement or memorandum of conciliation, and it will be just authenticated or signed by the conciliator showing that yes, this is legal and he has supervised that particular matter. Again, conciliator's decision is also going to be enforceable just like a court's decision. Very clear with this? Okay, so here also similarly, the entire thing is going to remain confidential, just like your arbitration, it is going to remain confidential. Right? Okay. Then how many number of arbitrators? So number of arbitrators has to be between 1, 2, 3. It can be 1, 2 or 3, whatever. If you are not able to decide how many, then you can just appoint one conciliator. Your majorly main work will be done by the parties only. Conciliator is just going to supervise and he is just going to keep a check whether the decisions taken by the parties are correct or not. Okay. Here in case of conciliation, the major thing is parties do not fight. Okay, they try to come to a common win-win situation. And the final decision which is given in case of conciliation, that is called as a settlement award or settlement agreement or memorandum of conciliation. Very clear with this? And in case of conciliation, you can have either domestic conciliation where all the parties are of India only, or you can have something called as international commercial arbitration, means related to business. Dispute related to business where at least one of the party is of outside India. Either he is an individual outside India, or it's a company outside India, or it's a AOP BOI incorporated outside India, or whatever. So even those matters can be conciliated here in India. Very clear with this? So in case of arbitration, you have got arbitrator. In case of conciliation, you have got conciliator. In case of arbitration, number of arbitrator can be any number, right? It can be any number, but not an even number. In case of conciliator, it has to be between 1, 2, 3. Okay, conciliation method is non-adversarial. We do not fight. Arbitration can be adversarial. Very clear with this, everyone? Yes. Okay, and then you've got some differences, distinguish between, etc. coming up. You can just read that once. And with this, we are done with we are not doing the chapter for the first time. We are doing a super quick revision. So we have done it conceptually. Now you can just read the chapter once. Yes. Okay, so let's start with the next chapter. The Foreign Contribution Regulation Act 2010, simple chapter, had lots of amendments the last time. Now first of all, what are we going to deal with in this particular chapter? Let's try to understand that. Suppose if there is any particular person who is receiving something from outside India in form of foreign contribution or something in form of foreign hospitality. Right? Two things are going to come up in this chapter. One is foreign contribution and the other one is foreign hospitality. If we are receiving it from outside India without any consideration, example, it can be in form of donations. If I am receiving that from outside India, no problems in that. It's just that we have to, while we are accepting that particular foreign contribution and when we are utilizing that amount, at that point of time, we have to make sure that we comply with all the provisions of this Fcra 2010. Right? Okay. So now this law Fcra 2010, this is applicable to again whole of India including Jammu Kashmir. It is applicable to citizens of India who are located outside India. Even if since they are Indian citizens, Fcra will be applicable irrespective of the fact whether they are in India or they are outside India. Plus again it is applicable, since it is applicable to whole of India, can I say it will be applicable to the Indian companies also? Plus the Indian companies who are having their branches or associations etc. outside India, Fcra will be applicable to them also. Right? So this law Fcra is going to talk about two things. One is sometimes when you accept foreign contribution, either it can be regulated, means the government is just going to keep an eye on you, that from whom are you receiving it, for what purpose are you going to utilize that foreign contribution etc. And the other one is in some cases that can even prohibit you, okay, it can even prohibit you from accepting the foreign contribution if it causes some detrimental activities to our country's interest. Right? So in this particular chapter, we are going to study about this foreign contribution. Now this provision of foreign contribution will be regulated by Fcra 2010, the one that we are studying. Then it will also be regulated by the FCRR, Foreign Contribution Regulation Rules 2011, and plus some notification circulars etc. come from time to time, and even those will contain the provisions about this foreign contribution. Right? Now, foreign contribution means what? Foreign contribution can be in form of, see, it has to be without consideration. Just remember that thing. Okay, it can be in form of donation or any kind of thing which is coming inside, which can be in form of article, currency or security. Okay, three things to be remembered: article, currency or security. But yes, one thing in article is important, as you already know. If we are receiving any article as gift and which is going to be used for personal purpose, and if its value does not exceed rupees 1 lakh, then it will not be counted for the purpose of article, and therefore it won't be even counted for the purpose of foreign contribution. right? So if I am receiving any article whose value does not exceed rupees 1 lakh, which I am going to use it for my personal purpose, then it won't be even considered as an article, and subsequently, eventually, it won't be even considered as a foreign contribution. But just remember that 1 lakh thing is applicable only for article and not for any other currency, security, etc. Very, very clear with this? Okay. Then they say that if you are receiving, one thing that we studied was about foreign contribution. Another thing that I mentioned about was foreign hospitality. If I am receiving some kind of hospitality from the other country, means where a person who is sitting outside India, a foreign source, that person is offering me that he will bear my travel expenses, he will bear my lodging, boarding expenses, he will bear my medical treatment expenses, means he is calling me to his country, he is telling me you can come to our country, we will sponsor your travel, stay expenses, medical treatment. So that kind of an offer or that kind of an hospitality is called as a foreign hospitality. Okay, that is called as what? That is called as a foreign hospitality. So either I can receive foreign contribution or I can receive foreign hospitality, which I am receiving from a foreign source, okay, which I am receiving from a foreign source. Now, foreign source means anything outside India. It can be government of the other country, it can be any company which is there outside India, it can be any associations, body, trust, etc. Any particular person which is situated outside India, that will be called as what? That will be called as a foreign source, okay. And any contribution or any hospitality received from a foreign source will be covered under this particular chapter. Okay, one thing to be remembered here is this second point of foreign source definition. International agencies will also be considered as a foreign source, but except for the ones which are these specified agencies like your United Nations, then your World Bank, then your International Monetary Fund, etc. These people's main work is to do lending and is to help the countries, help the member countries, etc. Right? So this United Nations, International Monetary Fund, World Bank, etc. These won't be considered as a foreign source. So this is an exception. As you can see the word here, except. Okay, just mark this point as important. Right? So three things I told you here. First of all, it was your foreign source. Then next one is your foreign contribution, and next one is your foreign hospitality. Right? How do we link all these three things together? Any foreign contribution or any foreign hospitality which is received from a foreign source will attract the provisions of this particular law. Okay, in foreign contributions we had article, currency or security. Right, in foreign hospitality the other person was ready to bear my travel expenses, lodging, boarding expenses and my medical treatment expenses. Very clear with this? Yes, okay. Then after that, going on to the other provisions. Okay, going on to the other provisions. Now we are going to have some conceptual provisions coming up here. Only 2 to 3 sections are conceptual here. Rest after that everything is going to be procedural only. Okay. Now see section number 3, 4 and 6. Okay, specifically these sections are going to be very, very important. Section 3, section 4 and section number 6. Okay, section 3 talks about what? Section 3 talks about some people. Okay, some people are totally prohibited from accepting foreign contribution. See, foreign contribution is something that I am receiving from the foreign source. Right. So if there are certain people on whom the government has straight away put a restriction that you cannot accept the foreign contribution. Okay, who are those people who are prohibited? First of all, any person who is related to politics. So political parties or office bearers of the political parties, election candidate, any person who is associated with publishing of newspaper, means the editor, owner, printer, publisher of a newspaper, or a public servant, government employee, government servant, MPs, MLAs, any association which are engaged in broadcasting of news, etc. Radio channels, news channels, etc. Because these people, if they are accepting any funding from outside India, can it affect the Indian policies here in India? Can it affect the Indian interest here? Yes, definitely it can affect. right? So these people, the people who are related, the people who are related to government, people who are related to political parties, people who are related to the election process, people who are related to media, public servants, MPs, MLAs, etc. These people are totally prohibited from accepting the foreign contribution. Okay, that is the overview. That is basically the overview of your section number 3. But section number 4 talks about the exception. Okay, section number 4 talks about the exception. Section 4 says that person to whom section 3 shall not apply. Means they say that the people who were mentioned in section number 3, okay, this election candidate, political parties, etc., these people can accept something from the other country in these forms. Okay, example, if they are receiving any remittance in ordinary course of business, example, they are doing some business activities, and if they are receiving some consideration from outside India, that they can receive. If they are receiving some scholarship or stipend from the other country, they can receive. If they are receiving anything in the nature of remuneration, salary, wages, then they can receive, because there the consideration is involved. Right, so we can receive foreign contribution in these forms. There is no problem in that. Okay, then this point is important here. If they are receiving any amount from relatives in excess of rupees 1 lakh. So what they say is, first of all, can they receive any amount? See, imagine a political party office bearer. Okay, any office bearer of a political party, if he is receiving something in his personal capacity from his relatives from outside India for no consideration, he can receive, no problem. Just that if he is receiving more than rupees 1 lakh in a year, he just has to intimate it to the central government in form number FC1. Okay, so this point is specifically a different point and a point which is to be remembered. So if, say for example, if I am receiving any amount from my relatives, no problem. Even if the person who were prohibited in section number 3, even if they are receiving anything from this particular list, even they will be exempted. That is, the benefit will be available to them. They can accept that particular foreign contribution. I hope I am very clear with this. Yes. So just remember that form number FC1, where we have to intimate it to the central government, where we have received any amount, from our relatives abroad. Right? Okay. Then after that, that was section number 3 and section number 4 was basically talking about foreign contribution. Right? It was talking about foreign contribution. Section 3 told that so and so people cannot accept the foreign contribution at all. Section 4 said that okay, these people can accept foreign contribution if it falls under so and so pointers. Right? Now listen, just try to understand. In section number 6, we are going to talk about foreign hospitality. Okay, and section 6 is not applicable to all the people. Okay, section 6 is applicable only to certain people. Okay, it is applicable only to certain people on whom there is a particular restriction. And this list is going to be taken from section 3 itself. That is, your political office bearers of political party, government servant, government employees, MLAs, judges, etc. The restriction is applicable only on these people. Okay, restriction is applicable only on these people. It's not a complete restriction that you cannot accept foreign hospitality at all. Okay, these people can accept foreign hospitality, but after following a certain process. See, about these, can you see these 5 names coming up here? MLA, judges, government employee, office bearer, government servants, etc. We had studied about these people in section number 3 as well, right? But there, those people were totally restricted, altogether prohibited from accepting the foreign contribution, right? Now, when you come to this foreign hospitality, these people, first of all, this section number 6 is applicable only to these 5 people. Rest all can accept foreign hospitality, no restrictions in that. These people can accept foreign hospitality only after taking prior approval from the MHA, that is Ministry of Home Affairs. And yes, let me tell you one more thing. In this entire chapter, wherever submissions come, wherever any central government thing comes for the purpose of any procedures, then in such cases that refers to the Ministry of Home Affairs only. So whenever these people want to avail any foreign hospitality, they have to take the prior approval from the Ministry of Home Affairs at least 2 weeks before the the date when they are going to leave India, means 2 weeks before the proposed onward journey date, at least that much time before, they have to make sure that the application reaches the MHA. And when you submit to the MHA, you have to submit form number FC2. Application form will be there in FC2, and FC2 will be accompanied along with the invitation letter which you have received from the host country. That person would have invited you, right? So the invitation letter should be attached, etc. And then yes, definitely, if the MHA is satisfied, then you can avail that particular foreign hospitality. Right? Now, say for example, after going there, if there is any requirement of some emergency medical need after going there, then in such a case, you can first take that emergency medical treatment, and after that you can obtain the permission here in India from the central government. Basically, then you can just intimate it to the central government that there was some emergency medical treatment required, so I availed that foreign hospitality in form of medical treatment, and that you have to intimate here to the central government within 1 month of receipt. And even that is required only when the amount exceeds rupees 1 lakh. Okay, so basically section 6, what does section 6 says? It says that it is first of all applicable only to those 5 people. Those 5 people can accept the foreign hospitality after taking the prior approval from the MHA at least 2 weeks before the onward journey. Okay, after going there, say for example, I had taken the permission where the host had agreed to sponsor my travel and stay expenses. After going there, I fell sick. Okay, so then in that case, I can, suppose if they are sponsoring my medical treatment also, then I can first take the medical treatment, and then I will have to intimate here to the central government within 1 month of receipt. And this intimation is also required only if the amount is exceeding rupees 1 lakh. Very clear with this? Yes? Okay. So this was all about your section number 6. Now going ahead to section number 7. Section number 7 is very simple, a very small section. Earlier we used to have a rule number 24 along with this, then that rule number 24 got omitted altogether. Now we just have section number 7. Section number 7 says that, say for example, if I am receiving some foreign contribution, I cannot transfer this foreign contribution to any other person. Okay, don't ignore the word no person, otherwise the meaning will change. So if I am such a person who has obtained the approval from government, etc., I have followed all the procedure for accepting the foreign contribution. If I have received the foreign contribution, then in that case, I cannot transfer that foreign contribution to any other person. Okay, even if, say for example, if I am a registered person under the central government, means I have obtained all the permissions from the central government that I can accept the foreign contribution, and even you are a registered person. We both are registered persons. Still if say for example, if I have availed foreign contribution, I cannot transfer it to you. If I am accepting the foreign contribution, I only have to use it. Okay, I cannot transfer it to any other person, because then it becomes difficult for the government to trace it. So they say that whoever has accepted the foreign contribution, that same person has to utilize it. Very clear with this? Yes. Then after that, going on to the next section, that is section number 8. Section number 8 talks about certain restrictions. It is going to talk about mainly 2 restrictions. First thing is, say for example, if I have availed any foreign contribution, I cannot use it for speculative activities. Okay, compulsorily I cannot use it for speculative activities, and the reason is very clear. In speculation, if there is a risk of appreciation, then at the same time there is a risk of depreciation also. So if I am accepting any foreign contribution, I have to use it for non-speculative activities only. Okay, that is one thing. Another restriction is, if I am accepting any foreign contribution, say for example, I have accepted something in form of currency for the purpose of donations. Means I am accepting donations from the other country because I want to do some activities here in India. I want to do some charitable activities here in India. So they say that whatever FC you have taken, out of that, maximum 20% can be used for meeting the admin expenses. See, if I want to do some charitable activities in India, can I say I will have to employ people for doing that? So they say that if you want to meet any admin expenses out of it, meet, no problem. But maximum 20% of that FC should be used as administrative expenses. If it is more than 20%, then please obtain the prior approval of the central government. So their purpose is, if I am accepting foreign contribution for charitable activities, then in such a case, use that money. Majority of the money should be used for the charitable activity only, and not for meeting the administrative expenses for doing that activity. Sometimes it so happens that yes, admin expenses forms a big part. So in that case, no problem, take the prior approval of the central government. I hope I am very, very clear till here, everyone. Yes. Moving on to the next section, that is section number 9. So see, we did section number 3, which was telling that so and so persons are prohibited from accepting the foreign contribution. Section number 4 was talking about people who can accept, those people only can accept foreign contribution in so and so circumstances. Section number 6 was talking about foreign hospitality. Section number 7 was talking about that FC, we cannot transfer the foreign contribution to any other person. Any person, be it a registered person or be it an unregistered person, you cannot transfer the FC to any other person. Then after that, section number 8. Section number 8 was talking about 2 restrictions. One is you cannot utilize the FC for speculative activities, and another one for meeting the admin expenses out of the same FC, you can meet up to 20%. If it is exceeding 20%, then take the prior approval of the central government. Right? This is what we studied. Now going on to section number 9. Section number 9 was talking about power of central government to prohibit receipt of FC in certain cases. See, we have already studied the cases. Like in section 3, we studied that FC cannot be accepted by so and so people. In section number 4, we studied certain leniency, that is some certain exceptions. Then in section number 6, we studied that so and so people, if they want to accept foreign hospitality, they have to follow a certain process. Okay, those sections are already prescribed. Apart from that also, central government can put a restriction on any other person also, that you cannot accept the foreign contribution or you cannot accept the foreign hospitality. Now say for example, people like you and me who are not at all associated with media, or who are not at all associated with your political parties or your government employees, public servants, etc. Can we accept foreign contribution? Answer is yes. Can we accept foreign hospitality? Answer is yes. So if we want to accept FC or FS, we can. But can central government put a restriction on us? Definitely yes, central government can put a restriction on us if accepting of this foreign contribution, accepting of this foreign hospitality is likely to affect the integrity of our country, sovereignty of our country. It is going to affect the election process in our country. It is going to hamper, or it is going to affect the friendly relations of India with some other country. It is going to create some disharmony in our country. If accepting of FC or accepting of FH is, if it can do such a harm to us, then in that case, central government can put a restriction on us that you cannot accept the foreign contribution or the foreign hospitality. And if I have received anything in contravention, okay, if I have accepted any foreign contribution in contravention of any provisions, then central government can put a prohibition on me that you cannot hold it, you cannot transfer it to any other person, and you cannot deal with such foreign contribution. So basically, first thing is you should not have accepted it if it is in contravention of that. If you have still accepted it, then in that case, central government will take the necessary actions on you, and the provisions of Unlawful Activities Act 1967 will be applicable. Unlawful Activities Act 1967 is going to be applicable if we have accepted any foreign contribution which is in contravention. Very clear with this? Yes. So till here basically your conceptual things. Okay, main conceptual section were there till section number 6. Okay, after that also few small sections were there that we have already completed. Now going ahead to the procedural part. Okay, from here basically your procedures are going to start. Now going on to section number 11. Okay, let's go to section number 11 here. Section number 11 talks about registration. Okay, now say for example, if there is any person who is having, who is accepting foreign contribution for some educational purpose, for some religious purpose, for some social purpose, for some cultural or economic program purpose, then I have to obtain a certificate of registration from the central government before obtaining the foreign contribution. Okay, so registration certificate has to be obtained. Very clear with this? Okay, suppose if he has not got himself registered with the central government, then in that case he can obtain a prior permission from the central government, and that prior permission will be valid only for that specific purpose. See, there are two things. If I want to accept, if say for example people like you and me want to accept foreign contribution, then I will have to obtain a certificate of registration from the central government, and then only I can accept the foreign contribution. If I have not got myself registered, then in that case I can obtain prior permission from the central government for accepting the foreign contribution. So ma'am, what's the difference? In case of registration certificate, it is going to have some number of years validity. But in case of prior permission, the permission is going to be valid only for that particular transaction. Yes. Now see, whenever you are applying for certificate of registration, it will be applied for in form number FC3A, and whenever you are going for prior permission for that particular purpose, you have to make an application in form number FC3B. All these things, all these forms plus the affidavits plus fees, etc., you will go and submit it to the central government. Before doing that also, you make sure that you open a Fcra bank account. Okay, a separate bank account only for the purpose of foreign contribution. Very, very clear with this? Yes. So, say for example, you have gone and made an application in form number FC3A or FC3B, and along with all the fees, along with all the necessary documents, along with all the affidavits, etc., you just go and make an application, and plus you have opened the Fcra bank account, you submit the details of that bank account also, and you make an application to the central government. If central government is satisfied, then it will grant you the certificate of registration, or it will grant you the prior permission. I hope I am very, very clear with this, everyone. Yes, and whenever you're going for prior permission, okay, whenever you're going and making an application for prior permission, the fees is going to be 5,000 because it is one-time thing for that particular permission only. And when you're going and obtaining the registration certificate, then in that case, the fees is going to be rupees 10,000. Yes. So, so basically, if any person like you and me, if we want to accept any foreign contribution, we should be a registered person. Okay, and how do we become a registered person? We become a registered person either after taking a registration certificate from the central government or after obtaining the prior permission from the central government. Yes, acha, permission you will get once the central government is satisfied. Okay, registration certificate. Okay, this also generally once you go and make an application, after that within a time period of 90 days. Okay, within a time period of 90 days, central government will either grant you the registration or it will reject. Okay, if it rejects, then in that case it will just communicate it to the reasons, etc., to the applicant, that why it has rejected it, etc. Okay, ordinarily the certificate is granted within a time period of 90 days. Okay, then there are certain people to whom registration certificate and prior permission will not be granted. Obviously, all the defaulting people, all the benami people, all the convicted people, or if suppose central government is of the opinion that there can be, there are chances of diversion of funds, or those people can use the money for wrongful activities, or they will use the money for undesirable purpose, or if that person is obtaining the registration, that person is a fictitious person, or that person is a benami person, etc., then in such cases central government can even say no and it can reject you from granting the registration certificate. But yes, it won't reject until unless it is causing some disharmony to our country, or it is affecting the sovereignty or integrity of our country, or it is affecting the election process in our country, etc. Only then the central government can say that no, you won't be granted the registration certificate. And once a certificate is granted to you, that certificate is going to have a validity of 5 years. See, prior permission is only for that particular purpose. Once that purpose is done, prior permission also gets over. But registration certificate is going to be valid for a period of 5. I hope I am very, very clear with this, everyone. Yes. Okay. Acha. Whenever you go and make an application to the central government for this this thing, what do you say? Your registration certificate, it will ask for some identification documents, and for the purpose of identification documents, Aadhaar can be asked. Right? Now, say for example, if I have got the registration certificate and if central government is of the opinion that maybe I have done some contravention and my certificate should be cancelled, but it is still not sure whether it should cancel it or it should not cancel it, then in that case it can apply the provisions of suspension of certificate, where my certificate is kind of suspended for a temporary period. Okay, till the time the central government conducts the inquiry, etc. For that particular period, my certificate is going to be suspended. And this can be suspended for a maximum period of 180 days plus another period of 180 days. And during this particular period, I cannot accept any foreign contribution. That is one thing. Okay, if I want to accept, take the prior approval of central government, and I cannot even utilize the foreign contribution during this suspension period. Okay, I cannot utilize this foreign contribution during the suspension period, but in that also there is an exception that if you want to utilize up to 25%, you can utilize after prior approval of the central government, but rest 75%, though it cannot be utilized during the period when your certificate is suspended, because government is already having some doubt on me, so it will not allow me to continue my business activities normally. I hope I am very, very clear with this. Acha, now suppose if central government is of an opinion that the certificate holder has violated certain terms and conditions, it has violated any provisions of the act, okay, it is in public interest to cancel it, or it is defunct, dormant since the last 2 years, then in such cases central government can cancel the certificate of registration, certificate which we had taken for the purpose of accepting the foreign contribution. If I am a defaulting person or if I am a dormant person, then in such cases my certificate will be cancelled. Whatever unutilized amount is there, that is going to vest with the central government. Very, very clear with this? Yes? Okay, another thing is, suppose if my certificate is cancelled, that is one thing. Another thing is, suppose if I want to surrender my certificate, then we can even surrender the certificate to the central government, and whatever is the unutilized FC kept with us, that will be managed by the particular authority. I hope I am very, very clear with this. Okay, so once suppose if the certificate is cancelled because you had violated certain provisions, or you had violated the terms and conditions of the certificate, or you were defunct, etc. That was cancellation which central government had done. Acha, one more thing which I have to tell you is, suppose if a certificate is cancelled, then after that you are not eligible for a new permission or a new registration certificate for a period of 3 years. Kind of cooling period is going to be there on you for a period of 3 years. Okay, that is one thing. Another thing is, suppose if you want to voluntarily surrender because you are no more into this acceptance of foreign contribution and its utilization, then you can go and surrender your certificate. Acha, whoever certificate is cancelled or whoever certificate is surrendered, then the unutilized FC which is kept with them, that will vest with the central government. Okay, that is going to be vesting with the central government. Central government can dispose of that unutilized foreign contribution either for the same purpose for which you had accepted the foreign contribution, right? Central government can definitely do so. Then after that, say for example, when you were granted the registration certificate, it had a validity of how many years? It had a validity of 5 years. So can I say after a period of 5 years, there can be a possibility where you would want to renew your application. So you can get it done in advance. 6 months before the month of expiry, you can get the certificate renewed, and the central government will, yes, it will definitely check whether you are still satisfying all the conditions. You are not a benami, fictitious, etc. you are a proper person, and once it is satisfied, it will do the renewal of certificate. Again, for renewal, you will go and make an application. CG will ordinarily grant you within a time period of 90 days, and the renewed certificate will again be valid for another period of 5 years. Very, very clear with this? Yes, sometimes it can so happen that suppose if you could not do the renewal in advance, then in that case, even after expiry, within the next 1 year, okay, after expiry, within a time period of 1 year, you can still go and make an application to the central government on some valid grounds that, sir, I could not get the renewal done, etc. And with a late fee of rupees 5,000, you can get the certificate renewed. Okay, after expiry, within a time period of 1 year, you can still get it renewed. Suppose if there is a delay even beyond a period of 1 year, then you will have to go with a fresh registration certificate. Yes. Okay, so we studied about getting the registration certificate or prior permission. Then my certificate was getting suspended. Then it was getting cancelled. Then we had even got it renewed. Right? All these points we have already studied. Okay, then the last few points here coming to the procedures. First of all, any person who has obtained prior permission or who has obtained the registration certificate and who is going to accept foreign contribution, etc., that person has to maintain a separate bank account called as Fcra account, which we had opened before making an application to the central government, and that has to be opened in the branch of SBI at New Delhi, and this account will be solely used only for the purpose of foreign contribution. See, for receiving the foreign contribution, we can have only one account. Okay, we can have only one account, that is the Fcra account. For receiving, I can receive all my FCs into one account. But if I want to utilize this FC for the designated purposes, I can either utilize it from the same bank account or I can open multiple bank accounts for the purpose of utilization. So the point here is, for receiving FC, there can be only one account, but for utilizing FC, there can be multiple Fcra accounts. Yes, we will also intimate to the central government about receipt and utilization, and even the bank will report to the central government about our transactions on foreign contributions. So the government is going to get the reporting from two places. One is from us and another one is from the bank. Very clear with this? Yes. Okay, then after that, the next one is one more thing that we have to submit. Okay, one more thing that we have to submit is a report in form number FC4, which is going to deal with the income and expenditure account, only relating to foreign contribution, income and expenditure account, receipt and payment account, and balance sheet for every year starting from 1st April to 31st of March. So this we have to intimate it to the central government, plus this annual return in form number FC4. This is going to also show how much FC we have received and how much FC we have utilized. Yes, so just like I told you, we are also going to do the reporting to the central government. We can say in form number FC4, we are going to do the annual reporting. And again, the banks are going to do the reporting to the government that so and so client has received FC of so and so amount, he has utilized FC of so and so amount, and bank will intimate it to the government within 48 hours from the time of transaction. So it is almost we can say it is almost real-time reporting which is done by the bank, and then we will also report to the central government about our transactions of foreign contribution. Right? So this was talking mainly about the bank accounts. Now talking about the books of accounts. Every person who is a registered person who has obtained the prior permission, he will have to maintain a separate set of books of accounts which shows how much FC was received, how much FC was utilized. Special audit in case of this accounts can be ordered by the central government, and the authority can enter your premises and that person can audit the books of accounts. For entering the premises, the time is before sunset and after sunrise. During this particular hours, he can enter your premises and he can get the books audited. Okay, this is a surprise audit, or we can say this is a special audit which has been done. Right? Now say for example, during search, during seizure, during audit, etc., if they come to know that some FC is liable for confiscation, or any article, thing, currency, etc., is liable for confiscation, then for that particular purpose adjudication will happen. That is, authority will finally determine whether it should be confiscated or not, and then it will be confiscated. Okay, who will do this adjudication? Adjudication will be done either by the session court, or it will be done by an officer not below the rank of assistant session judge, ASJ. ASJ handles small matters, that is any where the value does not exceed rupees 10 lakhs. There the adjudication means determination whether it is liable for confiscation or not, that will be done by assistant session judge. And for all the other matters, or for any other matters, the adjudication can be done by the session. Very clear with this? And once before they pass the final order for confiscation, obviously the assessee should be given a reasonable opportunity of being heard. If I am aggrieved by the order of assistant session judge, or if I am aggrieved by the order of session judge of confiscation, then in that case, if the order was passed by the session court, I can go and file an appeal before High Court. If the order was passed by the assistant session judge, then I can go and file an appeal before the session court, and this appeal can be filed within 1 month plus 1 month. If I am aggrieved with what? If I am aggrieved with this confiscation thing. Okay, if I am aggrieved with this confiscation thing, then I can go and file an appeal to these particular authorities. And if I am aggrieved by any other order of the central government, example, central government did not allow me the foreign hospitality, or it did not allow me to accept the foreign contribution, then for all the other cases, I can go and file an appeal before the High Court within 60 days of the CG's order. Okay, so confiscation appeal was different. That was session court and assistant session judge. Other appeals is different, where we can go and file an appeal before the High Court. I hope I am very, very clear with this. Yes, and after this, from here, that is right from section number 30 till the end, all your provisions, okay, all your provisions are your one-time read provisions, which you can just read, but the conceptual things, okay, conceptual and important procedural things get over here. At least you have to do this much from this particular chapter, right? So the entire chapter is talking about two main things. One is foreign contribution and the other one is foreign hospitality, and then they talk about their procedure. Yes, okay. Okay, so let's start with the next chapter, that is the SEBI Act. Okay, we are going to take up the SEBI Act. SEBI LODR, you have to do it on your own. SEBI Act, we'll do it together. So first of all, objectives of the Securities Exchange Board of India Act. What is the objective of this particular act? Yes. So since it involves your securities market, it involves your investors. So the major object is going to protect the interest of the investors who are dealing in the securities market, to develop the securities market, and to regulate the securities market. Right? These are the very important objectives of the SEBI Act. Then whoever are dealing in the securities market, that is your stock exchanges are there, mutual funds are there, merchant bankers are there, we are going to regulate them. We are going to see whether the activities done by them is proper or not, whether they are involved in fair dealings or not. We are going to establish a code of conduct for the intermediaries who are there in the securities market. All these are the work of the SEBI Act. Right? Now, when we talk about this association, or when we talk about this institution, that is the SEBI, so SEBI is incorporated in form of a body corporate. So it is having a perpetual succession. It is going to have a common seal. It can hold assets in its own name. It can sell off assets in its own name. It can sue any other person, or it can be sued by any other person. So it is normally just like a body corporate. Then who is going to run this SEBI? Okay, so we have certain people who are sitting in the management of the SEBI. We are going to remember it as 1215. Okay, we are going to remember it as 1215. One chairperson, two members from the central government, that is the union ministry, one person from the RBI official, and 5 other members. Out of them, 3 of them should be whole time. So this way 1215. Okay, these many members are going to sit in the management of the SEBI. In this also mainly the chairperson and whole time members. Okay, chairperson means the people who are eventually going to control it. who are going to work for it whole time. So chairperson and the whole time members, their tenure will be for a period of 5 years, maximum up to 65 years of age, and they can be reappointed by the central government. They should be such people who are not financially interested in the management of the SEBI. They do not have any pecuniary monetary interest in the SEBI. They should be such people who have the ability, integrity, knowledge, skills in the fields of law, finance, accounts, economics, and all those things. Right? Then these people, the chairperson and these 5 other members, these people can be removed or they can even resign. Okay, there are 2 different things, right? One is they can be removed. Either they can be removed immediately by giving them 3 months, next 3 months salary and allowances, or they can be removed by giving a 3 months notice in writing. Okay, so central government can remove them. Either they can be removed immediately by paying them the next 3 months salary and allowances, or they can be removed after giving a 3 months notice in writing. Right? This is the what do you say, option available for removal of the members of the SEBI. Then there should be some reason for their removal, right? What should be the reason for removal of the SEBI members? If they are insolvent, unsound mind, if they are convicted of any offense involving moral turpitude, or if they have abused their position. If they have abused their position, then in such cases they can be removed after giving a reasonable opportunity of being heard. Okay, this was talking about removal. What if they want to resign? If they want to resign, then in such case, they can resign after giving 3 months notice in writing. They cannot say that I want to resign today, give me 3 months salary and allowances. No. They can resign after giving 3 months notice in writing. Very clear with this? Just like every other company is having its management meeting, same way SEBI can also conduct meetings from time to time, and the members who are there into the SEBI, they can sit, they can attend the meeting. But yes, any person who is going to attend that meeting, and if that person is having some interest, either direct interest or indirect interest in any matter which will be discussed in that particular meeting, then such member should not participate in the SEBI's meeting. Very clear with this? Yes. Acha, similarly, say for example, if there is any vacancy in the office of SEBI because of maybe removal, maybe because of resignation, etc., then that will not be considered as a defect in formation of SEBI. Suppose if someone is removed today, then it will take time to replace that particular person. So rest of the members who are sitting in SEBI, they can continue to take the decisions, and the vacancies will not invalidate any of the proceedings. Yes, then going on to another provision which talks about powers and functions of the SEBI, which is simple but at the same time which is important. Now, first of all, it is the duty of the SEBI to protect the interest of the investors, to regulate the securities market, to promote the development of the securities market, and such other things. Right? There are some specific powers which are vested only with the SEBI. Just like having a control over the stock exchanges, regulating the working of the intermediaries, prohibiting wrongful activities which are happening in the securities market. You must have heard about insider trading, prohibiting insider trading, collecting fees from the people who get registered with the SEBI, etc. These powers are there solely with whom? These powers are there only with the SEBI. Okay, then at the same time, SEBI also has the power to conduct inspection of books of accounts. Okay, inspection of books of accounts, inspection of registers, etc. of any particular person who comes under the purview of SEBI. But there is a special point here. If SEBI wants to conduct the investigation of a listed company, okay, or a proposed to be listed company, then it can be done only if the SEBI has reasons to believe that that particular company is engaged into insider trading and fraudulent or unfair trade practices. Means you cannot simply go and touch a listed company and propose to be listed company unless there is a doubt of insider trading or fraudulent unfair trade practices. Okay, then as we had done in PMLA chapter, SEBI has got all the powers as vested in a civil court. Okay, so whatever powers are there with civil court, same vest in the SEBI also. So whenever any proceedings are going on in SEBI, it will be considered as if it is a judicial proceedings only going on in a civil court. Similarly, say for example, we'll study that in section number 11C, that SEBI also has got the powers to order investigation. Say for example, when the investigation is going on or when the investigation is completed, then in such cases, SEBI also has the powers. Suppose if SEBI comes to know about some wrongful things during investigation, then it can suspend the trading in the recognized stock exchange. It can attach the bank account and properties of any person which was involved in that wrongful doing. It can stop any person from accessing the securities market. Then it can suspend any office bearers of the recognized stock exchange and all these things, right? So these powers are there with whom? These powers are there with the SEBI once it has started doing the investigation or when the investigation got over. I hope I am very clear with this. So these are some powers of the SEBI. We studied about some specific powers of the SEBI. We studied about the inspection powers. Investigation we will study in section number 11C. What can be done after investigation, that we have already studied, right? Then SEBI also has the powers to direct the companies to put proper information in their prospectus. Whenever a company comes up with an issue, it has to issue prospectus to the general public for soliciting money from them. So what things should be disclosed in the prospectus, what extra things should be disclosed by certain classes of companies, all those things can be regulated by the SEBI, either by some general regulations or by some specific regulations. Very clear with this? Yes. Then after that we have got, since we are there into powers only, so I am taking up this. SEBI, once it conducts inspection, inquiry, etc. and if SEBI is of the opinion that it is necessary to issue some directions. Okay, SEBI should issue directions maybe to RSC, or it should issue directions to some listed company, or it should issue directions to any other intermediaries who is registered with the SEBI. Then SEBI can issue such directions, and SEBI can even impose penalties on them, and SEBI can even do recoveries from them of any wrongful gain that they have earned. Okay, SEBI has got those powers. It can issue directions, it can levy penalty, and it also has the power to direct any person who has made profit or who has avoided losses by contravention of the provisions to pay an equivalent amount. That is, we are recovering the wrongful profits that he has done, right? If SEBI is satisfied that it is in the interest of the investors, or to prevent some affairs which are being conducted in a wrongful manner, or to secure proper management of SEBI, if SEBI is of the opinion that it is necessary to issue directions, then SEBI can do so. It can be issued on any company, be it a listed company or proposed to be listed company, or if any other person who is either registered with the SEBI or who is associated with the securities market. SEBI is basically sitting at the top. SEBI can issue directions on all these people who are associated with the securities, right? After the inspection is conducted, after that, if SEBI is of the opinion that we should even conduct investigation, that is, we should do some detailed checking of some particular matters, then SEBI also has the powers to do that. If the activities are being conducted in a detrimental manner, or if someone has violated the provisions of the law, etc., then SEBI can appoint an authority called as investigating authority. Okay, SEBI can appoint an authority called as investigating authority to investigate the affairs. Okay, now whenever investigating authority enters the premises of any particular person to do the investigation, then in such cases SEBI, whenever SEBI, the investigating authority enters into any premises, then it is the duty of the manager, officer, employees of that particular company to provide the necessary assistance to the investigating authority, and to provide all the necessary cooperation to furnish the books, papers, whatever they ask for it. An investigating authority can take the books into their custody for a period of 6 months for the purpose of conducting of investigation. Means for the purpose of checking, the investigating authority can keep with themselves for a period of 6 months. If they are not seizing, it, they are just keeping it into custody for a period of 6 months. Very clear with this? Yes. Sometimes it can so happen that investigating authority, while doing investigation, if it is of the opinion, that they can, the company or that particular person whose investigation is going on, they can alter the books of accounts, they can falsify the books of accounts, they can secret the books of accounts, they can destroy the books of accounts, then for that purpose, investigating authority, after taking the prior permission from the special court or from the magistrate, it can enter the premises, it can search that place, and it can seize the books of accounts so that they cannot tamper with the books of accounts. There's a difference. On the previous page, we studied about custody. That was they had taken into custody for the purpose of doing investigation. Here, they are seizing the books of accounts so that we do not alter it. And this impounded books of accounts, these seized books of accounts can be kept with us till the end of investigation. That custody thing was valid for a period of 6 months. The seizure thing you can keep with yourselves till the end of investigation. Very, very clear with this? Yes. Okay. Whenever the SEBI comes to know, cease and desist proceedings, whenever the SEBI comes to know that we have violated some provisions or we are likely to violate certain provisions of act, rules, etc., then SEBI can pass a cease and desist order on us. Cease and desist order means, cease means stop doing that violation, desist means do not do it again. Okay, cease means stop and desist means do not do it again. Very clear with this? But cease and desist order can be passed on a listed company or proposed to be listed company only if they are, we have a doubt of insider trading or market manipulation. So this similar point we had studied for inspection also. Basically, their purpose is do not go and simply harass a listed company or a proposed to be listed company. Yes, you can go to them only if they are involved in insider trading or market manipulation or unfair trade practice. Very clear with this? Yes. Okay. Then till here, basically, your particular part gets over. We have got the procedures only coming up after this. Okay. Now, section number 12 talks about the registration certificate. That is who all can get themselves registered with the SEBI. Okay. So they have given a list basically. You can talk about the stock brokers, you can talk about the sub brokers, you can talk about the merchant bankers, investment advisors, portfolio managers, underwriters, then your custodian, then your FIIs, then your credit rating agencies or any other individual, or you must have heard about alternate investment funds, REITs, business trust, etc. Since they also issue units, right? Since they also issue units which get listed, so they have to get themselves registered. They have to get themselves registered with the SEBI, and SEBI will issue them a registration certificate. Once SEBI issues them the registration certificate, they come under the purview of SEBI. Now SEBI can exercise its powers upon so and so persons, right? Okay, then after that, the section number 12A is very, very simple. It simply says that no person should involve himself into insider trading. No person should involve into any activity which operates as a fraud. They should not deal with any non-public information and all those things. Basically, it is just telling that don't do any wrongful things. Okay, that is told by section number 12A. Then from section number 13, pure procedures are going to start. First of all, it talks about SEBI, okay. So SEBI also requires funds for its operational purposes. So from where will the SEBI get money? SEBI will get money by way of grants from the central government. For that particular purpose, SEBI maintains a fund called as SEBI General Fund. Okay, SEBI will maintain a fund called as SEBI General Fund. So we'll get the money from grants from the central government. It can levy fees from the people to whom it is granting the registration. Then for meeting the expenses like salary, allowances, paying to its management, incurring certain expenses by the SEBI, that is inquiry expenses, investigation expenses, everything will be met from this SEBI General Fund, right? So SEBI will also maintain its books of accounts after consultation with the CAG. It will get its books of accounts audited by the CAG, and the expenses will be obviously borne by the SEBI only. Once the accounts are audited, after that the certified accounts and the audit report copy, etc., will be forwarded to the central government, and central government will lay it down before both the houses of parliament, right? Okay, then after that you have got certain penalties coming up here. There are many penalties. Obviously, we are going to do the important ones. I have also made a list of important penalties given at the end of the chapter. So say for example, first of all, this 15A here is very, very important. So if any person was required to furnish any information, report, documents, registers, etc. to the SEBI, and it fails to do so, or it submits any incorrect information, incomplete information, or it does not furnish at all, then in such cases, that person will be liable for a penalty minimum rupees 1 lakh, which can go up to 1 lakh each day, but maximum cap limit of up to rupees 1 crore. Right? This is the penalty for non-furnishing the information, return, documents, books of accounts, etc. Right? Acha. Similarly, there is a section here talking, section number 15F. This is again super duper important. I have already written here as important section. So this penalty is specifically applicable in case of stockbrokers. Okay, if your ICAI asks a question, you will refer it in question bank, you will get it. If ICAI asks you a question about this stockbrokers, penalty on stockbrokers, you have to directly write about section number 15F without worrying about any other section. Right? So suppose if a stockbroker fails to issue a contract notes to its clients in the specified form, then penalty minimum rupees 1 lakh, maximum rupees 1 crore. Right? If a stockbroker purchases on behalf of its client but does not credit the stock to his demat account, or he sells the stock but he fails to transfer the proceeds to the client, then in that case minimum rupees 1 lakh, which can go up to 1 lakh per day, maximum up to rupees 1 crore. This is the penalty applicable. And if a stockbroker is charging excessive brokerage, then minimum rupees 1 lakh, which can go up to 5 times the excessive brokerage charged, whichever is higher. Okay, minimum rupees 1 lakh or 5 times the excessive brokerage charged, whichever is higher. Okay, so 15F, just remember this 15F is specifically very, very important, where we spoke about the penalty in case of default, which is done by the stockbroker. Yes. Okay. Then next section, next again very, very important section, that is penalty for insider trading. Okay, penalty for insider trading. If any person is doing the trading on the basis of any unpublished price sensitive information, or he communicates the information which he should not have communicated, or he convinces someone else or counsels someone else to deal into securities on the basis of that insider information, then such person will be liable for a penalty minimum rupees 10 lakhs, which can extend up to 25 crores, minimum 10 lakhs, which can go up to 25 crores or 3 times the profit earned out of insider trading, whichever is high. Right? This is the amount of penalty which will be applicable in case a person is convicted of insider trading. I hope I am very, very clear with this. Yes. So these 3 sections, out of important ones also, I have given you super important ones. Section number 15A, section number 15F and section number 15G. These 3 sections are going to be very, very important. And who is going to do the adjudication of this penalty? These penalties will be adjudicated by the SEBI. Okay, for this purpose, SEBI appoints an authority called as the adjudicating officer, who is going to determine whether the default has been done or not after giving a reasonable opportunity of being heard. And then in that case, the adjudicating authority will impose the penalty. Okay, now how much amount of penalty should be imposed? How much amount of punishment should be imposed? That depends on certain factors, like how much loss has been caused to the investors by doing the default, right? Or what is the repetitive nature of default, like how many times the default has been done, or how much amount of, if quantifiable, what is the unfair advantage taken, or what is the undue advantage taken by doing this particular default, by considering some factors. Suppose if it is a repetitive nature, this person has been doing it many a times, then the penalty can be levied on the higher side also. Because at some places we have got the range of penalties, right? 1 lakh to 1 crore, etc. So how much to levy? Should it be levied on the lower side? Should it be levied on the higher side, etc.? That will be determined. That will be determined by this adjudicating authority after considering the required factors. Okay, and whatever penalty we pay, or whatever penalty is collected by the SEBI or by the adjudicating officer, that goes to an account called as Consolidated Fund of India. Penalties will never go to the SEBI General Fund. The fees which is levied by the SEBI, that goes to the SEBI General Fund. But penalties go to Consolidated Fund of India. Yes. Acha. Now, similarly, whatever penalty has been imposed on us, for that SEBI can allow us to do some settlement. That is, our penalty can be reduced, and SEBI will tell us to pay a reduced amount if it allows us to go for settlement. It will check the gravity, it will check the nature of default, it will check the impact of default, and then it will decide whether it will allow us some settlement. Settlement means, say for example, if SEBI had levied a penalty, or if adjudicating officer had levied a penalty of, say for example, 50 lakh rupees, and if I go and make an application to the SEBI, sir, please allow me some settlement, then SEBI may reduce it, say for example, to 30 lakh rupees. So SEBI will tell me, pay me immediately 30 lakhs and I will settle your penalty. Okay, so basically reducing the amount of penalty, that is the meaning of settlement, and whatever 30 lakhs I paid after settlement, even that will go to Consolidated Fund of India. If suppose I would have paid 50 lakh rupees of penalty, even that would have gone to Consolidated Fund of India, and even the settled amount, the reduced amount, will go to the Consolidated Fund of India. I hope I am very, very clear till here. Yes. So till here a particular part gets over. Now listen, now let's go to the appeal provisions. Now whenever any order is passed by the SEBI, can we be aggrieved by that particular order? Yes, we can be. If we are aggrieved with that particular order, then in that case we can go and file an appeal to the SAT. Okay, we can go and file an appeal to the SAT, that is Securities Appellate Tribunal. Okay, we can go and file an appeal to the Securities Appellate Tribunal. Ma'am, what is this SAT? So this SAT is basically just in form of a bench. It is going to have a presiding officer, a important like chairperson kind of a person whose name is presiding officer. He is going to sit there, and it is going to have some number of judicial members, and it is going to have some number of technical members. Okay, judicial members means who have got the knowledge of law, technical members means who have got the subject knowledge. Okay, so while the SAT is constituted, you have one presiding officer, you have some number of judicial members, you have got some number of technical members sitting up there. Then when a particular case is going to be handled by the SAT, then a bench is formed. A bench will be constituted by the presiding officer. It is going to have one judicial member, one technical member, at least one member of both will be there. Okay, then this presiding officer and judicial member, technical member, they are going to have some required qualification. Presiding officer will be such a person who has been a judge, who is or who has been a judge of Supreme Court, or a Chief Justice of High Court, or a judge of High Court for a period of 7 years. 7 years is applicable only for the last point, that is judge of High Court for a period of 7 years. Then in such a case, that person can act as a presiding officer. Okay, if you want to become a judicial member, then if you are or you have been a judge of High Court for a period of 5 years. Okay, and if you want to become a technical member, then either you should be having 15 years of knowledge and experience in these fields of securities market, or you have acted as a secretary or additional secretary to the Government of India. Then you are eligible to act as a technical member. Yes, Acha, whenever these people are appointed, their tenure is going to be of 5 years, maximum up to 70 years of age. Okay, once they are appointed for a period of 5 years, they can be reappointed for one more term of 5 years, but they can act maximum up to 70 years of age. Yes, even these people. Earlier we were studying everything about SEBI. Now we are studying everything about the SAT. So the people who are sitting under SAT and the people who are working under SAT, even they will be paid some salary and allowances because they are doing the work, right? Now, say for example, if there is any death of presiding officer which has happened, then in that case, for the time being, the senior most judicial member will act as a presiding officer till the time we appoint a new presiding officer. Okay, see, just remember one thing, presiding officer is also a member from judicial member only, and judicial member is anyway a judicial member. He is having the law knowledge. So whenever there is a vacancy in the place of presiding officer, we are going to take a person from the judicial member. Okay, then even these people, they can even resign or they can even be removed. Okay, if they want to resign, they have to give 3 months notice in writing. So they have to continue in their office for a period of at least 3 months, or till their successor enters upon the office, or till his tenure gets over, whichever is the earlier. Okay, 3 months from the 3 months notice, or till my successor, the next person, enters upon the office, or if my tenure is getting over, whichever 3 dates, whichever is earlier, till that time I have to continue in my office. Okay, similarly, if suppose I am insolvent, or I have become of unsound mind, or if I am convicted of any offense involving moral turpitude, or if I have abused my position, or if I have acquired any interest, then in such cases I can even be removed, right? I can even be removed by the central government after an inquiry by judge of Supreme Court has been conducted. After that, I can be removed. Very, very clear with this. These judicial member and technical members are the cream people who are sitting in the management of the SEBI, in the management of SAT. Okay, apart from that, we are also going to have some staff members sitting in the SAT who will be discharging the administrative activities under SAT. Okay, so this is how a SAT is constituted by the central government. And what was the purpose of SAT? The purpose of SAT was to anyone who is aggrieved by the order of SEBI, that person can go and file an appeal to the SAT. Okay, so if we are aggrieved by the order of SEBI, or if, say for example, we were aggrieved by the penalty order of the adjudicating office, then we can go and file an appeal to the SAT within 45 days. Plus delay can be condoned for any particular period if there are any sufficient grounds. Then SAT will give the reasonable opportunity of being heard to all the parties. It may confirm, modify or set aside the orders, and it should try to dispose of the appeal as soon as possible within a time period of 6 months. Right? Within a time period of 6 months, it will try to dispose of the appeal. Again, SAT is going to have similar powers as vested in a civil court, right? In SAT also, whenever the decision is taken by judicial member or technical member, the decision has to be taken by majority. Okay, suppose if there is the equal majority, then in such case, we will either call the presiding officer who will act as a third member, or we will appoint a new person, and then we will take a revised majority, and then the decision will be taken. Same thing we had studied in PMLA chapter also. Right? Suppose if we do not know how to go and make the representation before the SEBI or before the SAT, then you can appoint the legal representative for doing so. Civil court is not going to have any involvement in between, because already authorities have been designated under the law. So we cannot even go and approach the civil court, and even the civil court cannot interfere in between for passing any orders under the SEBI. Okay, so first level of appeal was when we went and filed an appeal before the SAT within a time period of 45 days. Suppose if we are now aggrieved by the order of SAT, then second and last level of appeal is we can go and file an appeal to the Supreme Court within a time period of 60 days. Within a time period of 60 days, plus this delay can be condoned, but by a maximum period of 60 days only, but only on question of law. Now we have got Supreme Court, right? So we can go only on question of law. I hope I am very, very clear till here, everyone. Yes. Okay. So now, then after that, you have got some general, very, very general and very, very simple provisions coming up. Central government. See, you have got all the persons who are associated with the securities market. Above that, you have got the SEBI, and above SEBI, you have got the central government. So can central government give directions to the SEBI? Answer is yes. If SEBI is not functioning properly, or if SEBI is unable to discharge its functions properly, then CG can even supersede the SEBI. It can take over the management of the SEBI if it is of the opinion that SEBI is not discharging its functions properly, and it is necessary to do so in public interest. Right? Then after that, coming to section number 27 directly. In between, you can just read these provisions. These are just one-time read provisions and very general ones. Before we start with section number 27, some things that I had taught you in the PMLA chapter already. See, whenever any penalty etc. is imposed, then in such cases, adjudicating officer was appointed by the SEBI for adjudicating the penalty. Okay, whenever some offense has been done under the SEBI Act, for that purpose, the trial will be done by the special court. The same special court which we had studied in the PMLA chapter, that is the session court. Okay, that particular court will come into picture. It will announce the fine, imprisonment, whatever is there. So for penalty, it is going to be the adjudicating officer or the SEBI. But for offences, it is going to be the special court. right? Acha, what if this section number 27 also we have done it in PMLA, contravention by the companies. What if any company has convicted any particular contravention of this particular act? Then who will be liable? Then the person in charge of the company will be liable, right? But if he proves that he has exercised due diligence and he was unaware about that particular offense, then he can be excused, right? Acha, whenever any penalty is imposed by the SEBI or by the adjudicating authority, are we supposed to pay that penalty? Obviously, ma'am, we are supposed to pay that penalty. So for that particular purpose, the recovery officer will issue a certificate called as recovery certificate. Okay, recovery officer will issue a certificate called as recovery certificate, and that amount can be recovered from the defaulting persons either by attaching his movable property, immovable property, attaching his bank account, detaining that person in prison, and then a person called as manager will be appointed or a receiver will be appointed to manage those properties. Very clear with this? So recovery of penalty amount can be done in so and so manner. Suppose if during these SEBI proceedings, suppose if a person passes away, then in that case his legal representative will be liable to pay the amount as if that person never died. Okay, that person will be liable. But one important thing is that legal representative will be liable only if penalty was imposed before the death of the deceased person. If already that deceased person was convicted for this particular penalty, then only we can recover the amount of penalty from the legal representative, and legal representative will be liable only up to the amount of the estate that he has inherited. Means the legal representative will not be personally liable. Okay, he will be liable only up to the amount up to which he has inherited the estate from the deceased person. I hope I am very clear with this. Yes, and from section number 28, see, it is just a one-time read. You need not do it one day before the exam. You can just read it once now, but do not do it one day before the exam. Right? And then at the end, I have given you the summary table for the important time period for appeal. For appeal, we just have two time periods. One was before the SAT and the other one was before the Supreme Court. And very important penalties have been given again here on the next page. Yes. So SEBI is actually very small. First half of the chapter was basically talking about the SEBI provisions. Then they spoke about some SAT provisions, and then they had the common procedures which came into picture. Yes, so just read the chapter 1. The chapter is very simple, and after that, as already told you before, you have to complete the LODR regulations. Yes. Okay. Okay, so let's start with a super quick revision of Insolvency and Bankruptcy Code 2016. The code was introduced in the year 2016. Before that, Lok Sabha approval was obtained in December 2015. We got the approval in Rajya Sabha in May 2016, and finally the President's assent, President's approval was received on 28th May 2016, from when this code became applicable. Okay, so basically the IBC came into picture from 28th of May 2016. The code is applicable to whole of India now, including the state of Jammu and Kashmir. When we talk about three terms, that is insolvency, bankruptcy and liquidation, let's identify the major differences between all the three. Insolvency is the place, or insolvency is just state when we know that we are unable to pay our debts, or when our liabilities or when our outside liabilities exceed the assets. Okay, our outside liabilities exceed the value of the assets. Only we know that we have become insolvent. If we go and make an application to the authority, okay, this is the dictionary definition, distinguishment between all the three terms. When we go and make an application about our insolvency to the necessary authority, then in that case, that leads to bankruptcy, and the authority declares us as bankrupt. And if there is a winding up of a company, or if there is a close down of a company, then in that case, it leads to liquidation, or that is called as liquidation, where we sell off our assets and pay off our liabilities. Okay, now listen, just try to understand in case of individuals and other persons. Okay, basically in case of non-corporates, insolvency is known as bankruptcy. Okay, for the purpose of IBC, in case of individual and other persons, insolvency is known as bankruptcy, and in case of corporates, it will be called as corporate insolvency. Okay, in case of corporates, it will be called as corporate insolvency. Now, if insolvency is untreated, if you do not treat it, if you do not try to resolve it, then in case of individuals, it is again going to lead to bankruptcy. Just remember, in case of individuals, we just have one important term, that is bankruptcy. In case of individuals, it leads to bankruptcy. And in case of corporates, if it is not resolved, then it is going to lead to liquidation. In our syllabus, we are just going to study, we just have the provisions relating to corporates. So in corporates, there are two options. In case of corporates, there are two options in case of insolvency. Either it can be resolved, either there can be a recovery and resolution, or it can lead to, if it is untreated or if there is no possible option available, then in that case, it will lead to liquidation. That happens in case of corporates. Okay, so in case of corporates, first of all, the insolvency is called as corporate insolvency, and there can be two options to that insolvency. One is recovery and resolution, and the other one is going to be liquidation. Okay, then what was the motive or what was the purpose of making or coming out with this particular code? So we had many laws which was talking about this insolvency. So we consolidated the laws, we amended that particular law, and we made a new code out of it. Okay, after that, the most important thing was the time thing. That is the time period within which we had to resolve any particular person or we had to liquidate a particular person. So they fixed a time period under this particular code. They established a very important body, or they established a very important board here who is going to regulate the entire process, that is called as the IBBI, which stands for Insolvency and Bankruptcy Board of India. They wanted to resolve that particular corporate. They wanted to recover that particular corporate so that there is no loss ultimately to the shareholders of the company, so that their value increases, so that if IBC is able to help people recover from these insolvency thing, it will promote entrepreneurship. More and more people would like to come into this. If the defaults of the banks, etc., are getting recovered on time because of insolvency, then that will lead to lower interest rates and more funds being available in the market because of no default, or because if we are able to recover the money from the corporate debtors. And ultimately, it is going to be favorable to all the stakeholders. With this particular intention, they started with this particular code, or they enacted this particular code. This was called as a code. Because it was consolidation of many laws together, or it was consolidation of many insolvency provisions taken from different laws together. And that's why it was called as a code and not as an act. Now, what makes it different? What makes it different from the earlier laws? The most important thing is, here you are going to have, first of all, a most important body, that is your Insolvency and Bankruptcy Board of India, which is going to regulate the entire insolvency process. Then after that, you just have one authority to whom you are supposed to go, that is the adjudicating authority. Then after that, even once you go to the adjudicating authority, after that, if you want to go for appeals, the chain of authority is going to be a single chain only. That is, you'll go to the adjudicating authority. Example, in case of corporates, you go to the NCLT. For filing the appeal, you'll go to the NCLAT, and then you go to the Supreme Court. So first of all, there is going to be a one window clearance. If you want to go for IBC, you have to go to the NCLT. And after that, there is just going to be one chain of authority, which is already well defined in this particular law. Then after that, for maintaining the details, or for maintaining the data bank of all the defaulters, so that if any person wants to do any transaction with the defaulters, they can first check whether his name is mentioned in the data bank called as information utility. So in IBBI, we are going to maintain a centralized database called as information utility, in which we are going to maintain all the details about the defaulter, so that if any person wants to do transaction with them, we can first check their past records or credibility from the information utility. Then all insolvency relating provisions have now been consolidated into one, and because of that, what has happened is, those provisions, since we have taken all the provisions into IBC, the respective insolvency provisions from other laws have been totally deleted. So many other laws have been withered away, means we have totally got rid of the other provisions, other laws which were talking about insolvency, multiple laws which were talking about insolvency, and now everything has been covered into a single law. when we study later on section number 53, when we are going to reach to section number 53 in this particular section, at that time we'll come to know in this IBC priority has been given at the time of repayment. Priority has been given to employees and workmen of the company as compared to the traditional method where we used to give priority to the government taxes, preferential creditors and all those people. The law is very clear in respect to the procedures that has been given, and the best part of the law is section number 12. The best part of the law is section number 12, which gives a time period, within which you have to resolve the case. And if the case is not resolved, in those many number of days, then in that case, we are ultimately going to take ourselves towards liquidation. Okay, so time is one thing, authorities is one thing, clarity is one thing, single law for every problem is one thing. These are the major distinguishing features of IBC when you compare with any other laws. Structure of the code is very simple. The code is talking about, it will talk about the basic things, that is preliminary things. It is going to talk about the CIRP, that is Corporate Insolvency Resolution Process, which talks about the insolvency process for corporate person. Ma'am, what do you mean by corporate? Corporate is nothing but, for the purpose of this chapter, corporate is nothing but company as well as LLP. The third part is going to talk about other people, that is individual partnership firms and even other persons. The fourth part is going to talk about some procedural aspects, like fourth part talks about your insolvency professionals, the people who are going to work under this act. It is going to talk about their institute, that is insolvency professional agencies. It is going to talk about information utility, that is the data bank, how it is to be maintained and all the details about it. And the last part is going to be your miscellaneous part, which is going to contain or which is going to talk about all the penalties. Now, let's try to understand the authorities and the people who are involved in this particular law. At the top, you have got the IBBI sitting. IBBI was nothing but the Insolvency and Bankruptcy Board of India, who is the most important body, in your IBC. Within IBBI, first of all, you have got the insolvency professionals. These are the professional persons who have cleared the examination and who are going to do the most important work in this particular chapter, who are actually going to do the groundwork. These people are registered as a member. Okay, these people are registered as a member of insolvency professional agencies, which is nothing but just like your institute. Okay, just like we register ourselves as a member of the insolvency professional agencies, similarly, even IPs get themselves registered as a member of insolvency professional agencies. Insolvency professional agencies work under the purview of IBBI. It does not interfere in the entire process. No, it is not going to come anywhere in the entire process, but it is going to regulate the IPs. Just like ICI regulates its members, similarly, IPAs are going to regulate the IPs. The third person who is going to be regulated by the IBBI is the information utility. Information utility is nothing but the data bank. Just like I mentioned, it is nothing but the data bank in which we are going to maintain all the details about the defaulters. Defaulters means the corporate debtors, so that if at any point of time we require any information, we can just approach the information utility and we can seek information from there. Next person who is going to be the most important person in the entire chapter is going to be the adjudicating authority, who is going to supervise the process. Like the IP was working, the insolvency professional was working, he is going to work under the supervision of the adjudicating authority. Ma'am, who is this adjudicating authority? He is the person who is going to determine the default. He is the person who is going to give the final approvals and all those things. But for corporates, the adjudicating authority is different. For non-corporates, the adjudicating authority is different. For corporates, it is NCLT, NCLAT and the Supreme Court, which we had mentioned in that chain of authority. For non-corporates, it is going to be the DRT, DRAT and the Supreme Court. These are the authorities. So the first person to whom we are going to approach in case of corporates is going to be NCLT, and in case of non-corporates, the first person to whom we are going to go and approach is the DRT. Rest, both the levels of authorities are going to come in case of appeals. Okay, a few important things about IBBI, IPA, IPs and the information utility. Let's try to recollect those. The most important one is IBBI. IBBI was the most important board which was formed under the law. It is going to have its head office at New Delhi. It was formed in October 2000, on 1st October 2016. It is in the nature of company. So it is a body corporate having common seal, having perpetual succession. It can hold assets in its own name, normal features of a company. and the board is going to tell the IPA, it is going to tell the IP, it is going to tell the information utility to discharge its functions. Okay, who all are going to come and sit in the IBBI? So I had told you this as 1315. If you remember, 1315 persons are going to come and sit there. Ma'am, what is this 1315? So one chairperson, 3 members from the Office of Central Government to represent 3 different ministries, if you recollect, Ministry of Finance, Ministry of Corporate Affairs and Ministry of Law. One person who will be nominated by the RBI, and then we are going to have 5 other members from 5 other members who will be nominated by the central government, and one condition there was, out of these 5, out of the last 5, at least 3 of them should be whole time. Okay, and there is a by default assumption that the chairperson of the IBBI, the first person, even that person is a whole time person. Then after that, when we talk about the insolvency professional agencies, whenever I use the word IPA, okay, IPA means you have to just remember it as the institute. Okay, the main purpose of establishing this IPA is just to enroll IPs as its members and to regulate them. Okay, it is going to make sure that it provides for the code of conduct, it provides for the code of ethics for its members, it is going to promote its own growth, it is also going to make sure that the growth of its members are promoted, it is going to promote professional development of itself, of itself plus its members. It is going to make the bylaws for its IPs, which the IPs have to fulfill. Suppose if any person has any complaint against the IP, if suppose any person has any complaint against the IP, then that person can go and file that complaint before the IPA. IPA is going to monitor its own members, just like ICI monitors its members. Similarly, IPA is going to monitor its members. It is going to gather information about their performance. If there is any malfeasance happening, if there is any wrong thing that is happening, then it will take action against its members. So IPA is not going to basically interfere in the process. Okay, it is just going to have a look, or it is just going to control its members, because its members are the most important people because of whom this IBC is happening. Because like if the IPs are not there into picture, then it is not possible to do any particular CIRP, it is not possible to do any particular case under Insolvency and Bankruptcy Code. Then after that, let's understand about these members. These insolvency professional are the professional people who have cleared the examination conducted by the IBBI. After clearing those exams, they enroll themselves as a member of insolvency professional agencies. They are the most important people who will be working in this particular process. They are going to verify the claims of the creditors, they are going to sell the assets of the corporate debtors, they are going to run the business whenever it is required, they are going to act in various capacities. Like initially, these people act as interim resolution professional, temporary person. Then later on they act as a resolution professional. Then later on they even act as a liquidator. Sometimes they even act as authorized person. So the person is single, or we can say the degree is single. It is a single degree, but the people are acting in various capacities. Okay, and the last one, that is your information utility. Again, I am telling you the same thing. Information utility is nothing but the data bank which is going to contain all the information about the defaulting person, so that if any person wants to do any transaction with these people, we can just go and check their track records from the information utility as per the procedure. About adjudicating authority, so we have already discussed about the adjudicating authority. Since we are doing only for the corporates, so the first window is going to be NCLT, then you are going to have the NCLAT, and then you are going to have your Supreme Court. Okay, now getting into the process of the chapter. First of all, you are going to have 2 types of creditors here who are aggrieved under the code. One is your operational creditor and the other one is your financial creditor. Operational creditor pertaining to the operational debt, day-to-day business activities, and financial creditors pertaining to the financial debt, including real estate allottees. And these are the people who have funded the corporate debtor. Okay, these are the people who have funded the corporate debt. Now, as already told, the code is going to be applicable to whole of India, including the state of Jammu and Kashmir. Another section, that is section number 2, which is going to talk about applicability of the code, that is against who all can we initiate the CIRP, like who can be the corporate debtor. Corporate debtor is the person who is the defaulter. Okay, just remember that much. Corporate debtor is the person who is the defaulter. So who all can be the corporate debtor as per this particular code? So it can be a company, it can be a partnership firm, it can be a specific company which is regulated by any special act, it can be individuals, it can be personal guarantors also. It can be any particular associations, it can be LLPs, it can be any other body which has been incorporated under any particular law, it can be partnership firms, proprietorship concerns, etc. It can be any such thing. But a few exceptions here is, first of all, the people who are regulated service providers. Okay, the people who are regulated service providers, example, banks, insurance companies, ARCs, mutual funds, these are regulated service provider. First of all, they are service provider and they are regulated by some or the other law. So the code is not applicable to them. Ma'am, what do you mean that the code is not applicable? Means we cannot initiate insolvency against them. We cannot initiate. They can still initiate. Bank can initiate CRP against me, but I cannot initiate CRP against bank. And similarly, when we talk specifically about NBFC, in case of NBFC, IBC will be applicable against them. Like we can proceed against a NBFC only if it is a large NBFC. Ma'am, how do you define a large NBFC? Whose asset size is more than or equal to rupees 500 crore. Against them, now we can initiate CIRP process. Now, in the entire chapter, we're just going to study about the corporate insolvency resolution process. Okay, only about the corporates. Ma'am, what do you mean by corporates? So, corporates is equal to company plus LLP. Okay, now listen, if you want to initiate CIRP against any particular person, okay, I want to declare a particular person as insolvent, I want to resolve that particular person, or maybe I want to liquidate that particular person. For that, you can come under IBC only if that person has done a default with you. Only if the corporate debtor has done a default with me. If the corporate debtor has done a default with me of at least rupees 1 lakh, at least minimum rupees 1 lakh, then in that case, yes, you can initiate CIRP against that particular person. At any point of time, central government has got the power that it can increase this limit of rupees 1 lakh to any amount up to rupees 1 crore. To any amount up to rupees 1 crore. Okay. So now, as per the law, the minimum amount of default should be rupees 1 lakh and the central government can notify it to any amount up to rupees 1 crore. But as you already know, once your COVID had started, the minimum amount of default was increased to rupees 1 crore. Right, the minimum amount of default. So now, for the purpose of our examinations, minimum amount of default that should be done should be at least rupees 1 crore so that we can initiate your IBC. Okay, then after that, there should be a default. That is very, very important. Without default, you cannot initiate CIRP. Means the amount is due to be received from the corporate debtor. It is already outstanding. It has already become due, but then too you haven't received it. Okay. Then after that, who can start CIRP? Who can start this process under IBC? So three of them can start. Financial creditor can start, operational creditor can start, and corporate debtor himself can go against himself if he thinks that no, it is not possible. No, it is not possible to continue the business in this way. Before someone goes against me, let me only go and initiate the CIRP against myself. So even that is absolutely possible. Okay, so now whoever wants to go and initiate the application, that is operational creditor, financial creditor, corporate debtor, etc. When whoever wants to go and initiate this, these people will have to go and make an application to the first person in the authority, that is the NCLT. That is to the NCLT. And the day when your application is accepted, okay, the day when the application is accepted by the NCLT, that date is called as the date of ICD. ICD, that is insolvency commencement date. Okay, the day when you go and make an application, that is your initiation date. But the day when it is accepted by the NCLT, that date is called as the insolvency commencement date. Now getting into the procedure. First of all, section number 7, which is very, very important. Section number 7 talks about filing of CIRP or initiation of CIRP by the financial creditor. If there is a financial creditor in the company, then that financial creditor either by itself alone or in some cases where joint application is mandatory, which we'll study after section number 21, then in that case, these people can go and file an application to the adjudicating authority along with the necessary documents, that is the proof of default, that is the claims proof or the proof of claims in form number C, suggesting the name of the insolvency professional who is going to act as interim resolution professional, and any other information which is required by the IBBI. We'll take all these things to the adjudicating authority. Adjudicating authority will ascertain the default within a period of 14 days. We had studied one of the case laws here that this 14 days can be treated as directory in nature. Then the adjudicating authority will ascertain whether there is a default or no. If it says that yes, there is a default, then in that case it will admit the application. If it says no, there is no default, or if there is any mistake in the application, then initially it will reject it. If it gets admitted, then in that case the adjudicating authority will inform two of them. One is the financial creditor and other one is the corporate debtor that yes, the application has been admitted. If it gets rejected, then it will just intimate it to the applicant and give a time period of 7 days to the applicant to rectify it. If he rectifies, then well and good, and on that basis the final order will be passed by the adjudicating authority. And for rectifying the application which got rejected, for that period we are supposed to give a time period of at least we have to give a time period of 7 days to that particular applicant. But again, as per that particular case law, the 7 days can be treated as directory in nature. The day when my application got accepted by the adjudicating authority, that date was called as what? That date was called as the insolvency commencement date. Similarly, when we have to go and file an application, by the operational creditor, then two sections will be applicable there. First of all, section number 8 and then section number 9. In section number 8, there is going to be an extra step there. What is that extra step? Operational creditor, as soon as he thinks that yes, a default has occurred and his money is due to be received from the corporate debtor, he will first send, last possibility or last chance, he will send a demand notice to the corporate debtor that sir, your money is due and I am giving you last 10 days time to repay it. If you fail to do the repayment within a period of 10 days, then in that case I am going to proceed for the insolvency, for the CIRP. Now, after this, suppose within this period of 10 days, there can be multiple possibilities. Suppose if the corporate debtor decides to pay the entire amount, then the case is already over. Now we cannot go for IBC. Suppose he says that no, there is already a case pending. There is a case pending in any court, there is any case pending in arbitration, or there is any appeal going on, then we cannot proceed under IBC. Or if he does not reply at all within a period of 10 days, then in that case, yes, we have got all the rights. Operational creditor has got all the rights to proceed to the adjudicating authority for this CIRP. Now, when we go to the adjudicating authority for CIRP, then starts your section number 9, which is similar to your section number 7. Once you go to the adjudicating authority for CIRP, you have to take the necessary documents. Example, you will take the copy of invoice, the supporting document. Maybe that person is a sundry creditor, so the purchase sale bill would be there with you. You will take the proof of claims, which will be in form number B. You will submit an affidavit that no case is pending anywhere in any court, arbitration, etc. If possible, you will take a certification from the financial institution that no payment has been received from the corporate debtor, if available. Similarly, if any data is available in the information utility, if possible, you will take and you will submit it to the adjudicating authority. If possible, then you will suggest the name of the interim resolution professional. Here it is not mandatory to suggest the name of the interim resolution professional. You will take all these things. You'll take the copy of the demand notice that you had issued to the corporate debtor earlier. All these things you will take to the adjudicating authority, and then again the same thing. AA will take a time period of 14 days. It can say yes or no, it will also check yes in both the section, in 7 also and in section number 9 also. It will check whether if we have suggested the name of the interim resolution professional, then we'll also check whether any disciplinary proceedings are pending against that person or no. If everything is good, then in that case AA will accept the application. If something is not good, then AA will reject the application. But before rejecting, again that 7 days time period etc. will be given, just like section number 7. Then the next one, the last process coming up here, that is section number 10, which is talking about CIRP by the corporate person, by the corporate applicant, means where the CD himself goes and files an application. If CD is of the opinion that yes, some default has happened, he has done some default with his creditors, then CD can go and make an application to the adjudicating authority with his financial statement, with his books of accounts, with the proof of claims, which will be in form number D. If it is a case of company, then SR has to be passed. If it is a case of LLP, then it should be approved by 3/4 of the partners, that yes, everyone is okay, like majority of them are okay with going with this CIRP. Will also suggest the name of the interim resolution professional. All these things will take it up to the adjudicating authority, and then again the process remains the same, that is it will take 14 days time. It will check whether any disciplinary proceedings are pending against the interim resolution professional or not. If all good, then we will accept the application. If nothing is good, or if something is not good, then we will give 7 days time period to the corporate person to rectify the application, and depending upon that, we will either admit it or we will reject. So till here, till section number 10, basically your process gets over. Now a few simple sections coming up here. First of all, section number 11. Section number 11 says that there are 4 people. Okay, now listen, there is going to be a overriding explanation which is going to come up here. Section number 10 says that if there is it specifies 4 people who cannot initiate CIRP, okay, who cannot start with this CIRP. First of all, any person, any corporate debtor whose CIRP is going on, then you cannot start CIRP against any other corporate debtor. This is what they were trying to tell. If I am undergoing CIRP, then I cannot start insolvency process against any other person. Or if my insolvency has just got completed in the last 12 months before I am making an application for CIRP, or in the last 12 months I have violated the terms and conditions of the plan which was approved in the last 12 months, or if any liquidation order has been passed against me, then they are telling that, boss, either you yourself are a defaulter or you have just revived, then you cannot go and initiate CIRP against any other person. This was the major provision of section number 11, but then they said that in one of the explanation number 2 was inserted there, and they said that nothing can prevent, nothing will stop the corporate debtor from doing application in all the 4 cases. Means the corporate debtor can still proceed. The corporate debtor can still proceed, and it can to recover the money from its own debtors, it can initiate CIRP against them. Okay, this was the conclusion of your section number 11. Now, going on to the next section, that is section number 12. Section number 12 is very, very important, which is talking about the time limit for completion of the process. Now, CIRP should be completed. By default, CIRP should be completed within 180 days from the insolvency commencement date, from the date of admission, means when your insolvency got commenced. In this case, suppose if at a later stage, the COCs of the resolution professional is of the opinion that we require more time to complete the process, then first it will go to the committee of creditors which we will form in the due course. We will take their approval by a voting of 66%, and then we'll go and make an application to the adjudicating authority that, sir, we need more time to complete this entire process, and then in that case we can get a one-time extension of a maximum period of 90 days. Okay, now in some cases when the legal proceedings are going on, against any particular corporate debtor, then during the CIRP all those will have to be taken care of, all those will have to be paused, etc. In that case, it takes certain time. It becomes difficult to complete the entire CIRP within 180 plus 90 days. So they say that in cases where legal cases are pending, then instead of 180 plus 90 days, just forget that 180 plus 90, instead of that we have to complete the entire process within a time period of 330 days. This was your section number. This was a section number 12. Now, similarly, one more important section, that is section number 12A, which talks about withdrawal of application. Now, whichever application was admitted, maybe which was done by the FC, which was done by the OC, which was done by the corporate debtor, if it has been admitted by the adjudicating authority, it can be withdrawn. If they think that, okay, now there is no point of going into IBC because of whatsoever reasons, then in that case, they can withdraw this particular application by a voting of at least 90% of the COC. Okay, so this is the biggest approval that we require. 90% of the approval of COC would be required. Right, then after that, going on to the next section, that is 13, 14, 15, 16. Okay, these sections to be done together, 13, 14, 15, 16. which is going to take us ahead into the code. In section number 13, what happens once your application is admitted? After that, first of all, moratorium is declared, a calm period is declared, okay, which is going to happen in section number 14. After that, you appoint the IRP, okay, after that you appoint the IRP whose name was suggested in the application, or by different modes the IRP is going to be appointed. He will be appointed in section number 16. Okay, and once he comes into the picture, after that he is supposed to give a public announcement to everyone that CIRP is going to go on. That is going to happen in section number 15, 1-5. Okay, now let's take one section at a time. First of all, the one of the big sections here, that is your moratorium, section number 14. They say that as soon as the process starts, the adjudicating authority itself declares a moratorium. Means now all the legal cases, suits, proceedings, etc., everything is going to cease, everything is going to stop during this particular period, because we are going to give time to the corporate debtor to resolve its status. If cases are going on against that particular person, then it becomes difficult to revive that. Right? So there will be few activities which will be prohibited during this moratorium. That is, legal cases will stop. Okay, we cannot deal in our property, we cannot sell off our properties, because now we are people have doubt on us that we might become insolvent. Then none of the banks or none of the creditors can enforce the security interest. Means if they are having any of our asset as mortgage, then they cannot sell it during this moratorium. And last, suppose if I have occupied any particular premises as a lessee, means I have taken any particular premises on rent, then just because insolvency has commenced against me, then that person cannot ask me to vacate the premises. If I am not paying the rentals, etc., that's a different thing. But just because of insolvency, that person cannot ask me to vacate the premises. But one very important thing is, during moratorium, the business can go on. Okay, if you are entering, if you are into the business of any goods or services, etc., that thing is going to continue during the moratorium. Plus, at the same time, suppose if you already had some licenses, you already had some concessions, you already had some permits with you, maybe FSSAI or maybe your shop and establishment license, etc. The validity means the license is going to be normally valid even during the moratorium, until unless you fail to make the payment for renewal of these registrations, renewal of these licenses. Otherwise, these licenses won't be affected due to IBC. Okay. Similarly, the supply of essential services to your corporate, that is supply of electricity, supply of power, government cannot stop anything just because CIRP is going on, because they say that if you have been doing the payment of that, then that does not get affected during your moratorium. Okay, moratorium is applicable only on the person against whom CIRP is going on. Okay, means if against me the CIRP is going on, then the moratorium will be applicable on me and not by default on my guarantor. Okay, moratorium will be applicable on the guarantor only if CIRP is initiated against that person. So just remember one thing: moratorium is applicable only on the person against whom CIRP is going on. Then after that, moratorium is by default applicable for 180 days. Plus can be extended by 90 days or can go up to those 330 days. Basically, till the CIRP ends, the moratorium is going to be there. And once the CIRP ends, even the moratorium is going to come to an end. So this way, your moratorium period has started now. Okay, after that, the IRP is going to be appointed. Ma'am, how the IRP is going to be appointed? In case of financial creditor, okay, just try to recollect. In case of financial creditor and in case of corporate debtor, we had suggested a name. Okay, if the name suggested by us is proper, means there is no disciplinary proceedings going on against that particular person, then we can appoint that particular person as the IRP. It will be deemed to be appointed on the insolvency commencement date itself. If suppose we suggested a name but that name was not a proper name, or suppose if the OC did not suggest a name at all, then in that case AA, adjudicating authority, will go and make a reference to the IBBI. IBBI will suggest a name within a period of 10 days and such a person against whom there are no disciplinary proceedings which are going on. In all the cases, it will be deemed that the insolvency process, that the IRP is appointed on the insolvency commencement date. Okay, now once the IRP comes into picture, okay, after that, once the IRP comes into picture, within a period of 3 days of his appointment, he'll have to give a public announcement. Ma'am, what all things will be written in this public announcement? So, the details of the corporate debtors will be written. his own detail will be written. The day on which the process started, that date will be written. The day on which the process is going to end, that date will be written. It is going to invite claims from the people. Whoever's money is pending, please come and intimate us. Plus, it is going to give a warning in that if you're giving any false claim, then we are going to put a penalty on you, and the date on which the CRP is going to get over. All these things will be written in the public announcement. The cost of the public announcement will be initially borne by the person who has done the application, and later on it can be reimbursed. Later on it can be reimbursed from the COC to the extent it ratifies them, like to whatever extent they feel it good, till that amount we will get the reimbursement of that. This IRP is going to continue. This IRP is going to continue till the time the RP comes into picture. Till that particular time he is going to continue. After coming into picture, he'll exercise his powers. He'll take everything into his custody. He'll take everything into his control. He will exercise all the powers of the suspended management. He will tell everyone to assist him. He will tell everyone to report to him. He will go and seek information from the financial institutions, and all those things will happen. Then after that, the most important thing or the most important duty of the IRP which he has to do is, he has, by way of public announcement, he has already collected the claims from the creditors. So now he'll start doing the cross-checking of claims with his own books of accounts, with the information that he is having available with him. He'll collect all the information about the assets of the corporate debtor, assets as well as liabilities. He'll do everything relating to that. If required, he will assist in running the business of the corporate debtor during this moratorium period. He will take the help of the statutory auditors. He might take the professional expertise help. He can take the help of accountants, statutory auditors, and all those people during the process. And the most important thing that this person has to do is, this IRP is mainly appointed to constitute a COC. His main work is going to constitute a committee of creditors in the company. Okay, and it is the responsibility of everyone in the company. Okay, it is the responsibility of everyone in the company to provide the necessary assistance, to the IRP. Now, one important thing here is, till the time IRP is not constituting the COC, there's only IRP into the picture who is controlling the entire affairs, of this particular corporate debtor. So there have been some powers which has been given to him. Okay, first of all, we tell him that you have to continue the business as a going concern. Okay, as if this is never going to close, as if there's not going to be any liquidation which is going to happen. So he is going to continue the business as a going concern. He's going to, just like I told you, it is going to appoint the accountants. It will take the professional expertise. It can raise funds whenever required for doing the business. It can enter into contracts on behalf of the corporate debtors. All these powers are there because he has to run the business. As a going concern. And now he is going to do the main thing for which he was appointed. He is going to form a committee of creditors. Ma'am, what is this committee of creditors? Committee of creditors are the important persons who at a later stage are going to approve everything, because there will be a shift of control. Like from management, it will go to the IRP. From IRP, it is going to go to the RP. Then from RP, it is going to go to the committee of creditors. So COC are the people who are going to have the ultimate control of the business of the corporate debtor at a later point of time. Now, how do we constitute this committee of creditors? So in committee of creditors, by default, all the financial creditors come and sit. Okay, but if there is any financial creditor who is a related party of the corporate debtor, then that person has to be excluded. Suppose if all of them are related parties, or if suppose there are no financial creditors in the picture, then there will be a special method. Okay, then there will be a special method of constitution of this COC. Ma'am, what is that special method? So in that particular special method, 18 largest operational creditors will be coming into the picture, plus one person representing the employees and one person representing the workmen. These many people are going to come and sit. in the committee of creditors. Okay, now say for example, now by default related party is not included in the committee of creditors, but if any particular financial sector regulator, example bank etc., has become a related party of the corporate debtor because it is holding some shares in it, but since it is a bank, since it is a financial sector regulator, it won't be treated as a related party. That was an exception. Okay, that was an exception. Then after that, say for example, in case of consortium financing where multiple banks have funded a single person, then all those multiple banks will be treated as separate persons for the purpose of committee of creditors. Okay, say for example, if there is a particular person, who is a FC also plus who is an OC also, then in that case, I'll be allowed to sit in the committee of creditors, but only to the extent of my financial debt. Okay, suppose if some OC has assigned his debt to a FC. I am a FC and I have taken over a debt of the OC. Then in that case, I do not become a FC for the entire amount. No, there will be a bifurcation. My debt will be called as for my debt, I'll be called as a financial creditor, and the debt which I have legally taken it from some other person, for that amount, I'll be still called as an operational creditor only. So the nature of debt does not change because of the assignment. Then after that, what they say is a few special points here. Example, in case of consortium financing, like say for example 3 banks are there, they have funded a single person, then for the purpose of committee of creditors, they can appoint an authorized person who can represent all the 3 banks. Either you can appoint one single authorized person, or the 3 of them differently, they can appoint different authorized person to represent themselves in the committee of creditors. That is allowed, and this authorized person can be an insolvency professional by qualification. He can be an insolvency professional by qualification. Now, section 21, subsection 6A, which was very important, where they say that there are 3 clauses there. The first clause, which talks about debenture trustee, or in case of debenture holders, there has to be compulsorily an authorized person. And who is going to be the authorized person here? The debenture trustee, or who is going to act on behalf of all the debenture holders, will be the authorized person. Second, the B clause, that is where similar type of creditors have been grouped together, and in a particular class we have got more than 100 creditors. Then in that case, the law mandatorily says that you have to appoint an authorized person on behalf of so many people. For that, an insolvency professional is appointed. An insolvency professional is appointed by the IRP. Means the IRP goes and makes an application to the AA that, sir, let's appoint a particular person as an authorized person, and the amount which will be payable to the authorized person here as a remuneration will be forming part of the insolvency process cost. And then the C clause was talking about the case where the debt is represented by any representative or any guardian, etc. Then in that case, that guardian or that legal representative will be considered as an authorized person. Okay, they are going to vote on behalf of the persons to whom they are representing. Now, the cost of the authorized person only in case of class of creditors will be treated as an insolvency process cost. Rest will be borne by the creditors themselves. Example, the cost of the debenture trustee will be borne by the debenture holders themselves. The cost of the legal guardian will be borne by the estate of the deceased person, that way. So, in other cases, law is not going to interfere in between. Now, in majority of the places, the voting required to approve any particular decision is generally written in that particular section. If there is any particular section where there is no percentage specified, then in that case, we'll take the decision by a voting of at least 51% of the COC, but that is going to be applicable only in those cases where the section does not provide for a specific percentage. Okay, now while doing all these things, IRP has got so many information from different places. IRP has gathered so much of information about the corporate debtor. If any creditor goes and seeks that information from the IRP, then the IRP will have to provide it within a period of 7 days. If IRP has that information, he has to provide it within a period of 7 days to any of the creditors. Then going back to the amendment of section number 7, where we had already studied that in some cases financial creditors are supposed to do a joint application. Okay, in which all cases are we supposed to do a joint application? First one, in case the debenture holders plan to initiate a CIRP, or when the class of creditors plan to initiate a CIRP, then in that case it has to be a joint application mandatorily by at least 100 of them or 10% of the people in that particular class, whichever is lower. At least these many of them have to go and make an application. Similarly, in case of real estate allottees, also the same number, at least these many of them should go and make an application. It has to be a joint application mandatorily. Rest in all the cases, yes, single application would also do. Now, so now by this time IRP was there into picture. He constituted the COC. Once the COC is constituted, after that we conduct the first meeting of the COC. Okay, as soon as the COC is constituted, from that day, within a period of 7 days, the COC is constituted. Within the period of 7 days, first meeting of the COC is conducted. In the first meeting of COC, there is a personal interest of the IRP that is involved. He would like to get himself converted into a resolution professional generally. So if the COC approves by a voting of 66%, and if we are able to take a written consent from this IRP, then in that case the same person can be appointed as a resolution professional also. Suppose if he does not give his written consent, or if suppose the COC does not approve it by way of a voting of 66%, then in that case we'll bring a new face into the company as a resolution professional. For that purpose, a new name will be taken. A new name recommendation will be again taken from the IBBI. IBBI will suggest a new name within a period of 10 days, and it will be such a person against whom there are no disciplinary proceedings which are going on. Okay, and suppose if there is any delay on behalf of IBBI, that it is not able to suggest a good name within a period of 10 days, then no problem. Till the time the RP is appointed, or till the time the new person is appointed, till that time the IRP is going to continue into the picture. Means there has to be someone sitting either in the position of IRP or someone sitting in the position of RP. Okay, the position cannot be blank for any period of days. Then the RP comes into picture. Now RP is going to come into picture. He is going to manage the operations. He'll take all the information from the IRP. He'll seek help from the IRP wherever it was. If he is a different person, he will try to manage the operations. He will try to identify whether resolution is possible, whether liquidation has to be done. He will exercise whatever powers were there on the IRP also. He'll exercise all those powers also, because he is just continuing the case ahead. Okay, and IRP is supposed to share all the information. IRP is supposed to share everything with the resolution professional, because he was the person who was continuing the process till now. Then after that, what are the qualifications? Like, who can act as a resolution professional? See, first of all, that person has to clear the examination conducted by the IBBI. By that, he is just treated as an insolvency professional. But how to become a resolution professional, or who is eligible to become a resolution professional? For that, they had given certain qualifications. Suppose if the corporate debtor is a company, then in that case, I become eligible to be appointed as a resolution professional in that company if I am eligible to be appointed as an independent director. Okay, independent director given under section 149. If I am eligible to become an independent director, means I have fulfilled so many criteria that I am even now eligible to become a resolution professional for that particular corporate debtor. Then this person should not be a related person. This RP should not be a related party of the corporate debtor. Otherwise, what's the point in appointing this person as a resolution professional? Plus, this person should not be an employee, proprietor or partner. We had seen the examples also. This resolution professional should not be an employee, proprietor or partner of any CA firm, company secretary firm, or any cost auditors of the corporate debtors in any of the last 3 years. Plus, he should not be an employee, proprietor or partner of any legal or consulting firm of the corporate debtor between whom the transactions are of more than or equal to 5% of the gross turnover of that legal firm. Means the transaction between whom? Transaction between the corporate debtor and between the legal firm. The value of that should not be more than or equal to 5% of the turnover in any of the 3 years. Then in that case, if you fulfill all these criteria, then you will be eligible to be appointed as a resolution professional. Fine. So now resolution professional has come into picture. The COC is there in place. Now for conducting the activities, for understanding the process, to take the process ahead, from now the actual work starts. Okay, from time to time we can conduct the meetings of the COC. First of all, the first meeting was conducted within 7 days of formation of the COC. As soon as the COC was formed, from that day, within a period of 7 days, the first meeting was conducted. In the first meeting, we got the IRP converted into RP, or we appointed a new person as the RP. Later on, as and when required, we can conduct whatever number of meetings we want to conduct. It can be in physical mode, it can be in electronic mode. Notice, okay, important point. Notice of this has to be given to, first of all, it will have to be given to all the members of the committee of creditors. It will have to be given to the suspended management. It will have to be given to some large operational creditors whose debt value is more than or equal to 10% of the total. right? Generally, a notice of 5 days is given. That is, 5 days notice in advance is sufficient. In emergency cases, we can reduce it down to 24 hours also. But if the meeting is going to be attended by the authorized person, then in that case, 48 hours notice has to be given at least. Okay, now these authorized representatives, etc., these people, authorized representatives or authorized persons, can vote in the meeting, but COC can also vote in the meeting. Okay, but the suspended management cannot vote in the meeting. The operation creditors cannot vote in the meeting. That is very, very important. And creditors can attend this particular meeting even through an authorized representative or even through an authorized person, but their cost will be borne by the creditors themselves. Okay, their cost will be borne by the creditors themselves. That is not an insolvency process cost. And whatever decisions we are going to take in this particular meeting, that will be approved by a majority of at least 66% of the voting power of the financial creditors, or 66% of the people who are there in the committee of creditors. Okay, this was talking about the meeting of the committee of creditors. How is the meeting conducted? To whom are we supposed to give the notice? How many days notice is to be given, etc. Now, a meeting will be treated as a valid meeting only if there is a proper quorum. Only if there is a proper quorum, then only the meeting will be valid. Ma'am, what is proper quorum? Quorum means a voting of at least, attendance of at least 33% of the COC. Okay, only attendance of at least 33% of the COC. Suppose if we are not getting that much, then the meeting gets adjourned to the next day. Same time, same place, etc. And in the adjourned meeting, if there is no quorum, then okay, fine, no problem. The persons who are present there will form part of the quorum, and it will be treated at least as a valid meeting. Okay, it will be treated as a valid meeting. Now, RP comes into picture. He exercises all his powers, he exercises all his duties, he takes the help of the just like as of your IRP, he takes the help of the experts, he'll appoint auditors, he'll appoint experts in whatever field it is required. He will again maintain a list of the updated creditors if required, because suppose if both IRP and RP were different people, then it also becomes the responsibility of the RP to check the list of the creditors with whom we are going to do the settlement. Now, very important 3 points here is, the most important work of the resolution professional now is he is going to invite resolution applicants. Okay, resolution applicants are nothing but the masterminds who are going to come into the picture, that yes, they have the ideas to revive a particular person or to resolve a particular person, and they are going to suggest a resolution plan. So he is going to invite people that please come and share your ideas. For that purpose, we will require a document called as information memorandum. Okay, a document which contains all the information about the corporate debtor. We are going to maintain such a document. It is nothing but the summary of all the financial information about the corporate debtor, which is going to be used to prepare the plan. And then once the plan, etc., is prepared, he is going to present the plan. RP is going to present the plan first before the COC, and if the COC approves, then the plan will be presented even before the adjudicating authority. Right, now a few points about the authorized representative. Now a few things are very common here. Authorized representative is the person who is going to represent the creditors in the meeting. So he has to act on behalf of the instructions given by that particular creditor only. He cannot go against the instructions which have been given by the creditor. If creditor has given certain instructions, he will have to vote accordingly in the meeting. If creditor has not given any instruction to the authorized person regarding voting on a particular matter, then he cannot vote at all. Okay, he cannot vote at all. Then authorized person has got the right to vote. Okay, he is acting just like a proxy, but he has got the right to vote. One important thing here is, whenever he is voting for the purpose of section 21(6)(a), whenever he is voting for the purpose of 21(6)(a), then in that case, section 21(6)(a), if you recollect that class of creditors, debenture holders, etc., then he will vote. First, he will do an internal voting. He'll take a percentage that what more than 50% people say, and same thing is going to come in the meeting and he is going to vote accordingly. Like example, if there are 1000 debenture holders in the company, we will not consider the individual voting of 1000 debenture holders. We will see what more than 50% of the people are telling, and accordingly we are going to come and vote in the meeting of the committee of creditors. But this is an exception. This is an exception in case of voting done under section 12A. voting done for the purpose of section number 12A. 12A was talking about withdrawal of the application. That is, whenever we are voting for withdrawal of application, then in that case 90% voting was required, and first for that we are not supposed to do an internal voting. Here we are going to take individual voting of the committee of creditors or individual voting of the creditors, and by that we are going to find out whether at least 90% of the people are agreeing to this particular fact or no. Okay, while exercising all these things, while doing all these things, while inviting resolution applicants, etc., or at any point of time, if the COC is of the opinion that no, this RP is not working properly, we should change this particular RP, then yes, the RP can be replaced by a voting of at least 66% of the COC. Will forward the proposed name to the adjudicating authority. AA will forward the name to the IBBI. It will take the confirmation from the IBBI within a period of 10 days, and then will take a return consent from that particular person, and then this new person will be appointed. This new person will be appointed as a new RP in this particular picture. Till the time the new RP comes into picture, till that time the old RP is going to continue. This is how the new RP comes into the picture. Now there are a certain list of transactions for which we require the approval of the COC. You need not by heart this particular list, but they have listed a few transactions for which the approval of COC is required by a voting of 66%. If you do not take the approval of the COC, then in that case, the actions that you have taken or the decisions that you have taken will be totally treated as void. Okay, now let's move towards the resolution plan, like how is it actually prepared. For that purpose, first of all, the resolution professional prepares an information memorandum, which was nothing but the summary of all the financial information about the corporate debtor. Okay, then there will be a few people who cannot become this resolution applicant. Okay, there are 10 people who cannot become a resolution applicant. I'll just give you the keywords for that. Any person who is an undischarged insolvent, he cannot be a resolution applicant. He himself is a defaulter. Any person who has been designated as a willful defaulter as per the RBI guidelines. Any person whose account was classified as NPA. Any person whose account was classified as NPA for a period of at least 1 year. Then in that case, that person cannot be appointed as a resolution applicant. But if suppose this person is a financial entity only, if this person is a financial entity and his account has been classified as NPA, then he is not covered up here. Example, SBI is having an account with RBI, or it is having a loan with RBI, and it is the NPA, it is having that account as NPA there, but they are exempted here because for them it is an ordinary course of business. Then after that, if any particular person has been convicted of any offense under the 12th schedule and has been imprisoned for 2 years or more, or if any person has been convicted under any particular offenses and has been sentenced to imprisonment for 7 years or more, then in that case, you cannot be treated as you cannot be appointed as a resolution applicant. You can be appointed, you can again come back into the picture, but only after a cooling period of 2 years after your release. Okay, then after that, any person who is disqualified to be a director of the company, any person who has been prohibited by SEBI from accessing the securities market, any person during his tenure, suppose if the company was involved in any preferential transaction, undervalue transaction, and if you were sitting in the management of the corporate debtor and all these negative things happened during your tenure, then you cannot be a resolution applicant. If suppose you as a guarantor, if you did not fulfill your promise about paying the money as a guarantor, if you did any default as a guarantor, you cannot be appointed as a resolution applicant. If you did any of such disqualification in any corresponding law outside the country, if then you are not treated as a resolution applicant, or you cannot be appointed as a resolution applicant. Or if, say for example, you are a very clean person, but your connected persons falls under any of these categories, then you will be disqualified to become a resolution applicant. Okay, these are the major 10 pointers. Or these are the major 10 persons who are not eligible to become a resolution applicant. Okay, now listen. Once you have prepared the information memorandum, that document is prepared. After that, you will invite people to be resolution applicant. Resolution applicant can be any person except for a person who was ineligible under section 29A. So any person who is certifying himself as a resolution applicant, he'll have to give an affidavit. That I don't fall under the disqualifications of section number 29A. Okay, then likewise, we are going to have many resolution applicants coming into the picture. Everyone is going to submit their plans. Everyone will come and submit their plan to the resolution professional. They will submit it to the RP. RP will do some 5 to 6 basic checks. Ma'am, what all basic checks? First of all, whether the insolvency process cost has been considered or not, whether the debts of OC has been considered or not, whether it provides for management of affairs in the future. How is the business of the CD going to be managed in the near future? How are we planning to implement and supervise the plan? Whether the plan contravenes any existing law, or are we fulfilling all the requirements of IBBI or not? All these basic checks, these 6 basic checks will be done by the resolution professional. If resolution professional things fit, yes, all the 6 points are met, there is no issues in that, then the RP will go and submit that plan. RP will go and submit that plan before the committee of creditors. Committee of creditors will approve the plan by a voting of 66%. They will even check the viability of the plan. Okay, if the plan is approved, by the committee of creditors, then in that case we will go and submit this plan. We will go and submit, the RP is going to submit this plan before the adjudicating authority. The plan can be anything. It can even contain internal reconstruction, it can even contain external reconstruction, anything. Okay, anything can happen there. Once you go and submit the plan before the adjudicating authority, now the adjudicating authority will again satisfy itself with the similar things, whether the legal requirements have been fulfilled or not, whether there is any contravention or not, whether the process cost have been provided for or not, whether the debts of OC has been considered or not, whether the RP has done everything properly or not. All these things will be checked by the adjudicating authority. Then the adjudicating authority, if it thinks fit, then it will approve the plan. Once it approves the plan, then the moratorium comes to an end, and all the records etc. are put up in the information utility, and the case is closed there itself. Okay, one strange thing which happens here is one extra responsibility which has been put up on the resolution applicant. One extra responsibility that is put up on him is that he has to go and take the required approvals from necessary laws within 1 year. Within 1 year from the date when the plan was approved by the adjudicating authority. And in case it is also affecting the Competition Act, that is in case of mergers amalgamation, then we also have to take the approval of the Competition Commission of India, but that has to be taken in advance before the plan is presented or before the plan is approved by the COC. Okay, even this is the responsibility of the resolution applicant only. So here we considered the case where the plan was approved. Okay, if the plan was approved, then well and good, no problem. Suppose if the plan gets rejected, then we are going to move towards the liquidation. Okay, are there any basis? Suppose if the AA rejects the plan, or say for example if AA approves the plan, can we go and file an appeal? Answer is yes. There are certain restricted grounds on which you can go and file an appeal, not on the basis of business viability, but on the basis of legal requirements. Example, if the plan has contravened any law, if the plan does not satisfy any of the requirements of IBBI, if there was any big mistake done by the RP during the process, if the debts of OC was not considered, if the insolvency process cost was not considered, then only on such grounds the appeal can be filed. Okay, we are filing the appeal against the order of adjudication authority, that is NCLT. So we will go and file an appeal before the NCLAT. Okay, now another standalone section, another altogether different section was section number 32A, where they say that imagine a circumstance where the plan is approved. Okay, adjudicating authority has approved the plan. So now we are going to start with resolution. Okay, all these things happened, like insolvency etc. happened because there was some default which was done by the corporate debtor in the past, which led to such a position. But now they are telling that if you want to resolve this corporate debtor now, and if you have done a total change in the management of the corporate debtor, or if good people are involved in the new management now, non-defaulting people are involved in the new management now, then please don't hold the corporate debtor liable now. Please don't initiate any prosecution against the corporate debtor now. Now it's resolved, now we are moving ahead, so please don't punish them. This is what they are trying to say. So we cannot take any action. Okay, we cannot impose any fine etc. on the corporate debtor, that is on the company or the LLP. But the old people who were there in the old management, that is the person in charge, directors, employees, designated partners in case of LLP, etc., we can still proceed against them. Okay, they can be imprisoned, they can be fined, they can be punished, everything can happen, because this is nothing but lifting of corporate will. These were the people who were involved in such fraudulent activities, because of which the CIRP of CD is happening. So don't punish the CD, don't punish the entity, but you can punish the people who were behind it. Okay. And at the same time, when we are talking about the corporate debtor, you cannot take action against them. Like, you cannot impose fine, you cannot even seize their property, you cannot do their provisional attachment, confiscation. No, of entity cannot be done, but of the people who were involved in the management, yes, you can proceed against them, because they are the most important people because of whom the CD is now undergoing this CIRP. Okay, so don't punish the entity. Conclusion is, don't punish the entity, but you can punish the persons who were responsible for doing all these things. Okay, completed with the resolution part. Now let's go to the liquidation part. Say for example, suppose if the adjudicating cases where liquidation can happen. Say for example, if the adjudicating authority does not approve the plan, or if the COC by a voting of 66% themselves says that let's go for liquidation, or if we could not complete the process within 180 plus 90 days or 330 days as the case may be, or suppose if the corporate debtor still contravenes the plan. Once it was approved, now they contravene the plan, then all the other persons who are aggrieved, now they can go and make an application to the adjudicating authority, sir, please liquidate. These are the cases which can lead to liquidation. Right? Now, when liquidation happens, after that, the COC is totally dissolved now. Okay, the COC totally goes out of the picture. Now there is a person who will be appointed called as liquidator. By default, who is going to be the liquidator? The person who was the RP, that same person can be a liquidator if he gives his written consent. But we may decide to change this liquidator as well. Suppose if the plan which was submitted by the RP got rejected, or if, say for example, the resolution professional did not give his written consent, or say for example, when IBBI says that let's change this liquidator, then in that case we can appoint a new person as a liquidator. Again, the name recommendation will be taken from the IBBI within a period of 10 days, and a new person is going to be appointed. He comes into the picture. Now he takes all the control from the resolution professional. He is going to take the process ahead. Okay, for this he is going to charge remuneration, which will be paid at different stages. Okay, he'll exercise all his powers, he'll run the business, he'll again prepare that asset memorandum, statement of affairs. If you recollect, he will again collate the claims, he will verify the claims, he will run the business. If he thinks that it is in the favor of the corporate debtor to fight a legal case, then he will fight a legal case on behalf of the corporate debtor. He will try to sell the movable, immovable property. Like, basically for that, he'll first prepare the liquidation estate, and then he'll try to sell the properties at the best possible value. He will pay off the liabilities. These are the powers and duties of the liquidator. And while exercising all these things, liquidator is gathering all the information about the corporate debtor. He is trying to understand the corporate debtor. So if any creditor comes and asks the information from the liquidator, then the liquidator will be obliged to provide that information within a period of 7 days from the date of request. Then after that, once the liquidator is doing all these things, now he'll actually start working on it. How will he work on that? First of all, thinking from the assets point of view, he'll prepare a liquidation estate. Liquidation estate means which all assets can be sold, which all assets cannot be sold. Which assets can be sold? Any asset over which we have ownership right. Any asset over which we have ownership right but which is not in our possession. Any assets which belong to our branches, that can be sold. Any asset which was given as collateral security, that can be sold if that person has relinquished the rights. Any encumbered assets can be sold. Example, I had given you the example of debenture redemption investments which we had kept separately for the debenture holders. All these assets, cash balance, bank balance, amount realized from the debtors, etc., can be used for the purpose of liquidation estate. What cannot be used for liquidation estate is any asset over which we do not have any ownership rights, bailment contracts, personal assets of the shareholders, personal assets of the management, or any other assets which has been specifically specified by the IBBI. Or say for example, any assets which is belonging to any other entity, that is subsidiary. subsidiary or a group company of the corporate debtor, those assets do not form part of the liquidation estate, so those cannot be sold. Okay, once your liquidation estate is ready, after that liquidator will go to the liabilities thing. Okay, for going to the liabilities thing, it will require different information. It will require various information which it can get either under IBC or it can even get under from the data bank of the other authorities. So IBC has given full power to the liquidator that whichever information you want to go and access under whichever possible law, you have got full rights to go and access that information, and please try to collect whatever possible information is there about the defaulter. And again repeating that point, suppose if any creditor wants that information from the liquidator, now the liquidator has got so many information, so now if any creditor wants any information from the liquidator, he can make a request and the liquidator will be obliged to provide that information within a period of 7 days from the date of request. Now going on to claims. Okay, now going on to the claims. We did the asset part, we collected all the information. Now the liquidator is going to collate the claims, verify the claims, and will start paying them off. First of all, whenever this liquidation got started, means whenever the liquidator was appointed, from that day within a period of 30 days, he will collect all the claims. Okay, he'll verify the claims with the information that he is having available with him. If any creditor wants to do any changes in that, if anyone wants to withdraw it, etc., we give them 14 days from the date when they submitted it. Okay, once all these days are completed, after that the liquidator will take a time period of 7 days and it can either accept it or it can reject it. For rejection, it will have to give reasons, and against rejection, appeal is possible before the adjudicating authority. Now we are going against the liquidator, so appeal against the adjudicating authority is possible. Now ma'am, how to do the payment? Two sections will be important here, that is section number 52 and section number 53. When we go to section number 52, when we talk about the secured creditors who are having some of our assets with them, so what two options do we give to them? First option we give to them is you keep the asset, if there is and you sell it. If there is any surplus, pay back that surplus to us. If there is any deficit, we will pay it to you. Means you realize the security interest. Okay, another option is we'll tell them please relinquish the security interest, means they will relinquish it, means they will give the asset back to us and we will pay them normally as per the sequence of section number 53. Okay, while say for example realizing the security interest, okay, while realizing the security interest, suppose if the secured creditor faces any resistance, means he is facing some restrictions at the time of selling the asset, he can go and file a complaint or he can go and make an application to the AA that sir, I am not able to sell this particular asset, please pass an order, and then the AA will help the secured creditor to realize this particular asset by passing an order on the corporate debtor. Corporate debtor would say that please don't sell my asset. Secured creditor is very keen on selling the asset. So now if we are facing any problem in this, then in that case we can go and make an application to the adjudicating authority and we can sell it off. Now the most important thing, that is the sequence of the payment. What is the sequence of the payment in case of liquidation under IBC? So the sequence is, first of all the process cost will be met. Okay, insolvency as well as liquidation, process cost, not the liquidator's remuneration. Okay, next two things will be paid equally, or we can say proportionately. That is, first thing, workmen's dues for the last 24 months before the insolvency commencement date, and the secured creditors in case they have fully relinquished their particular security. These will be paid in the ratio of their debts equally. Okay, then after that, third one was when we are paying any amount to the employees for the last 12 months before the insolvency commencement date. Then fourth one, we were paying to the unsecured financial creditors. In the fifth point, again to two of them we are going to pay it together. First one, government taxes for the last 2 years, and not the insolvency commencement date, I should have mentioned it as liquidation commencement date, just before the liquidation commencement date. And in the fifth point, first one will be government taxes for the last 2 years before the liquidation commencement date, and in the second point we are going to pay to the secured creditors in case of any deficit where they had realized the security and there was any deficit. This was there in the fifth point. Sixth one will be all the other debts, seventh one will be preference shareholders, and eighth one is going to be the equity shareholders. This order cannot be changed, it has to be as it is. And what about the liquidator's remuneration? Liquidator's remuneration will be paid. Liquidator's remuneration will be paid as in when, on whatever stage it is payable as per the agreement between the liquidator and the adjudicating authority. Okay. Before he finally pays the amount to the creditors, he has to make sure that he submits that information memorandum to the adjudicating authority. That is very, very important. Once they start realizing the assets, once all the assets have been fully realized, from that day, within 90 days, all the disbursement should get completed. Why to delay in making the payment to the creditors, right? And after that, once the liquidation has totally got over, means once the balance sheet has become zero, after that the liquidator will go and make an application to the adjudicating authority for dissolution. Then the day when the adjudicating authority passes that particular order, that date is called as the DOD, that is the date of dissolution. This dissolution order will be forwarded to the authority with whom we are registered, example ROC, within a period of 7 days, so that the entire process gets completed. Now, by default, the liquidation should get over within a period of 1 year. Okay, by default, everything should get over within a period of 1 year. If not over, then also okay, you can just make an application to the AA that why it did not get completed within a period of 1 year. With this, your liquidation process gets over. Next thing which comes up into picture is fast track CIRP. Fast track CIRP is applicable basically for some small corporate debtors. Ma'am, how do you define a small corporate debtor? So, small corporate debtor can be a small company as per the Companies Act. It can be a startup entity but not a partnership firm, or it can be any unlisted company whose total assets does not exceed rupees 1 crore as per the immediate preceding financial year. For these people, if we want to go against these people, then we can initiate a fast track CIRP. The procedure more or less remains the same. What is different here is, if you have planned to go for fast track CIRP, then the process should get over within a period of 90 days plus a maximum one-time extension can be provided to you similarly, but by a voting of 75% of the COC. Okay, this is mainly the provisions about your fast track CIRP. Going to the next concept, which is talking about the voluntary liquidation. Voluntary liquidation is altogether different. First of all, this is applicable only to the corporate persons. Okay, only to the companies. Now, if suppose you have not done any default, okay, you have not done any default, you are not insolvent, you should not be insolvent. If you are insolvent, then you cannot come under this particular section. If you are not insolvent, if you have not done any particular default, but you simply want to close down your business, then in that case, you fall under section number 59 of the IBC 2016. For this particular purpose, first the majority of the directors will sign a declaration. This declaration is going to contain the wordings that we have done. Majority of the directors have done full inquiry into the state of the affairs, and that we do not have any debt payable, or if at all there is any debt payable, then in that case we have sufficient assets to pay it off. This is one thing that you will certify, and the second thing that you will certify is we are not doing this for defrauding any particular creditors. Right, then after that, this declaration will also be attached with, like, a few documents that we are going to attach along with this declaration is audited financial statements of the last 2 years if possible, and the report from a registered valuer who is going to value the assets of our company. This declaration will go and submit it to the IBBI. Okay, once you go and submit it to the IBBI, forget about it. Then within 4 weeks, just pass a special resolution, appoint a liquidator who is going to be an IP. Either you simply pass a special resolution that we just want to close it down, or suppose if the period which was written in the AOA, that period has expired, or if the purpose for which the company was incorporated, that event has been occurred, means that everything has been done. So now you want to close down your business, so you simply pass a resolution. Along with the resolution, make sure that within a period of 7 days, you also take the approval of the creditors by a voting of at least 2/3, if at all you have some outstanding creditors in the company. Once the resolution is passed, go and inform this to the IBBI, go and inform this to the ROC that we have passed the resolution also, and if required, we have taken the approval also. The day when the resolution was passed, the day when the special resolution was passed, that date will be treated as the date of commencement of the liquidation proceedings, means of the voluntary liquidation commencement proceedings. Once this is done, after that, the liquidator who had come into the picture, he'll nullify your balance sheet, he'll bring your balance sheet to zero. After that, he'll go and make an application to the adjudicating authority. Adjudicating authority will pass the order. The day when he passes the order, that date is called as the date of dissolution. Then within a period of 14 days, we go and file this dissolution order with the authority with whom we are registered, and with this, your voluntary liquidation proceedings totally come to an end. Then going on to the special type of transactions, mainly 4 type of transactions. First one was preferential transaction, next one was undervalue transaction, next one was transaction defrauding the creditors, and the last one was your extortionate credit transactions. In case of preferential transaction, suppose if liquidator or the RP is of the opinion that a fraudulent preference has been given by the corporate debtor to its related parties or to persons other than related parties, because of which we have put that creditor in a better position as compared to the other creditors, then this can be treated. This is a subjective thing which will be decided by the liquidator or the RP, that whether it is a preferential transaction or no. If the liquidator or the RP is of the opinion that yes, it is a preferential transaction, then they will go and make an application to the adjudicating authority for avoidance of such transactions and to declare such transactions as void. But if these transactions are done in ordinary course of business, then that is okay. Everything has to be proved to the satisfaction of the liquidator or the resolution professional. If this transaction was done with the related party in the last 2 years before the insolvency commencement date, or if it was done with other persons in the last 1 year before the insolvency commencement date, then only this section is going to be applicable. If we are declaring this particular transaction as void, means we are going to nullify the effect, means the preference that we have given to that particular creditor will be restored back, the property will be restored back. If that person has sold that property, then we will recover the value of the property. If that person has earned any benefits out of that particular money, then we'll recover the benefits also. And suppose if the property has been now sold to any third party, then we cannot go and recover it from the third party if the third party had purchased it in good faith. Okay, if he had purchased it for some value and in good faith, or if, say for example, the person to whom the preference was given, if that person has got attachment with that particular property and he wants to, he is ready to compensate the liquidator, then also they say if liquidator is able to get the value of that particular property, then no problem, you can just leave the asset with that creditor. This was your preferential transaction. These transactions can be declared as void by the adjudicating authority. Now going on to the undervalue transactions. Undervalue transactions was such a case where the corporate debtor, or obviously the person in charge of the corporate debtor, they have tried that they want to get rid of the assets so that the assets are not available for sale, or the value of the assets are not available for payment to the creditors. So they try to sell off their assets. They try to either give it as gift for zero consideration, or they try to sell it at a very nominal value. Okay, they try to sell it at a very nominal value, again to the related party or to other than related party, same within 2 years or 1 year before the insolvency commencement date. If the liquidator or the RP comes to know about this, they can make an application to the adjudicating authority to declare such transactions as void. Void is going to have the same effect like we had studied it in preferential transactions. But here one extra thing which had come into picture is, if the liquidator or the RP does not realize about this transaction, but the creditors or any other person in the company, they come to know about this transaction, they can go and make an application to the adjudicating authority that, sir, see, this is an undervalue transaction. So the first they'll go and make an application to the liquidator or the RP. If liquidator or the RP takes the step, then well and good. If liquidator or the RP are not able to take the necessary steps, then the creditor can directly go to the adjudicating authority and tell to the adjudicating authority, sir, please declare this transaction as void. That is one thing. And sir, please take necessary action. Please take necessary action against the liquidator or the RP. That is the disciplinary proceedings against them. These transactions, preferential transactions plus undervalue transactions, are cumulatively called as transactions which are defrauding the creditors. In the first case, it was defrauding a particular group of creditors. In the second case, it was defrauding all the creditors, because we are not leaving any assets in the company. So the transactions can be declared void by following the required procedures. And the last one is your extortionate credit transactions. In case of extortionate credit transactions, we have availed any kind of debt. It can be operational debt or it can be financial debt, for which we are doing extortionate payments, to any particular person, which is too much higher than the existing market prices. So in that case, and these transactions have been done within the last 2 years before the insolvency commencement date. Now there is no bifurcation of 2 year and 1 year here. So these transactions have been done during the last 2 years before the insolvency commencement date. So again, the liquidator or the RP can go and make an application to the adjudicating authority to declare this transaction as void and to reverse it, either to reverse the transaction totally or to bring it back to normals. That is, if the interest rate of 24% was charged against a normal interest rate of 10%, then we can even modify. AA can pass an order for modification of the terms of the contract. This was all about your extortionate credit transactions. Now a few different points in the chapter. Suppose if a particular financial creditor has already proceeded for CIRP, then ideally other financial creditors should not go and make multiple applications if the earlier application has been accepted by the CIRP, because even if one person goes and makes an application, that would be sufficient, because now everyone will form part of that CIRP. Real estate allottees are deemed as financial creditors. This we have already understood. And after that, two important case laws there. One is the time which is taken by the adjudicating authority for determining the default, that is 14 days, and the time given by the adjudicating authority for rectification of that rejected application, that is 7 days. For that particular purpose, they are telling that you can treat these time limits as directory in nature. And in case of OC, we have to remember one thing: if suppose there is any existence of dispute, suppose if the case is going on in any court or in arbitration, or arbitral award is into appeal, then in that case we cannot proceed for IBC till the time the cases under the other laws have been closed down or withdrawn, or as the case may be. These were the two important case laws out of all the case laws that you have to remember. And with this we are done. With the super quick revision of IBC in 1.5 hours. I hope you are very, very clear till here. Yes. Let's start with the super quick revision of FEMA 99. First of all, first part, that is basics, extent and applicability, section number 1. FEMA law is applicable to whole of India, including the state of Jammu and Kashmir. It also extends to any contravention which we have committed outside India. It also applies to the entity or any establishment which is located outside India but which is controlled by a person resident in India. So FEMA is applicable to whole of India, plus if there is any contravention which is done outside India, or if there is any particular branch offices which is located outside India which is controlled by a person resident in India, FEMA extends to that person also. Now there are a few important definitions coming up here. First definition, capital account transactions. Capital account transactions means any such transaction which alters assets or liabilities including contingent liabilities of a PRI which is situated or which is located outside India, or any transaction which alters the assets or liabilities of a PROI which is situated in India. All such transactions are treated as your capital account transactions, and the transactions which are not capital account transactions will be treated as current account transactions. Okay, few transactions which are deemed to be current account transactions are any transactions done in ordinary course of business in relation to foreign trade, or any transaction which pertains to short-term banking and credit facilities, or if we have done any remittances for living expenses, for medical expenses, for education abroad, or any transaction which pertains to interest transaction on loans, or receiving return on the investments, then these transactions are deemed to be current account transactions. Now after that, the next important, you've got some examples given here in the book to identify whether a transaction is a current account transaction or a capital account transaction. Coming on to the next definition of person. Person definition is just like your income tax wala definition. It includes your individual, HUF, AOP, BOI, firm, LLP, companies, artificial juridical person, and most importantly, any particular office or any particular agency or any particular branch which is controlled by any of the above persons. If there is an individual who is controlling a branch, then even that branch becomes a person. Next most important definition here is of the PRI, that is person resident in India. How do we identify whether a person is a PRI or PROI? So first of all, we'll check the basic condition. If there is any person who is residing in India for more than 182 days during the preceding financial year, then that person is by default treated as a PRI for the current year. Okay, we checked it for the last year. We checked the number of days stay for the last year and we concluded the status for the current year. But a person will not be treated as a PRI who is leaving India or who is going outside India, either for employment outside India or for business or vocation outside India, or if his intention to stay, or he is going for some other purpose where his intention to go outside India is for an uncertain period. So since he is going for a very long time in all the three cases, then he will not be treated as a PRI. Similarly, if there is any person who is coming to India, otherwise than the same three purposes, means he is coming to India for some short-term things, then in that case, even he will not be treated as a PRI, then he will be treated as a PROI. So in short, if any person is going outside India for a longer period as mentioned here, he will not be a PRI for us. But if he is coming to India for a longer purpose, then yes, we will make him a PRI. So on those basis, we understood whether that person will be treated as a PRI or whether that person will be treated as a PROI. This point was applicable mainly to the individuals because number of days stay etc. will check for individuals. When we go to other persons, example company, firm, LLP, how do we determine their status? So if there is any person or any body corporate which is registered in India or incorporated in India, it will always be a PRI. Okay, if there is any branch, office, etc. which is located in India, but which is controlled by a PROI, then also that Indian branch, office, etc. will be treated as a PRI because of its location in India. Okay, but if there is any particular office, branch, agency, etc. which is located outside India, but which is controlled by a PRI, okay, which is controlled by us. Since it is controlled by a PRI, then also the office which is located outside India will be deemed to be a PRI itself. So either the location or the control, if it has some Indian connection, then in that case we'll treat that person as a PRI. Okay, and if that person is not a PRI at all, then by default that person will be treated as a PROI. We don't have any specific definition for determining a person as a PROI. It's just that person who is not a PRI will be treated as a PROI. Then after that, a small definition of service. Whenever we talk about service, free service are totally excluded. Personal contract services are totally excluded, and services means anything which we make it available to the users. Anything, any service of any kind of description which we just make it available to the users, then that thing will be treated as a service. An intangible thing will be treated as a service. Then you have got certain examples on PRI, PROI, on determination whether that person is a PRI or a PROI, that can be tried. After that, going to section number 3 and section number 4. Section number 3 has got 4 pointers in it, okay, which are based on the examples that we have got in the textbook. Section number 3 talks about dealing in forex, which is the negative section, which says that no person shall deal otherwise through an unauthorized person in forex. Okay, if you want to deal, you can deal only through an authorized person. You can deal only as per the act, as per the rules, as per the regulations. You can do it only in that manner. Okay, there were 4 pointers here. First of all, if you want to deal in forex, you can deal it only through an authorized person. Example, if I want to purchase or sell forex, do it only through an authorized person. Okay, authorized person as defined in section number 10. Then after that, if you want to do any payment on behalf of a non-resident person, you cannot do that payment in India. Otherwise, that transaction becomes non-traceable. The transaction which is done by the non-resident, that becomes non-traceable. Next, if you want to receive any forex, you cannot receive it through any person except for an authorized person. Imagine someone telling me that I'll give you the fees in foreign currency. I cannot accept that as per section number 3. And last one, we should not be involved in any such financial transactions which are prohibited. Example was Hawala transaction. So these 4 points which is coming in section number 3, all these type of transactions are totally prohibited. We cannot deal in forex in these manners. If you want to do, it has to be done as per the act, as per the rules, as per the regulations, or only with the RBI permission. Otherwise, it cannot be done. Going on to the next section, that is section number 4, which talks about holding of forex. So first of all, they say that a PRI cannot hold foreign currency, foreign securities, immovable property outside India, except as provided in the act. By default, you cannot hold. If you want to hold, do it as per the act only. If you want to transfer, do it as per the law only. If you have earned something outside India, make sure that you realize and repatriate that amount in India. And after repatriating that amount, make sure that you surrender it. Make sure that you surrender it and you follow the provisions of section number 8. That is, you can hold forex only up to a certain limit. Rest of the amount has to be surrendered. So section number 3, section number 4 talks about dealing in forex and holding of forex. Right? Till here, your basic provisions get over in all respects. Now going on to the second part of the chapter out of total 5 parts. First part was your basics. Second part is going to be your current account transaction, which is super duper important as evident from here. Okay, now current account transactions. We have already seen the definition of current account and capital account transactions. So they are telling that if we want to enter into any current account transactions, we'll have to either draw forex or we'll have to sell forex, but that can be done only through an authorized person. And for this purpose, whenever we enter into any capital account transactions, we'll have to follow the capital account whenever we enter into current account transactions, we'll have to follow the current account regulations. Current account regulations are divided into 3 schedules. Okay, it talks about schedule 1, schedule 2, schedule 3. There are certain current account transactions which are prohibited. Okay, which are prohibited? First of all, any transaction which is given in schedule 1. Okay, any transaction given in schedule 1 of the current account regulations, those are totally prohibited. Plus any transaction which pertains to travel to Nepal and Bhutan, that is prohibited because INR works fine. And any other transaction which you are doing with a person who is residing in Nepal, Bhutan, or with an entity which is there in Nepal, Bhutan, even that will be prohibited unless you have taken a specific approval from the RBI. Okay, so basically schedule 1 transactions are prohibited and Nepal, Bhutan transactions are prohibited. Now let's try to understand which are some more transactions which come under schedule 1. So for this, we have to remember that there are total 8 transactions which are totally prohibited. Let's try to recollect those transactions. First one was, you cannot remit any amount out of lottery winnings from India. Similarly, you cannot remit any amount out of income from racing, riding, or any other casual income. You cannot remit any amount for purchase of lottery tickets, football pools, banned or prescribed magazines, etc. Then, if suppose you have entered into any transaction where you want to do equity investment in joint venture or your wholly owned subsidiary outside India, for that, if you have exported the goods in return to get that equity stake, you'll have to pay some cash. Instead of paying that cash, you exported the goods. So, no export commission can be paid on that. Export commission is not allowed because this is a direct transaction. Next, dividend paid under dividend balancing system, that is totally prohibited. Then export commission paid under rupee state credit route with Russia, that is totally prohibited. But in that there was an exception that you can pay commission up to 10% on the invoice value in case of export of tea or tobacco. Okay, 6 points done till here. Then after that, payment for callback services is totally prohibited. Then after that, the last point, any interest income that you have earned out of the non-resident special rupee scheme account, even that has to be kept in India only, that has to be utilized in India only, and that cannot be remitted outside India. So Nepal, Bhutan plus these 8 points, these were totally prohibited current account transactions as per the regulations. Right, now going on to the second schedule, which talks about the transactions where we are supposed to take the prior approval of the central government of India. Means if you want to enter into these transactions, take the prior approval of central government, for which we had done a story code. In that first one, I saw and I wanted to go for a cultural tour. Okay, so whenever we are doing any remittances for the cultural tour, we'll have to take the permission of Ministry of HRD, Department of Education and Culture. Okay, for that I saw an advertisement. So if I want to do any remittance for advertisement in foreign print media, if it is done by state government or by a public sector undertaking, and if that exceeds 10,000 USD, then since it is advertisement, we'll have to take the approval of Ministry of Finance, Department of Economic Affairs. And in that, suppose if you are doing it for tourism, for promotion of tourism, for like calling for foreign investments, etc., then no such approval would be required. So I wanted to go for a cultural tour, for which I saw an advertisement, but since the traveling was costly, so I decided to go by freight vessel. So if you are remitting any amount of freight, and if that is such a freight vessel which is chartered by the PSU, then in that case, means taken on hire by a PSU, then we'll have to take the approval of Ministry of Surface Transport, and in that specifically we'll have to take the approval of the chartering wing. Then for that purpose, I had to contact an ocean transport agent. Okay, so now when I am doing the payment of import through this ocean transport agent, and when it is done by the by government on CIF basis, again we'll have to take the approval of the same person, that is Ministry of Surface Transport Chartering Wing. For that purpose, I contacted an agent. I contacted an ocean transport agent. So now here, suppose if there are certain transport operators, multimodal transport operators, if they are making any payment to their agents who are situated outside India, this is a recurring transaction. Since this is a recurring transaction, we will require a registration certificate from the Director General of Shipping. Okay, now I started going on this freight vessel, then my container got detained. So I had to pay container detention charges more than the limits as prescribed by the DGS. For making that payment, I again had to take the approval from Ministry of Surface Transport, Director General of Shipping. Okay, and then after that, since my container got detained, I tried to send signals through transponders. So now if we are hiring any transponders can be hired either by TV channels or by internet service providers. If it is done by TV channels, then in that case we have to take the approval of Ministry of Information and Broadcasting. And if it is done by ISPs, that is internet service providers, then Ministry of Communication and Information Technology. This is the particular ministry from whom we are supposed to take the approval. Okay, so now I gave signals to transponders. Someone came to my rescue for helping me, and that person asked for prize money. Right? So now I had to remit. Now whenever there is any particular sports activity which is happening abroad, for its sponsorship, if I am remitting any prize money, then in that case I'll have to take the approval of Ministry of HRD, Department of Youth Affairs and Sports, but only if the amount involved exceeds 1 lakh USD, and this point is not applicable when it is sponsored by any sports association or a sports body. Then this point is not applicable, because for them it is very normal, the sponsorship is very normal. And then the last one, since someone came for my since someone came to my rescue, that person asked for my prize money, and I paid that particular prize money for my protection. So if I am remitting any amount as membership fees for my protection to this Protection and Indemnity Club as a member, then in that case I'll have to take the approval of Ministry of Finance, and in that insurance division's approval is required to be taken. These were all the transactions where we had to take the approval of the central government. In central government, we studied the respective ministries and the respective internal departments whose approval is to be taken there. Going on to the last schedule, that is schedule number 3, which talks about the transactions where we require the approval of the RBI. In that, first point that we are going to do is applicable for individuals. Okay, first point is applicable for individuals. Individuals are allowed a facility called as liberalized remittance scheme, where they can remit up to $250,000 US outside India without even taking the approval of RBI. For more than that, we'll have to take the prior approval of the RBI. Now, for illustrative purpose, they have given certain examples which falls under schedule 3. Suppose if you want to go for a private visit to any country except for Nepal and Bhutan, if you want to give any amount as gift or donation, if you want to pay any amount for medical expenses, if you are going outside India for employment, if you are settling outside India permanently, emigration, if you are going for studies abroad, or if you are remitting some amount for maintenance of close relatives abroad, if you are visiting outside India for business, conference and all those purposes, if you were going for medical and if you are paying any expenses for the attendant who is going along with you, all the or any other current account transactions, which were not falling in schedule 1 and schedule 2, those will come in schedule number 3. For all these things taken together, you can remit up to 2,50,000 US dollars in a particular financial year. Okay, but for three things, that is, if you are going for emigration, if you are going for medical treatment, or if you are going for studies abroad, even if the remittance is more than 2,50,000 USD, then you need not take the approval from the RBI. You can draw that amount from the authorized dealer by submitting that proof that you have taken from the other country, that yes, the remittance is going to be of more than, or the expenses are going to be of more than 2,50,000 USD. Okay, this 2,50,000 USD, just remember, it is for all these purposes taken together. Okay, it is applicable to a single individual for a particular financial year for all these things taken together. Okay, then after that, there is a small concept of a person. Who is a PRI but not a permanent PRI. If there is any particular person who he should not be a national of Pakistan. Apart from that, if there is any person who has come to India for the purpose of employment on a deputation for a particular assignment and his tenure does not exceed 3 years, then he is a PRI, agreed, but he is a temporary PRI, he is not a permanent PRI. So whatever amount of salary, etc. that he is earning here, he can remit it to his country after fulfilling all the statutory requirements of our country. That is PF contribution, taxes, deduction, etc. After that, he can remit that amount to his own country. Okay, then after that, one point that they have told us here is, just like we studied that this LRS of 2,50,000 is applicable only to individuals, then they make a statement here is, this can be availed, this LRS can be availed by any person other than individual also. Means other than individuals also, for these purposes they can avail the facility of liberalized remittance scheme. Then going on to the second part of schedule number 3, which talks about facilities for persons other than individuals. Facilities for other than individuals, and specific these 4 points have been given for them. First point is, if these people are going to remit any amount as donation for some specific purposes, for obtaining position in some reputed education institution, for contribution to some funds which are run by these educational institutions, or contribution to any such institute which is similar to our activity abroad. Means they are also involved in the same activity in which I am involved. Then in that case, I can remit up to a particular limit without RBI approval. And what is that limit? 1% of the foreign exchange earnings during the last 3 years, or 50 lakh USD, whichever is lower. Up to this, if you want to remit, then no approval of RBI is required. More than this, then RBI approval would be required. Or if you are paying some commission for sale of some property in India, sale of some residential flats or commercial plots in India, for that if you have availed the services of a foreign agent, then in that case for one transaction you can pay him commission up to 25,000 USD or 5% of the sale consideration, whichever is higher. Up to this, without approval, you can pay. If you have availed any consultancy services from outside India, and for that if you are remitting for infrastructure project, if it exceeds 1 lakh USD, means up to 1 crore USD, no approval is required. For more than 1 crore USD, you will have to take the approval of the RBI. And if it is for any other projects apart from infrastructure projects, then up to 10 lakh USD you can remit. For more than that, you will have to take the permission of the approval of the RBI. And the last one, if suppose there was a particular person who had invested in your company and he had borne your pre-incorporation expenses, and if you are reimbursing those pre-incorporation expenses, then up to 5% of the investment that he had brought, or 1 lakh US dollars, whichever is higher. Up to this you can remit. More than this, you will have to take the permission of the RBI. So these are the 4 specific points which are applicable to persons other than individual. For these 4 points, we have to follow this particular limit. For other things, these people can avail the facility of LRS, which we just studied now, that LRS is also applicable to persons other than individuals. Okay, now if there is any such transaction which was not specifically mentioned in the list of schedule number 3, then in that case that will fall under the term called as other current account transaction, that can be freely undertaken subjected to the LRS. Okay, if you want to do any remittances out of the RFC account, resident foreign currency account, then no approval is required. If you want to do any remittances from the EEFC account, then also no approvals of central government or RBI etc. will be required, that we have studied, except for 3 transactions. For 3 transactions, you still have to take the approvals. First one is for membership of Protection and Indemnity Club, for commission to agents that you are paying abroad, and for reimbursement of pre-incorporation expenses. For these three things, you still have to take the approval, and even though the remittance is done out of EEFC account, then also the approvals will be required. And last, if you're going outside India, then the expenses can be met out of international credit card. There is no restriction, because since it is an international credit card, it is functioned by the bank only, and it comes under the purview of RBI, so no issues in that. Going on to the next thing, that is your capital account transactions. That is the third part of the chapter. Capital account transactions are given under section number 6 and are mainly regulated by the regulations. For that purpose, for entering into any capital account transaction, you will require forex. For drawing that particular forex, you'll have to go through an authorized person only. There are certain transactions which involve debt instruments. For that, how the transaction is to be done, whether it is permissible or not, that will be notified by the RBI after consultation with the central government. There are certain transactions which does not involve debt instruments. Those will be notified by the provisions for that will be given by the central government after consultation with the RBI. If there is any PRI, I can still hold some properties outside India, some forex from outside India, for some foreign securities outside India. If I had acquired that when I was a PROI, or if I have inherited from a PROI, I can still hold it. And even vice versa thing is applicable. A PROI can also hold properties in India if he had acquired it when he was a PRI or when he had inherited from a PRI. That is absolutely allowed. If any person wants to open a branch offices in India, or any office or any place of business in India, make sure that you fulfill all the requirements. As notified by the RBI from time to time. These were the provisions which were given in section number 6. Okay, this was just the overview of capital account transaction that is given up here. Now, how do we classify these capital account transactions? Let's understand that. Capital account transactions are divided into main 3 categories. Okay, main 3 categories. First one is, let's take it up this way. First one, there are two transactions which are not at all prohibited, means which are freely allowed. Okay, what are those two transactions? First one is repayment of loan, that is amortization of loans. And next one is if there is any depreciation in the investment value, in the investment that we have done, and if we want to maintain a minimum level of investment, then the top up to the investments that we are doing, for that there is no approvals that is required. So these are the two transactions which can be freely undertaken. Then the second part is going to be that 5 transactions which are totally prohibited for a PROI. 5 transactions which are totally prohibited for a PROI. Investment in Nidhi companies, investment in chit fund, investment in agriculture or plantation activities, real estate business or construction of farmhouses specifically, and trading in TDRs. These 5 things are totally prohibited. But if there is any NRI, who is a PROI, then in that case, we can allow him to do investment in chit fund business if the transaction is done through the normal banking channels and if it is approved by the RBI. That is one thing. And yes, apart from that, real estate business or construction here just excludes the farmhouses. Means if we talk about residential, commercial, roads, bridges, etc., then those are allowed. Means we can accept investments from PROI in those fields. So these are the 5 transactions which were totally prohibited. And the last one is the transactions which are which will be permitted but subjected to the regulations. Means for that we'll have to go and check those lengthy regulations, whether it is allowed, not allowed. If allowed, then subject to what terms and conditions it is allowed. Those transactions are further divided into 2 parts. First one is the transactions which are done by PRI, which is given in Schedule 1, and the second part is going to be the transactions which are done by the PROI, which is given in Schedule 2. You need not do this list. Because here all the other transactions are going to come, which could not come in the which could not come in the free transaction list or the restricted transaction list, right? So we can divide the capital account transaction into three parts. First one, freely allowed transactions, then the prohibited transactions, and then the transactions which will be permitted subjected to the regulations, right? Now, another thing that they are trying to tell us here is, first of all, if you want to enter into any capital account transactions, then in that case, we can do it. For that, forex can be done only through an authorized person. That is one thing. Another thing that they are telling, facility given to individuals only. Remember, in individuals, we had told them in current account transactions, they were eligible for LRS of 2,50,000 USD. These individuals can even do the capital account transactions. They can even do the capital account transactions out of the limit which is available from that same LRS. So in short, to people like us, to people like individuals, we have 2,50,000 USD available with us. Out of that, we can meet our current account transactions also, the schedule 3.1 transactions, and even the capital account transactions that can be met out of this. Then after that, Government of India had come up with a notification on 7th March 2019 that any transactions, any capital account transactions with the Korea, with North Korea is totally prohibited. You cannot do. If you have already entered into those transactions, please liquidate it. And further, you cannot enter into any new transactions. If you still want to continue with those transactions, take the approval of the RBI. Right? And you have to liquidate those transactions within 180 days from the date of the notification. This is what we had studied there. Then a specific answer, altogether different answer which had come up here in between. Suppose if there is a PROI, who is an Indian citizen or who is a person of Indian origin who has some immovable property situated in India, can he sell it off? The answer is yes, he can sell it off, provided it is not your agriculture, plantation, farmhouse, etc. He can sell it off, but there are certain norms which are given for it. What are the norms? First thing that you have to check is whether it was acquired as per the foreign law, as per the forex law or not. Means it should be legally acquired. That is the first condition. Second one is whenever you are repatriating the amount, the maximum amount that you can repatriate is the amount that you had brought in India to purchase this particular property. More than that, you cannot repatriate. And the repatriation will be restricted to maximum 2 residential properties. These were certain conditions. Which was applicable on the PROI when he is selling some immovable property here in India. And the last note which was coming up there is, suppose if we have availed any external commercial borrowings from outside India and we have given some asset as security, as mortgage to that particular person, then if I fail to do the repayment of that loan, then my authorized dealer can hand over this security which can be sold by that foreign bank because I have failed to do the repayment of the loan. Till here, basically, your capital account transactions, get over in all the respects. Right? Going on to the next part, that is your export transactions. Export transactions, again, which are covered in section number 7. Current account transaction, section number 5. Capital account transaction, section number 6. Export transaction, section number 7. Section number 7 basically just gives us an overview of the export transaction. It says that whenever any person is exporting certain goods or software or services, then in that case, first of all, we have to give a declaration to the RBI about the exact actual value of realization that we are going to get. Or if we do not have the actual value available with us, then we can give the estimated value that we are going to realize from this. We have to also make sure that we receive the consideration without any delay, and we have to show the effort that we are taking for realizing the amount on time. We have to show this to the RBI that we have taken so and so steps for early realization of money. Suppose if we are exporting any such services to which any declaration is not applicable, then too, okay, no problem, declaration form is not applicable, but then too we have to make sure that the money is realized and repatriated to India on time. Okay, now this was given in section number 7, but export provisions are mainly regulated by the export regulations, FEM regulations for export. Let's see what does these regulations tell to us. Now, if we want to export any goods or software to any place outside India except for Nepal and Bhutan, submit a declaration which has to be supported by some evidences. that declaration should first of all contain about the value, either the exact value of the amount that we are going to receive or the expected value of the amount that we are going to receive at the time of export. Suppose if we are exporting the services to which none of the declaration form is applicable, no problem, but make sure you can export without declaration, but make sure that you are realizing and repatriating the amount to India. And after repatriation also, means after realization also, you have to make sure that you disclose it to the RBI, that yes, or to the authorized person, that see, so and so amount has been received against so and so export that we had done. So till now they were focusing mainly on the declaration that we have to submit to the authorities, in which we declare the value of the goods that we have exported. Now there are certain cases for which declaration is not at all required. Okay, these are mainly those cases where we are sending some goods outside India for which there is no consideration involved. Example, if we are sending something as free samples, or if we are sending some publicity materials, if we are sending our personal assets, personal effects that we are taking outside India when we are going outside India for maybe as a tourist or something like that. If we are sending something outside India for repairs, if we are sending something outside India for trial run, if we are re-exporting something outside India which we had say for example, if we had imported something earlier, we repaired it in India and now we are re-exporting to our customer outside India. Here there is no consideration involved. If there is no consideration involved, then there will be no declaration that will be required, no proper declaration that will be required. One very important point that is applicable here is, if you are sending something as a gift outside India, then up to 5 lakh rupees, if the gift value does not exceed rupees 5 lakhs, then no declaration is required. Just a self-declaration is required that the value does not exceed rupees 5 lakhs. And if it exceeds rupees 5 lakhs, then a proper declaration in that regards would be required, even though it is a case of gift, even though no consideration is involved. If it exceeds rupees 5 lakhs, then the declaration would be required. Then after that, there is some formality. There is some formality which is applicable. What is that formality? Now, whenever you are exporting some goods, you have to furnish declaration in form EDF, which will be in duplicate to the Commissioner of Customs. Original will go to the Commissioner of Customs. He will forward it to the nearest office of RBI after authentication. Duplicate copy will come back to me, that is to the customer. I will have to give it to the authorized dealer ahead. In case of software, we are going to use a form called as Softex, which is going to be submitted in triplicate to the Ministry of Information Technology. One copy will be retained by that same person. Another copy will, after authentication, will be given to the RBI, and the third copy is going to give, means the left out copy is going to be given to the customer so that he gives it to the authorized person. This is how the declaration works there. Along with the declaration, we have to give an evidence that we are a PRI, we have a place of business in India, and we have to disclose the values, that how much is the export value and how did we arrive at that export value, means the valuation of the invoice, how that has been done. All these things have to be attached along with the declaration. Once this is done, once this is submitted, once all these things happen, after that we can do the export. Now after export, the most important thing comes up here is within how much time the money should be realized. So export proceeds normally should be realized within a period of 9 months from the date of export, or any other extended period as extended by the RBI or the authorized dealer. If you are exporting it to the warehouse where you are going to stock the goods and then sell, then in that case the money should be realized within a period of 15 months from the date of shipment, or any extended period as may be notified by RBI from time to time. If the goods are exported by SEZ, EOU, a biotechnology park, or etc. by these people, then also it is normal only, that is the money should be realized within 9 months from the date of export. And suppose if you are exporting the software which is in link form, which is in non-physical form, then the date of export is going to be the date of invoice. From that day, within so and so time, we'll have to realize the money from the other country. Right now, when we use this form EDF and when we use this form Softex, etc., then in those cases, remember, one copy we were going and submitting it to the authorized dealer. So we are supposed to go and submit it to the authorized dealer within 21 days from the date of export, means after export within a period of 21 days. And in case of software, within 21 days from the date of certification by the Ministry of IT. From that day, we have to go and submit it to the authorized dealer, so that the authorized dealer knows, okay, export has been done and now we are going to realize the proceeds out of it. Okay, we have to make sure that we receive full consideration. There is no deduction in the proceeds that we are receiving. The proceeds are received in the prescribed manner. If cash, then cash. If shares, then shares. Whatever was the specified manner, in that manner we are going to receive it. And the payment is not delayed beyond the time period which was given in the regulations. This we have to make sure. And if there is any mistake in that regard, then that will be treated as a contravention until unless you have taken the RBI's permission. If you have taken RBI's permission, well and good. If not, then that is treated as a contravention. Now, suppose if there is a delay in receipt of payment, then in that case there are two ways. First, check whether the goods have been sold by that party or not. If it is sold, then please try to recover that money. Okay, RBI will issue you the directions to recover that money from the other party. And suppose if the goods have not been sold by the other party in his country, then maybe you can call back. You can call back the goods back in your country and you can sell it off here. Okay, these are the two ways. These are the two things that you can use. Suppose if you are not able to receive the export proceeds. Achha. Then the next thing which talks about the project exports. Okay, which talks about the advance payment against exports. Suppose if you have received some payment in advance, then it becomes your moral liability that you have to export the goods within a period of 1 year from the date of such receipt. If agreement provides for a longer period, then yes, you can export it with later also, but one year or the longer period, whichever is higher, within that much time you have to export the goods mandatorily. If there is any delay in that, then you will be liable to pay. You may be liable to pay interest at LIBOR plus 100 basis points. And the documents, whenever you have received the advance, first you would have received the money, then you would have exported the goods. So the document should be routed through the same authorized dealer through whom you had received the payment. Means the authorized dealer should be the same person through whom you have received the payment and to whom now you are going to go and submit all the export documents. The person should be same, then only you will be able to nullify that particular transaction. Okay. Achha, suppose if you are in no mood to export the goods, or if the other party says that already a delay has happened, please don't export the goods, give me my refund. Then yes, you'll have to give your refund. If there is a delay, then you might have to pay the interest. All these things can be done only after taking. RBI's approval mandatorily. By default, suo moto, you cannot proceed for that. Okay, and the last small concept which comes up about the project exports, where they say that there are certain export of services which where we get ourselves involved in turnkey power projects or civil construction projects or huge projects where the payment is going to be received on deferred terms. So before entering into such type of project, make sure that you take the approval from the EXIM, from the Export Import Bank of India, or from the authorized dealer. And in such cases, the banks will give guarantee on your behalf, the performance guarantee on your behalf, which can be fund based or which can be non-fund based. That yes, my Indian person will perform his duties, and I give the guarantee for that. That will be given by the authorized dealer here in India. Then the next two sections, which is forming part of, this is altogether different part. Section number 8 and 9 simply says that if you have earned any particular forex, then you have to first of all realize it and repatriate to your country, and then you can hold it only up to a certain limit. Okay, now for this I had already made a summary. Suppose if you are a normal, suppose if you are a normal person, you are not an authorized dealer, then in that case, coins you can hold up to any limit. Currency you can hold up to $2,000. In case of authorized dealer, there is no such limit prescribed, so you come under the purview of RBI. If you are such a person who has acquired forex before 8th July 1947, you can still hold it with RBI's permission. You can give it to someone in inheritance, even that person can hold it with RBI's permission. These are the provisions that you have studied in section number 8 and section number 9. In this, specifically $2,000 is super duper important. Okay, and most important thing is, suppose if you have gone for travel outside India, if you have gone for business purpose outside India, you are left with some unspent amount, or if you have earned some amount from outside India, make sure you bring it back to India and you surrender it, and you can hold up to $2,000 at any point of time. Okay, this was all about till section number 9, and till here the 4 parts of your chapter get over. Now going on to the last part, that is your miscellaneous provisions, starting from section number 10. In miscellaneous provisions, the first few sections are going to talk about authorized person. First of all, section number 10 says that who is an authorized person. So authorized dealers, banks, offshore banking units, money changers, etc. come under the purview of authorized person. If you want to become an authorized person, you will have to make an application to the RBI. RBI will impose some terms and conditions on you about dealing in forex, etc. And then you can be treated as an authorized person. If suppose you have involved yourself into any contravention, or if it is in public interest to do so, then in that case RBI, after giving you a reasonable opportunity of being heard, RBI can even revoke your authorization. Even that can be done. And one thing that the authorized person can do for securing himself is, before he enters into any transaction on behalf of the customers, he'll take a declaration. Okay, he'll take a declaration from the customer that this transaction does not involve any type of contravention. Okay, this was all about your authorized person, that who is an authorized person. Now, this authorized person comes under the purview of RBI. So, RBI has got the powers to issue directions to this particular person under section 11. How to do a transaction, what transactions are not to be done, what are the, it can even issue some information, it can even furnish some information to the RBI, and it can even call for some information from the authorized person. For these things, RBI is empowered to issue directions. If the directions are not listened to, or if the authorized person does not, listen to the instructions or directions which is given by, or comply with the directions which is given by the RBI, then penalty is going to be applicable, which is going to come in section number 11 itself. Okay, now RBI also has the power to do inspection. Okay, suppose if we want to verify the information which was submitted by the authorized person, is it correct or not? For that purpose, we can do inspection. If we have got incomplete information, to get full information, we can do the inspection, or simply to secure the compliances with the provision. For this purpose also, we can do the inspection. If we are doing this particular inspection, then it is the duty of the authorized person to provide us the necessary information, to assist us, to cooperate with us. This is their duty, which is given in section number 12. Then going on to the contravention and the penalties, which is again very, very simple. If suppose the authorized person contravenes the directions, or if it does not file the returns with the RBI, then penalty up to 10,000 will be applicable. In case of continuing offence, penalty up to rupees 2,000 per day can be applicable. Then there comes the general contravention. If you have contravened any provisions of the act, rules, regulations, etc., and if it is quantifiable, then up to 3 times the amount that is involved. If not quantifiable, then up to rupees 2 lakhs will be applicable. In case of continuing offence, additional penalty up to rupees 5,000 per day can be applicable. If you fail to make the if you fail to pay the penalty, and if the penalty amount exceeds rupees 1 crore, then imprisonment up to 3 years can be applicable. If the penalty amount does not exceed 1 crore, then imprisonment up to 6 months can be applicable then. Suppose if you are holding any forex, foreign security, or immovable property outside India exceeding certain limits, then they say that it is an offence. Then additional punishment will be applicable, that is imprisonment up to 5 years, and fine can be applicable on you. Okay, powers of AA. Now, whenever this penalty comes into picture, there is going to be a person called as adjudicating authority who will get involved. This adjudicating authority have got the powers. These powers will again get repeated in section number 16. Powers of the adjudicating authority involve to impose penalty, that is one thing. Then to do confiscation in India so that the property vests in the central government, and then to order to bring back the forex in India or to retain it outside India as per the directions made in this particular behalf. All these powers are there with the adjudicating authority. He can exercise all these powers. Going back to section number 14, one thing is very, very important. Whenever a penalty is imposed on us by the adjudicating authority, we are supposed to pay that penalty within a period of 90 days from the day when we receive the notice. Okay, if we do not pay the penalty, then that imprisonment is going to be applicable. And if we do not pay the penalty within 90 days, then the officers can take action against me, and then that can lead to arrest. Okay, generally for arrest, before arresting, they give us a show cause notice. Okay, and only then the arrest order, etc. can be passed. But if they are of the opinion, if the authorities are of the opinion that I am acting dishonestly, I have money to pay the penalty, still I am not paying it, and I can abscond India, then in that case, you need not even issue the show cause notice, and you can directly pass an arrest order in that regards. Okay, now during these 90 days, the 90 days time period that was given to me for payment of penalty, during these days also the ED can try to recover, the penalty from me. Okay, he will take the action after a period of 90 days, but recovery can start during these 90 days as it is done, as if the recovery of income tax is being done there. In this way, the recovery can be done by the enforcement directorate. Okay, now suppose, say for example, if the penalty has been imposed on me, and yes, I agree that there is a mistake that has happened by me, but I still have an option that I can go to the compounding authority. And I can request for compounding of that particular contravention. And once I make an application to the compounding authority has to do the compounding within a period of 180 days. And whatever is the order passed by the compounding authority, that will be full and final. Okay, who is going to be this compounding authority? So the ED officers, enforcement directorate officers, or the RBI officers can be appointed as compounding authorities, and yes, they have to make sure that they do this compounding within a period of 180 days. Right? Then the answer that is getting repeated here is power of the adjudicating authority, the same three powers that we studied. Adjudicating authority is first of all a CG officer, or is appointed by the central government. Then he has the power to adjudicate the penalty. He has the power to do confiscation in India. He has the power to tell us to bring everything from outside India or to retain it there. But before he does this, he has to make sure that he gives us a reasonable opportunity of being heard. Okay, principle of natural justice is to be followed. Okay, then section number 14 and 15 we have already done. That is, within how much time are we supposed to pay the penalty, and compounding has to be done within how much time. Okay, now let's go to the other part, that is adjudicating authority comes into picture. Someone has to go and file the complaint with the adjudicating authority. That is, the ground level officers or the authorized officers can go and file the complaint to the adjudicating authority, and adjudicating authority has to take up that complaint, has to deal with that complaint within a period of 1 year. And then the AA will pass the necessary orders. If we are aggrieved, if we say that no such contravention has not at all happened, then in that case we can choose the appeal method. First level of appeal will be before the Special Director of Appeals within 45 days. Condonation allowed if there is any sufficient cause. Next level of appeal is going to be before the Appellate Tribunal, again within 45 days. Nothing mentioned about the condonation, and AT has to try to dispose of the appeal within a period of 180 days. If there is a delay, then record the reasons for it. Last level of appeal is going to be before the High Court, but only on question of law. That is within 60 plus 60 days we can go. Within 60 days we can go, and the delay can be condoned by a maximum period of 60 days. And we cannot tell the High Court that please dispose of the case within so and so time period. Then going on to the last miscellaneous provisions, section number 36, 37, 38, which talks about the enforcement officers, which is very, very simple. First of all, this enforcement directorate is constituted by the central government. It is going to have such number of required officers to perform the duties under FEMA. Who are the types of officers here? So you have the director, you have the additional director, you have the special director, you have the deputy director, you have the assistant director, and then you have the other officers below the assistant directors. All these people will have to discharge their powers and functions as told by the central government. Okay, all these people till the rank of assistant director, under section number 37, they have also got the powers to do investigation, and for the purpose of doing investigation, they have also got the powers to do search and seizure. Suppose if you do not have enforcement directorates, then in that case you can take the help of other officers also. CG officer, SG officer, customs officer, excise officer, police officer, who can act as enforcement officers, and they have got all the powers as vested in income tax authorities, just like the powers are given to them under the Income Tax Act 1961. Then after that, suppose if search and seizure happens in your premises, then whatever is found in your premises, it is presumed that it belongs to you. Any documents, any assets, everything that is found there, it belongs to you until unless proved to the contrary, and this can be used as evidence against us in the court of law. Okay, then central government has the power that it can suspend either the entire act or some provisions of the act whenever it thinks that it is necessary to do so in public interest. It can, put some restrictions, it can remove some restrictions, that can be done. And if it wants to reverse it now, suppose if it had put some restrictions, now it wants to remove it, then for these purposes it will have to pass a notification, and that notification will come into effect only after it has been laid down before both the houses of parliament. Okay, in the hierarchy, just like RBI was controlling the authorized person, similarly RBI will be controlled by the central government. Means central government has the powers. Central government has the powers to issue directions to the RBI, and it is going to be mandatory for the RBI. It is going to be mandatory for the RBI to comply with those directions. And the last 3 pointers, first one is contravention by the companies. Whenever any offense has been committed by the company, then the person in charge would be guilty of that and he would be liable for that. But if he proves that he had exercised due diligence, the contravention took place without his knowledge, or he had not consented to this particular offense, then he can be released once the authorities are satisfied with that. In case any person against whom any prosecution was going or on any case was going on, if that person passes away or that person becomes insolvent, then the case will be continued against the legal representative or against the official assignee or the official receiver, and the money can be recovered from them only to the extent of the estate which is there with the legal representative or the official assignee or receiver. And the last one, that is bar legal proceedings, which says that if there is any mistake which has been committed by the central government, by the RBI or any such legal authorities, and if they say that this was done in good faith, then in that case we cannot proceed against them. No legal suit or no legal proceedings can be filed against them. And with this, we are done with FEMA. Were you able to recollect the provisions? Yes or no?